Hold on one second. Just get a couple of things squared away. All right, good. Everybody else here loud and clear? All right. So welcome, everyone. My name is Fausto from Cyber Trading, and you are here on our day 2 of the Cyber Expo. Thanks for being here. We had a lot of great speakers. Well, guess what? We got a great lineup going on to this week also. Going on to today. So we got a list of great speakers, and I'm going to kick it off with all of you and show you what's going on. We'll look at the markets. We're going to have some fun. We got a lot of great gifts we're going to give away. Also, I'm going to get everyone registered. We're giving away we're working side by side with Mumu of giving away $1 million in trading. We're doing a trading competition. So all of you guys are invited, only Canadians, well only for Canada people doing it. I'll send you the link in a little bit for everyone to get registered, and then we'll go from there. So let me bring up my presentation here. Just give me a second. We got a couple things to update here. There we go. All right, let me move this over and let me bring this over here. All right, perfect. All right, can everyone see my screen okay? Just give me a chat back if everybody can see it fine. All right, good. Thanks a lot, Mark. Frenchie, very good. All right, so today's topic, everyone, we're going to talk about is why most people lose money, especially beginners. I mean, like how do we basically avoid it? What's making that mistake? What are they doing, and how to prevent it from happening again? Well, I'd like to start off and do something a little bit different than I usually do. I'd like to tell you a little bit about the history of who I am, how I got here, and why I love teaching people. Because, there are so many of you here right now that really want to, you're just starving for education, or you're getting yourself in trouble. You're making these mistakes. I've been there. I've done that. I've trained over several 100,000 people. I've been in front of in audiences. I've trained tens of thousands of people over the years. I've gone through my program, and there's not a day that goes by that I don't love what I do, because I personally say it's one of the greatest jobs in the world. It really is. You are your own boss. You can come and go whenever you please. You can do this anywhere in the world. You just got to know how to play the game. And a lot of people just don't take the time to do it, especially, having you wonderful people here today, because you know that you need to learn how to do it. And that's what I want to do, because I don't want you to be those beginners. I don't want you to be somebody that tried it and will never do it again because you had a bad taste in your mouth. It's not, you just got to know how to what you're looking at. So before I do that, let me just a quick little disclaimer, just let everybody know that I'm not going to make any promises and guarantees. This works for everybody. There is a very high risk in trading. Don't go out there and risk what you can't afford to lose. And, most importantly, trade responsibly. All right. Now, first of all, I'd like to thank all my presenters that were here. We got a great lineup going on for today. We got 5 more speakers that are coming in. So if you missed day 1, that's okay. And our keynote speaker, Tom Sosnoff, which, by the way, I thought was a great keynote speaking. If you missed it, don't worry. It's been recorded. We'll get it up for you. As long as you're registered, you'll be able to access it. All right. Now, regarding about the promotion that we're doing here at Cyber Trade University with Mumu, they are giving away $1 million. This only applies to Canadians. So if you do sign up, and let me just give you guys the link while we're here. Where are we? Oh, there we are. If you guys could just go there, and let me just put the link in there for you. Here's the page. All you got to do is put your name, email, and phone number to get registered. And with that, fellow traders, if you do sign up, you will get 1 free month with Cyber Trading, where we'll teach you how to be competitive and do it and have access to our trading room. And that is a $200 value right there. So if you sign up through us personally, we will be giving you that bonus. All right. So if you guys can do it really quick, just click on it, name, email, phone number, and just check the box. All right. So we'll post that. We're going to be posting that all day long. Now, this is what we're basically going to cover for everyone here. We're going to talk about how to follow, the big orders, the money flow. I'm going to show you the tools that we use as professional traders, when to trade, when not to trade, how we find these stocks, and basically, risk management. Listen, I think the biggest issue people have is, there's some really good educators out there, and there's almost some really bad ones out there. But the thing is, we probably all agree, even the bad ones and the good ones, it really does have about risk management and money management. We're going to talk a lot about that at the end. All right. So let's go to the live markets. Let's see what's going on, because there is a lot going on out here. We had a couple of good movers. Let me just bring up our trading floor right here, which, by the way, these are the things that all of you guys are going to get access to being here at Cyber Trade University. So just going to bring this up over here. So this is our trading floor. And right now we're showcasing the Moomoo platform, which is a great platform because you get level 3 with it, TotalView. They're looking at SpaceX, but the thing I want to kind of show you is this. Here's our watch list that we had this morning. And there are a lot of stocks that were moving that are in that watch list. We post everything and so on. These are all the traders down here at the bottom. Hold on, let me get my pointer so you guys can follow along. I feel like I'm moving around and you guys are not seeing what I'm doing. There we go. All right. Hopefully that works. All right. There's my little dot. So here's our little watch list, and here's all our traders. About 200 traders in there right now. This is our own proprietary trading. They're looking at the stock space right now. It's about 16%. So I'm going to move this over and bring up these stocks right here. So looking at space. And you could see space. We were trading space. I don't know if you guys saw this earlier, but it ran from $2.50 to $9. It was a great short squeeze. Came back down to $4. Been going up really, really nicely. You can see this morning, it's just been on a rocket, a rocket, right? SpaceX is going public tomorrow. So a lot of these stocks are doing pretty well because of it. So you could see the stock goes from 480 to about 550. If you just bought it at 5 and sold it at 550, you made 50 cents, $5,000 investment. It's about $100,000 salary right there. Not bad for a day's pay. So that one's doing pretty well, kind of like that. And then, listen, there are a lot of stocks out there like this one here, PPCB. This one was on the watch list, $3 to $6 right out of the gate. Could have made a lot more on that one. EDHL, that one popped and obviously came back down. That one, if you watch me in the morning, I was telling people to be very, very careful of it. But my question, because it's, the spread and everything else. But my question to ask, I have a question to ask everybody. What makes these stocks go up and go down? Why, what's driving this stock to go down now? And what's driving this stock to go up? Could everyone answer that question? Let me see how all of you answer that. Brenda, you're right. Trey, you're right. Everyone else? Could everybody write just B and S? Buyers and sellers. Just so I know you're paying attention. James, Mark, good. I'm going to be Ed. I didn't hear from you. All right. Buyers and sellers. Now, think about this for a second. How much smarter and better trading decisions would you have made if you knew where the buyers and sellers are on the stock, right? That's basically what drives it. It's not, let's go check and see what is the stochastic and the momentum and the RSI and the Bollinger Band and what else is a pretty good one? The MACD. Oh, yeah, got to have the MACD. I mean, when you look at this, is this really help you become a better trader? Or would you rather go see just show me the right side of the chart? Where are the orders? And that's what I want to kind of show you, because this is confusing. What's not confusing is orders. Now, let me tell you a little history about me, because, I want to understand that I was you when I first started. Okay. I'm 54 now, but when I started, I was 22 years old. And, I live here in New York. And I'm first generation Italian. Parents came here with $20 in their pocket. never asked for anything, no entitlements, nothing. They were very hard workers. And, being from the south of Italy, they were, they love gardening and stuff. So my dad owned a landscaping business. And he built a very successful business doing it. And I thought that I was going to continue, and carry over and take over the family business, this and that. My dad's like, I don't want you to push lawnmowers. We're here in New York. This is the financial capital of the world. You go out there and work, do something that you can make a lot of money, that you're not going to get your hands dirty, but you have a lot of control. Well, basically what I did is I started learning how to trade. And what I found out, which I think a lot of you found out too, is that I lost a lot of money, okay? Because I didn't know what I was doing, right? I mean, think about it. You hire somebody. I mean, a lot of you hire people, right? Anyone owns a business. You got to train the person. Or let's say you're opening up a business. You just don't, I want to open up a restaurant because I love the restaurant business. You got to get in, you got to work for somebody. You got to know what they have to go through, deal with customer service, ordering, chefs, deal with employees, customers. There's a lot that's involved. And you might like, oh my God, I'd rather just cook for myself. But I knew that there was a way to be very successful at it. And, when I started, there was about 1,000 of us. So I took a job as a trader. And I went to work for somebody, and I found out that on the first day on the job, and this is what you guys are going to learn. What I found out that anybody who does not have the technology to trade, what we use as market makers, you have really a 95% chance of losing everything. You're basically trading blind. Okay. I mean, that's where it comes down to it. So I want to teach you those tools, what we use. Now, when I started, just to let you know, I wanted to help people too, because I had family members, they all want to be in the market, and they go out there and they're like, and they just don't even know what they're doing. They don't even know what a buy and sell is. They don't even know what a bid and offer is. They don't even know what, they heard about this thing called a chart, and indicators. And, I just figure out like, you know what, it made me appreciate that if I could help them to be very successful, because there's nothing, that's basically what the United States is known for. We built these financial capital markets, and we're all going to be in it, if you got a pension, whatever, but there's just so many people lose money on it. So I started Cyber Trading University 35 years ago because I became a very good trader, and I never want anybody to go through what I went through. Now, over the years, I competed against every school in the industry. I beat everyone in the industry. And also, I also wrote a book. Now, what I'd like to do before we move forward, I want to give you the book for free. Okay. So what I want you guys to do right now is turn on your phone, scan that QR code, and I'll send it to you now immediately. Or what you could do is, I just posted my email address up there. What you could do is open up your inbox. Just do it right now while we're here. Fausto@ctutrading.com. And in the subject line, just write book. And then add just your first name and last name so I know how to call you. Because some people, there's Trader 123. I don't even know who you are. So, I like to call you from your real name. And you're gonna love the book because it's basically the topic. It's a #1 bestseller, and it's how to beat market makers at their own game. So if you want to learn how to beat the traders, you don't got to beat them. You just got to trade with them. It's a fast read. It's a color book. It was published by Wiley, one of the most recognized publishing companies. They came up to me and they says, Fausto, we need a good day trading book. I know you're, a great trader. We see you do presentations all the time. And, honestly, I really didn't want to write a book. I don't know if anybody wrote a book. It's a pain in the ass to write a book. But now I'm an author, and I actually appreciate it. And I think you guys are really going to enjoy it. So everything I talk about today, you're going to see it's going to be in the book. And it's a fast read. You'll probably take you about 2 hours, 3 hours to read it. I did that on purpose because I want you guys, because you'll probably end up reading about 2-3 times. All right. I've also been featured at Nasdaq. And let me tell you about Nasdaq. The tools that we're going to show you is basically the exchanges want you to trade on. And how I got involved is that I was one of the developers who helped build these things that are called ECNs. And I don't want to go through the whole thing about, this big billion-dollar lawsuit that happened with brokerage firms lying about trade, stuff like that. You can always read that online. It's in my book. But Nasdaq decided that back in the day, if you ever watch the New York Stock Exchange, there's nobody there anymore. It's all electronic. And the reason why is because they wanted to get rid of the market. They didn't like the idea that it was being monopolized by these specialists, these traders, everything else. So if you realize that you now have a seat on the exchange. Remember back in the old days, I know we got some old people here. Remember back in the old days, you had to call your broker and then you say you wanted to sell and you keep calling him and never called you back. And you're like, oh yeah, we finally sold it. And you end up selling it at the worst price of the day. Or maybe you want to buy a stock. You always buy at the most expensive part of the day. You always want to learn that I could go on and on, tell you why they do that and how they did that. But at the end of the day, they wanted to get rid of these traders and they wanted to give it to you. So I've done many presentations for Nasdaq where we're going to teach you how to trade on the exchange. So you don't have to worry about dealing with those brokers or dealing with those online brokers. Like, why am I getting trades? Why am I not getting that trade? Why did I get executed at this price? Why couldn't I get a better price? So definitely get a chance to look at that. So regarding about the trading, I feel that everyone's a beginner, no matter how long you've been doing this for. Okay. And, I remember I've been through COVID. I've been through the financial crisis. I've been through, the internet bubble. You said it, I was there. And if you could survive one of those, then you could definitely survive another one. And let me tell you something, there's one going to come eventually. Okay. You just got to be prepared for it. And because this is what ends up happening. You get people that buy stocks, they chase them, and then they sell them at the bottom. I mean, does that sound familiar? Do you guys do that? And this is why 9 out of 10 traders fail. So we need to fix that problem today. Today, in the next 30 minutes, I am going to make you a 50% better trader. And then if you come to my trading room, I'm going to make you probably a 70 to 80% better trader. Okay. Now, the way it works and the way trading is this. Beginner traders, they all want to try it. They hear the things, maybe you got it, maybe you want to leave your job, maybe you're retiring, and we all want to do well. And the worst thing that could happen to you is that you make money in the beginning. That's the worst thing. When I go into a trade, I don't go into a trade knowing that I'm going to make money. I go into a trade knowing I'm going to lose it. And the purpose of losing is a good thing, so you don't do it again. So you always got to know that you hope for the best, but you got to prepare for the worst. Most traders that start out just let it run. Oh, it's running, I'll buy this. Oh, it's going down, let me sell that. You're always driving with traffic. You need to learn how to drive against traffic. And that's what kills people. They're chasing stocks. They don't have a game plan. They're basically trading blind. Now, just out of curiosity, if everybody could just answer this question, give me an A, B, or C. What do you feel like you're doing most? Are you chasing on top? Are you holding your losers too long? Or you're bought right after the stock dumped? Just curious what most people are going to check. By the way, we can see what everybody has there. Mark feels like he's holding his losers too long. James saying he's chasing to the top. Wow, this is very interesting. Getting a lot of people say they're holding their losers too long. And you want to know what? That is the 80% of the failure rate of the industry. And I'm glad you guys are admitting it because, basically it should probably be all the above. I should have one all the above, but I don't want to do that because I know most people would say that. But it's nice to see where you can see a lot of you are holding your losers too long. And let me tell you why you're doing that. Number one, you're probably doing that because you're trading too many shares. Okay, that's number one. And number two, you don't know when a stock is breaking support levels because you're not seeing if those buyers are getting filled. And that's the difference between the chart on the left versus the image on the right. I am going to show you where all these orders are. You're going to know why the stock is breaking support levels. You're going to know why it's going to continue to go lower. You're going to see selling pressure. And that's what we need to fix. So let me break it down for you how the pros really do it. What we're going to look at is we're going to talk about something called following the big money, which we call here at CyberTrade University iceberg orders. Now, an iceberg order is a big block order. Now, I think you just all said it yourself. You all agree that's the way stocks go up and go down is buyers and sellers, right? Well, how many of you here know where the buyer is in the stock that you're in, the biggest buyers, the 70% of the buyers, and where do you know where the big sellers are? Just give me a yes or no. Does anyone here following the money know where the orders are? Todd says no. Mark says yes. Uchina says no. Now, think about that answer for a second. How much smarter and better trading decisions would you have made if you knew that you had a big buyer on the bid and you should have bought it there? And how better of a trader if you had a winner, you making money in a stock, knowing that you should have sold, at this resistance because you had a huge seller out there. Well, that's where things are going to change. Now, I want to start off talking about a very important tool, which I'm going to tell all of you where to get it. It's called Nasdaq TotalView. Now, I want to do a quick poll, okay? I call it level 3. And could everyone here just tell me, do you guys have, level 3? By the way, if you're a student of CyberTrade University or you watched my video before, please don't answer this question. I want to skew the numbers, okay? All right. So as you guys are filling that out, let me explain what we're looking at. This tool is offered to everybody. This is not the Fausto indicator tool. This is directly from the exchange. Now, I want you to keep in mind, imagine that you're in the business of trading and you had access to the floor of the New York Stock Exchange where Goldman Sachs, Merrill Lynch, Sherwin Lehman, everybody in the world that has to place their orders down there, you now officially have this technology, okay? So we're looking at Microsoft, and you're going to basically see every single buyer in market Microsoft and who wants to pay the most, all the way down who wants to pay the least. You're seeing every seller out there in Microsoft who wants to sell their shares the least amount of money and who wants to sell their shares for the most amount of money. So not only that, you're seeing the price, the amount of shares at that price, and how many orders make up that share. Now, when I want to end this poll, I'm going to share it with you. I want you guys to look at that number. It's over almost 94% of you do not have this technology. Now, like I told you, what you're about to see is going to be extremely disturbing because you're going to be like, how in the hell did someone ever told me this before? How did I even trade without this? And let me tell you something. If you're going to trade and you don't trade without this, you're basically trading blind. Okay? So let me clear this out. And let me show you how we use these tools. Everyone here is looking for support. Well, you have it backwards. You cannot have support unless you have the buyers. So if you're looking for support, you better make sure the buyers are out there, like this trade right here, this chart right here in Nokia. Nokia basically was trading right around these lows right here. And after hovering there for a day, it finally went up. Why did it not go lower than 1350? Why didn't it go to 12? Why didn't it go to 10? Why did it stop right here around 1350? Well, when you look at the buy column, and I know it's a little difficult to see, which I blew it up over here. you'll notice that there's a 100,000 share buyer sitting at 1330. Now, you're probably asking, how do I really know that's a lot of shares? Well, if you look at all the other orders out there, 4,000, 2,000, 3,000, there are buyers at every single penny order. But the biggest significant buyer is sitting there at 1330. So once again, how does stocks go up and go down, everyone? Buyers and sellers. What do you have here? A huge buyer. That's what you're looking for, okay? And that's what drove the stock up. Now, let's look at the opposite. Let's look vice versa. Sellers. Sellers make resistance. Resistance doesn't make resistance. The sellers do. So here you're seeing a stock and like, wow, why did the stock go from 255 to 257 and now it's down to 249? Why did it stop somewhere around 257? That number makes no sense. Maybe 260, maybe 300, maybe 250. Why 257? It's because when you look at the sell side, good traders need to know where everybody else is at. And when I work down here and I look at my list, I noticed that right here at 257.20, there's 77,000 shares looking to be sold. Now, once again, is that a lot of shares? Maybe not sound like a lot, but when every average order out there is trading around 3 digits and you got 5, you're talking about over 100 times more shares are trading more at that specific price than in any other price. Yeah, that's what I would call resistance levels. Once again, I don't want to sound like a canary, but how do stocks go up and down? Buyers and sellers. And what you're supposed to be looking for is the biggest seller at that price. And you're seeing it right there. Now, before I move forward and we do a couple examples here, I want to ask everyone this question. Did I lose anybody yet? Is everybody following along? Perfect. Yes, Mark, you're following along. Eric, everybody? Good. Now, does that seem confusing? Did I lose anybody there? Did I lose anyone there? Because I mean, like this is basically just numbers. This is not the Fausto-Nachi indicator. This is not the cyber trading platform. Listen, everybody's there pushing, this is not the news service. This is just plain blanket, black and white buying and selling. It's all it is. It's all it is. Now, what I like to do is go over a couple examples of some recent stocks that we trade out to show you how we do it. Troy, in the next few moments, I'm going to show you where to get it. Okay. And I'm going to show you how to get it directly through the exchange, right through Nasdaq. Now, brokerage firms do offer it, but before you go out there, go get the raw data so you could see, because some of the brokerage firms say they have it, but they really don't. Let's talk about a stock that we traded, HIMS. Now, HIMS had bad earnings. The stock came down, right? Went from 25.80 all the way down to 24.20. You ever own a stock and like, oh, I own the earnings, the stock's going down, and now you're in a bad situation. You're like, shoot, do I hold on to it? Do I sell it? What's the only thing that's going to save you for the stock to go lower? Can anyone tell me? What is basically going to save you? What do you need for the stock to stop going lower? Dario, what about you? I didn't hear from you, Dario. George, Jim, Kathy Wagner, what about you? Just out of curiosity, what do you do? What do you think is going to make this going to stop it from going lower? No, Troy, you made the mistake. I'm glad. That's why I'm asking you. You don't need support. You need buyers. The only thing I can save you is a buyer, not a support level. Okay? That's what you need. Now, everybody loves charts, right? So let me ask you, do you see buyers on charts? Do you see any buyers out here? So what the hell are we using a chart for? A chart is only telling you what happened in the past. It's not indicative of the future. So we're going to go out there and we're going to find that support level by knowing where those buyers are. So we're going to go look on the left side of the Nasdaq total view, and we're going to see that is where do you guys see the biggest significant buyer? And it's right down there at $24.20. You got almost 120,000 shares out there. Now we're at 25.20. Okay. You're talking about $1 away. Let me tell you something. You could hope all you want. You could pray to whoever your God is. Okay. But at the end of the day, the only thing that's going to support the stock from going any lower is that buyer. So you could sell it now, or you could run it down another $1,000 and hope that is going to support it. But anyway, what do you think happens? Hits that support level and goes right back up to 26.50. How many of you here bought a stock, and as soon as you buy it, the thing goes down? And then here you are, you're holding a stock, you're holding it, you finally sell it. And as soon as you sell the damn thing, the thing goes up. Ever happened to anybody? Huh? All the time? Mark says yes. And you feel like somebody's watching you, right? It's like, I can't do anything right. Every time, it's like, I can't figure this one out. Listen, nobody is watching you. You're just not watching them. That's the problem. Let's look at the resistance levels. But to have that resistance, we need to know where the sellers are. So Apple launched this whole thing with this Siri AI. Like, oh, yeah, this is great news. The stock is going to 1,000. It's the next NVIDIA. All right, whatever. Stock goes up. Okay, it has a big pop on that news. Now, the thing is this. Everything is going to have sellers. Okay, there's always going to be a seller. Listen, my uncle taught me the most valuable lesson when I was a kid. Okay, I remember going to the auction with him to go buy a car for his wife, right? Bought the perfect car for her. The next day, he sold it. And I'm like, Uncle Rudy, we were waiting all month to buy this car for your wife, and you just sold it? I mean, like, why would you do that? Like, is it the purpose of why you got the car? And he always told me a valuable lesson. He said, Fausto, everything is for sale. Everything is for sale. The only thing that's not for sale is my wife and kids. Yeah, I bought this house. I bought my dream house. You know what? It's for sale. Everything's got a number. So the reason why I'm bringing that up is that don't think that there are not other people out there that own the stock. Even though you bought it and thought it was a good deal at that price, there's someone always on the other side looking to sell. Okay? Money is money. Profit is a profit. Because my uncle said, I'll just buy another one. The guy wanted to pay me stupid money for the car. What am I going to tell him? It's not for sale? Anybody own a house? Anybody here own a house? Any new house owners? Anyone out there? You bought a house for, I don't know, $500,000. Your dream house, $500,000. Someone knocks on your door. Hey, I'll pay you $1 million for it. What are you going to say? No. Right? What are you going to say? You just made $500,000. You go out there and try to make $500,000. You just made $500,000 overnight. You're not going to take it? You know what I mean? Same thing with trades of stock. So my point is, there's always going to be someone taking a profit. And here an example, like as much as you love Apple and everything else, you work your way down, look for the sellers, and bam, 300,000 shares are going to be sold right at 300. Now, is that a lot? Like I said, look at all the other orders out there. 1,000, 2,000, 3,000. You're talking 6 digits. You're not going to beat these people. You're not. You just got to know where they are. So, hey, I had 2 more houses for sale. Exactly, Brian. Why not, right? Just buy 2 more and just keep flipping them and making money. You know, that's the difference between a good trader and a bad trader. All right, so getting back to this Apple trade, as much as you love it, that's the worst thing. I don't love stocks. Every time I do, it breaks my heart. Every time. If I have a soft, it's like if I have a personal attachment, like I have a personal attachment to Costco because I probably max out my card all the time there. I get the maximum rebate on it. I think it's the greatest store in the world. I don't know if we have any Costco fans out there, but if I traded Costco right now, I would not be anywhere. It is stuck here at the $1,000 price range forever, right? Because I love the company, I'm going to buy the stock. I mean, yeah, you should have bought it 10, 15 years ago, but today it's not going anywhere. There are other opportunities out there. Remember, this is your job, this is your business. And then there are also companies like, oh, I love this company so much, it's going to come back. I know it will. It's a great company. Listen, sometimes they don't come back. I don't care how great of a company is. You get a big seller out there, it's going down with you, without you. Because I'm going to show you something what happens when a stock does break resistance levels. There is this possibility, chance, and we see it all the time. Stocks do break resistance levels. It does happen, right? But you want to know how. Well, let's go back to Apple. You all taught that, and what you're learning today is that if you see a lot of sellers out there, that's a resistance. If you see a lot of buyers out there, that's support. But what could happen is this. Somebody could be like, I'll take it. I'll buy it, And in this situation right here, it could have been when Apple was down at these prices, you probably had the 90,000 shares out here, right? But then when it got to here, someone bought it 30. Then we went down to 20,000. By the time you got to here, it probably was at 0. And that's why the stock went up. So does anybody here use something called time and sales? Anybody use something? Anybody know what I'm talking about? It's a time and sales window. I'll show you what it is right here. Right here. This is time and sales. So this window right here is, let me clear this out. This is every transaction that's going on with the stock right now. So it's segregated in 2 different colors. Red are transactions on the bid, green are transactions on the offer. So you get to see, are the buyers getting done or the sellers getting done? So one of the things that we teach you is strategy here at Cybertrader University. I know a lot of people look at this and are like, it moves too fast. I don't know what I'm looking at. Well, don't worry about that. There's tools that will slow it down. There's filters that we use that we teach you. But at the end of the day, if you see orders out there and want to know how things get broken, well, that means that someone's executing that order. And the only way to know if he's getting executed and the number is going up or down is by time and sales. By the way, I don't know if you know this, but do you know where a chart gets its data from? You're looking at it. It comes from time and sales. That's where those orders come from. All right. We put this back down. And now we had a question someone was asking me, and here's your great opportunity. Who here would like to play around with level 3? This is what you got to do. You could email me or take your phone and scan that QR code right now. That would probably be the easiest thing right now. So let's go out there and open up another email. Type in Fausto at C2 Trading, and in the subject line, write Nasdaq and hit send, or there's my email in the chat room. So you could email me or just take your phone and scan it, and you'll get it immediately right now. Okay, because I won't be able to give this to you until after I'm done with my presentation later today at 4. Go out there, play around with it. Now, this is what you're going to get when you fill this out. I'm going to give you 2 videos. I'm going to show you basically where to find it and how to set the defaults. Because if you go there, you're going to be like, I don't know what I'm looking at. Don't worry about it. They're 2 5-minute videos. It's going to tell you exactly in detail how to set it up. Now, you're going to get this directly through Nasdaq. Okay, directly through Nasdaq. And I'll be honest with you. Well, one person was asking me, I couldn't see you probably didn't see his chat. Someone's asking me, what does it cost? That's a great question. So let me tell you how we went from where I was when I started till today. When I got started, if it wasn't for my mentor, I would have never be where today, because back then I had to pay $1,000 for this data. Today, it only costs 15 bucks. Now, does anyone here, can anyone here could afford $15? Because if you can't, you should be trading. And let me just also tell you, everyone this. Stay away from free stuff. Okay? The only thing that's free is the cheese in the mouse trap. And it didn't work out too well for the mouse. Okay? So you don't need to spend a lot of money. You just want a good deal. That's what my uncle always taught me. Another famous thing my uncle always told me. He says, you still want to, listen, you don't want nothing free. You just want a good deal. Okay? Because when it's free, you can ask someone like, okay, well, how do you make money? By the way, does anyone here work for free? The only thing I ever work for free if I'm doing charity work, because I know I'm not paying for it. Okay? I cook for my kids at crew and wrestling, and donate my time at the church or something like that. I know I'm not getting paid for it. I do it because it's out of my heart. I help families, their gardens or whatever it is. I don't ask for anything, but I got to make money somewhere if I have to. And when it comes to trading, there's no such thing of free stuff. But at $15, give me a break. To see where 70% of the buyers are is incredible. Now, just a couple of shout outs really quick. Who I got this? Lola, I got yours. No problem. Raymond, I see you just sent me an email. Right here, you can see it. Nasdaq, book. Well, okay. Sherry, I see yours coming in. I'm a little confused. There's 100 of you here. How are not all of you filling this thing out right now? How all of you are basically trading and not knowing that? I see a lot of you filling out the form. Okay, that's perfect. You're filling out the QR form. But let me just think about it. Like, how would you even consider being successful without, wouldn't it be nice to know who you're going up against? Wouldn't it be nice to know that when you see a resistance levels on a chart, the QR code's not working? Hold on. You're right. QR code is not working. All right. So you know what? Just send me an email. So let's scratch that out. I don't know why the QR code's not working, but I'm going to have to take that up with my staff. But let's just go through here. All right. Let's just go through here. Go through the email. So let me post that email one more time. FDUSTO@ctutrading.com. There we go. All right. Direct message. Put it the wrong email. There we go. All right. Yeah, I see all you guys filling it out right now. Okay. Now let's go to the next thing, because we're almost out of time here, and we got a lot of great presenters. I got one more last thing I want to teach you all. One last thing. Okay. There is something called level 4. And we're going to cover it in the trading room, because you guys are going to go to the trading room. You're going to watch it. You're going to see both data. You're going to see level 3 and level 4. Level 4, basically what it is you're getting to see it on a heat map. So I'm going to play around with it. I'm going to show you some stocks that are moving. So basically you're seeing everything here, right? Everything there. But now you're getting to see it more of like time in sales, where the bubbles are, and you get to see who's out there, if they're getting executed, where that big order is it going to test it or not? So it's a little bit more of a heat map, which is another tool. So what I want to do right now is I want to look at some stocks. And let me fix this really quick. And is there any stock out there anyone wants to look at? Any stock? Let's bring up a stock here. Tesla. Okay, Tesla has good levels. You bring that up. NVIDIA. Okay, let's bring up NVIDIA. All right, we got NVIDIA up here right now. Okay, so NVIDIA is going down. And I'm going to bring up the chart here. You can see where it hit a high over here, and now it's coming back down. So I want to draw a trend line right here. Okay, because this is where it's trading at right now. Now, looking at the chart, do you think we're at support levels? Yes or no? What do you think? John says yes. Mark says yes. Renee says yes, 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 yes. Okay. Yes, yes, yes. All right. All right. For everybody say yes. For everyone that said yes, I'm going to do this one more time. Take my email, write the word Nasdaq, because you're all wrong. You just all lost money. Every one of you did. You know why? Because the chart, this is the past. You're assuming that we're at a support level. Let me show you something. The biggest buyer is not here at 200. The big buyer is right here at 195 and 190. Okay, that's where the biggest buyer is. So you're talking down here. So we're right here. So if you thought this was a support levels, it could happen, but as of right now, it's not. It doesn't look that way. And then if the stock was to go up, you could see that the biggest seller is right here, and he's been out there for a long, long time. Long time. And that is right here. Now, most people be like, oh, no, resistance is here at 130. Yeah, okay, it is. But to get past 130, you got to get past 120. And when you look at 120, you're like, I could see it, but I didn't really think of it. Right? So did I lose anybody there? Did I confuse anybody? Pretty easy enough, right? Simple math. It's all about following orders. All right, let's do one more. One of you said Tesla, right? Let me bring up Tesla. TSLA. All right, here's Tesla. So Tesla is here trading right around here. Okay. Now, where is support levels on Tesla? Where's Tesla? Where's the support levels on it? Where do you think? We'll see the buyers, Mark, but before we see the buyers, let's give me an idea. Where do you think big supports and resistance levels? Say we had 240, 380, 370. Okay. So we got 340. Now, I don't know if the stock's going to go to 340 without breaking any other support levels. Some of you are saying 380. Okay. 370. Right there. All right. All right. So let me show you what we got going on here. Now, today, the stock, what it did was it actually bounced right around 380. So, but some of you said 370, but right now we're at 387. So could you be right? Well, let me blow this up And let me show you, we got here on level 4. So when the market opened up this morning at 9:30, this is called program trading. Orders started to show up. And it opened up right here around 390. It went down to this program trading that kicked in, which is about 58,000 shares at 380. And then from 380, it went back up to 390. No real big sellers out there as much, but the buyers are out there at 380, 375, and 370. So the answer is you're all right. You are all right. But the right answer is where was the next support level? So 370 support, yeah. 340 support, but to get to 340 and 370, we got to get past 380 first. And right now, what it looks like with that big buyer, unless somebody execute him, which no one did, that's why it bounced. Tim, thank you very much. And by the way, read what Tim just wrote. Read what Tim. Tim is one of the traders in the room. He's been a loyal student, Cyber Trade University, and he knows the importance because he's been there and he's lived it. I've tried so many systems in the last greatest indicator, and they all failed compared to what Fausto teaches. Been trading for 26 years, and this is a game changer. Don't miss out. Thank you very much, Tim. And that is why I am expecting every single one of you here are going to do, which is the next thing. And the next thing is I'm going to show you this stuff live in the market. All right. Now, how do we do that? First and foremost, if you have not been following me on Instagram, TikTok, YouTube, I have some great videos that I've done. The last one I did is on Bitcoin. One before that was VCX. I've got just a ton of great videos. Go out there. The links are right there. Subscribe to the channels, okay? And please share it. Do a good deed. Let other people see it. Go out there and share it. But I want to do better than that right now. What I want to do right now is this. You got to make a choice. You could go with the guy on the left or the people on the right. You see, I was that person on the left. And here I am just trying to do things at home, in my basement, everything else. And what I've learned, and for some of you, if you even heard Tom Sosnoff talking about it yesterday and all the other speakers, and even today you'll hear a lot of them, the way you learn is you got to surround yourself with people that are very good at it. You know, when you work at a bad company, okay, you become very bad at your job, okay? And if you're really smart, you're going to leave and go somewhere else. The goal is you always want to work for a good company. You can't just say, "Oh, I don't want to work for a good company. Let me go try it first, and then I'll work for the company, and then I'll do it." Listen, we're all entrepreneurs. We all want to learn, you know, but you get to learn. That's how you're going to earn. So what I want to do is I want to invite all of you guys to come into my fellow trading room, and you'll see why Cyber Trade University has been respected by more brokerage firms and exchanges than anyone in the industry. And what I'm offering all of you is this. I want to welcome you all to come to the trading floor, okay? Because what I want to show you is that we practice what we preach. And I don't want you to judge us on our winners. I really want to judge what everyone was answering the question. You can't control your losers. And I want to show you how we do that because you're going to lose. You just got to lose smart. You can't lose a lot. And you'll see why, you know, being a veteran here, and I still live here in New York, you know, how these traders do it all day long. And not only that, it's not about me. We have several instructors that work at Cyber Trade University, and you'll get to hear from all of us. Josh, Rich, John, all of them. Now, what I'm offering all of you is this. You're going to have access to the live trading room. You're going to have access to all our trading tools that we offer here at Cyber Trade University. You're going to have weekly workshops that we do. And as a bonus, if you register right now, I will personally give you a coaching class. I'm going to throw that in because I feel like, listen, after you go through it, you want to know what's going on. You're going to get all this stuff, a $2,000 package for $9. That's it, $9. And all you have to do is click on that link or go to that QR code. By the way, let me check if the QR code works, because that's not pretty cool. Yeah, it works. Okay, you got it. All right. All this stuff for $9. Now, let me tell you this. If you can't afford $9, you cannot afford to trade. I just showed you some of the stocks. Like for example, a lot of you were looking at the Tesla trade. If you thought that support levels was 370 and you missed out because you didn't see the 380, you just cost yourself $10. On one share of trading Tesla, you would have paid for the class itself. That one thing. So think about where did you go from now to where we are today? Now, listen, traders, I got to go. I got to bring Price Headley, that's next speaker coming in. So go out there, register right now. It's going to take you less than a minute. It is very important that all of you, when you register to please make sure you fill out the questionnaire and book your appointment. Every one of you can talk to my staff. We're going to walk you through the trading room. We're going to make sure you know what you're looking at. We're going to show you where the videos are. We're very big when it comes to customer service. Very, very big. You know, and one other question people ask, what happens after the week's up? Nothing. It's up to you. You want to continue with Cyber Trade University? We'll let you know how you can go about doing it. If it's not for you, which could happen, we're not going to lock you in any subscription. All right? Any other questions? Couple of shout outs really quick. Jay Frederick from Brooklyn, New York. Oh, you're right here. I hope you're not a Nets fan from Brooklyn. Mike, I just got your registration. Joyce, I got your registration. Welcome aboard. All right. Anybody else have any questions? So listen, traders, it's only $9, and we'll show you all these great things that you're going to get. Everything. All right. Now, a couple of things people ask me. I never heard of level 4 before. And they're like, that's okay. Well, who really trained you? We're going to cover it. Don't worry about that. Do you need any special software? No, you do not. Okay. You just need yourself. You don't need to be there all day, the first hour, last hour, whatever works out. Also, when you guys get a chance, look at our Google reviews. Look at the lives that we changed, people's lives. 5-star rating, 5 after 30 years, almost unheard of. Some people don't even have Google ratings because they're so bad. They could take it down. But us, you know, we change people's lives. I love changing people's lives. You know what the big thing is? Trading might not even be for you. So why not go find out first before you make your first trade? Think about where you are today, before you stepped in this room. How many days? It's for the whole week. It's from Sunday to Saturday to Friday. And by the way, one other person was asking me, when could I start? You know, listen, what I would do is start immediately. You want to push it off until Monday? Put it till Monday. You know, just tell your education advisor when you want to start. Nick, I got yours. I see you right there. Nin, you're from San Jose, California? Yeah, I got your registration. Go San Francisco. Go. Be ready for the Super Bowl. All right, guys. So listen, I got to go. I got to bring on my next speaker in here. If you have any questions, anything else, enjoy the Nasdaq TotalView. I'm going to get everybody my book. And then for the ones that are, you know, that are going to register for the trial, and do the 1 week for the $9. Listen, what you see right now, you haven't seen nothing yet. This is I just scratched the surface. Wait till you start seeing where we find these stocks, how we find these orders, everything else. All right. I'm gonna pause right now. I'll be right back. Don't go anywhere. Give you a little time to register. I'm gonna bring my next speaker, Price Headley. All right, traders. So let's just move on because I have Price that's in here right now, and I just want to do a quick little intro and introduce him a little bit before we move forward. Um, so Price, are you there? Just want to check
Good
you. Yeah.
morning, Fausto. Yes, how are you, sir?
Perfect, perfect. So let me just let everybody know and get everyone super excited about you, Price, and let everybody know exactly why you're here. You're always here, and everything else. So my next speaker, Price, I must have known him for over 20 years in this industry. I spent countless hours, together with him whenever we do speakings at the money shows and other speaking engagements. I had the privilege to listen to when he first started because he basically has been around forever. He's a dinosaur. But he's basically probably the king of it that I known in this industry. When I first listened to him speak, I was like, my God, I'm learning more about options more than anything. He's a true professional. He runs a great educational company. He's not only a great educator, but he's got great character, integrity. He founded Big Trends. He developed one of the outstanding option strategies that I've seen that helped traders for years. Whenever I had a question, concern, I always kind of reach out to him and ask a Price what he thinks. So listen, great traders surround himself with great traders. He's been featured on CNBC, Fox Business, Bloomberg, and his work in the Wall Street Journal, he's done Barron's, Forbes. I mean, I can go on and on. Invested Business Daily. He's also the author of the bestseller book, Big Trends in Trading, and holds a CFA and a CMT license. And on a lighter note, which if you don't know the other side of Price, he lives in Kentucky. He's also a pretty good horse picker, I'll tell you that. In fact, I always joke when he approaches his options, how he basically handicaps his horses, and it's all about stacking the odds in your favor. Most importantly, Price is a fantastic presenter. He's been the most respected contributors in trading education community. I'm always glad to have him back here all the time. So Price, let's give a good welcome. Welcome, my good friend here, Price. And Price, thanks for being here. Look forward to hearing what you have to teach today.
Fausto, you're too kind with that generous introduction, and it's like Fausto said, he and I have been in this game probably longer than most everybody you see out there. So it's also a great privilege to be on your platform. And so let me go ahead and share my screen here. We'll get ready to roll because part of trading and part of life really is that you got to keep adapting, right? You got to keep green and growing. I like to say rather than ripe and rotting. I think Lee Iacocca yeah, Coca said that green and growing, not ripe and rotting quote. And that's how we want to be, even for me, 37 years in the game and counting is like I'm always looking for the next edge, the next thing. And frankly, the next thing in options trading has been zero DTE. That's 0 days until expiration, literally trading options on the final day of their life. Now, we waited for a while to kind of bring our DTE out to the public because we were kind of concerned about like, hey, can people handle this type of leverage, this type of opportunity? And what I always tell newer traders coming in, if you think that seems too short of a time frame, is that it's about saying, look, trade small and see how winners work, how stop outs work, how you can make a strategy like this work for you, and basically put it to work on a small scale first. That's the great thing about trading and investing is it's scalable, right? So you don't have to come in trying to hit the proverbial home run and loading up on any trade, especially not your first trade, getting comfortable with the system, right? So I kind of like Foster said, being in this game for so long, I always want to kind of talk about the risk side as much on the front end as the reward side. Sure, the strategy can hit up to 500% winners. We just recently did that again. This morning, we just booked a risk-free trade right off the bat. Now, just kind of seeing how it goes the rest of the day. But the bottom line is that it's all about kind of setting yourself up for being in the game for the long haul. So I always say, don't start thinking how much money you're going to make on your first trade. How can I trade this small? Prove it to yourself over about 10 or 20 trades, trading small before you start to scale up your exposure to your own particular risk tolerance. So we're going to talk zero Ts, DTEs, and that's 0 days expiration. And on the Qs, the Nasdaq 100 QQQ, and if you've been under a rock, of course, the Nasdaq is driven by NVIDIA and a bunch of other AI names, artificial intelligence names. It's the leading index to trade those names. Up and down, right? So we're going to show you both sides here. Let's go ahead and get into it, but just with that understanding on risk disclaimers and kind of keeping your risk in mind always, to stay in the game for the long haul, manage your risk, and you'll be able, the rewards tend to uh, take care of themselves when you follow a systematic approach like what I'm going to share with you today. So remember, everything I share with you today, it's based on our proprietary research. It's intended for illustrative purposes only. It's not be considered specific advisory recommendations here. Know that stock and options trading, sure, they've got large central rewards, but let's face it, they've also got plenty of risk. We've got to manage that risk always. We'll show you how we manage it for even in the same day in and out on QQQ options. Remember, the past performance of any trading system or method is not necessarily indicative of its future results. Future results are going to vary. So no matter when you're looking back at a system, you got to know that, okay, you've got to always manage the risk going forward, no matter how hot a system's been, never get too high or too low financially or emotionally, right? Just be slow and steady winning the race. Tortoise beats the hare every time in trading when it comes, especially to capital allocation. So see our terms of use on our bigtrends.com homepage. Okay, so
Hey, Josh, the QR code
oh, I hear you there. Thanks,
in one of the
Fausto.
slides for
But
Nasdaq TotalView did not work.
basically what we're looking at
Moving
here is
forward,
that we're going to focus on how we can zero in on one trading vehicle. So why do I love the Qs? Not just because they're AI driven, NVIDIA, Apple, Microsoft, Meta, Tesla, name your favorite key tech stock and you say, okay, they're all a part of the Qs. But also because QQQ options have every single trading day expirations going out for the next couple of weeks. So what that means is you can really customize your strategy, whether you want to trade 0 DT, 1 DT, 3 or 4 DT. You can really customize to what your comfort level is. We like 0 DTE because, of course, you get your biggest bang for your buck, and we're still going to be out before the close, well before it on every given trade that we make. So we'll show you a bunch of trades, case studies when it works, success stories we call it, and also when it doesn't work. And I would consider it a success story if you've got a system where you take reasonably smaller stops compared to what the size of your wins are, right? That's part of the secret of the game. Keep your losses smaller, let your winners run. And we'll show you how we do this with our 0 DT options trader program. We call it real-time emails, and of course, we do recommend you get set up for real-time text when you're dealing with the final day of an options live. So we've got that available to all subscribers. If you don't know me, I've been trading options for 37 years and counting, like Fausto said, been in the game a long time as he has. And bottom line is that it's all about having a systematic approach. No matter how much experience you have, you got to let the system drive your trade. If you're letting your ego, your emotion, you think you know better than the markets get involved, that you're in big trouble, right? You got to be systematic about how you take your gains, how you take your losses, and moving on every trade, win, lose, or draw. But launchbigtrends.com now in our 27th year back in late 99. So let's get into it with a recent winning trade example. Like I said, we did just have a trade that we cashed out today at our first risk-free target, and the rest is whatever happens on the rest. We can't lose on that trade today. I can't show that one because it's not totally closed out yet. But basically, let's talk about another recent one and how this works. And here we go with another downside opportunity. Here we're going back to this past Friday. Okay, you may recall last Friday, the markets got ripped on the downside, right? And you see here that what we've got going on Friday morning is we're looking at on this system for 0 DT options traders, we're looking at 5 minutes at a time candles here. Okay, so what we want to do is we want to first define what is our opening range, if you will. What basically what's happening here in terms of the initial price action. Now, you may have heard the term ORB or opening range breakout. A lot of people will look at the first half hour for that. We're tightening that up to just look at the first 15 minutes of QQQ trading from 9:30 a.m. Eastern Time, Wall Street time, till 9:45. So what you see on this one is, of course, the Qs did gap down on Friday morning. And what we're marking is, of course, that first high in the first 5 minutes ended up being our high for the 15-minute opening range calculations. That's our green line here in this shaded green area here. The low of the first 15 minutes was happening right into about the 9:45 close. The markets kind of, you can see, open lower, kind of bumped around a little bit, then started working their way down. And so we've got our high-low range basically set up. What we're looking for is a breakout outside of that opening range, and we're looking for it to happen on stronger than average volume, which is happening down here. The green candles, the point where we got our official signal there, right after 9:45. You can see our green candles. We're saying the green means it's bigger than expected volume. In this case, maybe you might think of it as a red, worse than expected thing when it's on the downside. But the point is, we like that for a downside trade at that point. So when you see this happening, we're recommending to say, yes, we're getting our signal happening here at the close 5 minutes after our 9:30 to 9:45 window is defined, 9:50. So and the only 3 bars after in the 9:50, 9:55, 10 o'clock, latest we could get in is 10:05. So basically, once we've gotten those first 3 bars in, we're really looking at those next several bars to really tell us that we've got a follow through. If it's too choppy, if it's stuck in between this range up here, if we were trading up in this zone right up in here, we would say pass. Now, we've also got a couple of trend lines on there. The black line is kind of a classic moving average filter. We don't give away our settings for free in these complimentary overviews, but when you become a subscriber, you get all of our settings, all of our rules. You get the entire system laid out for you with additional training all the time. So you're constantly learning the system while you're earning from it. But the green line is an interesting one that of course, a lot of active traders are aware of, and that's the volume weighted average price, or VWAP indicator in green. And so what that does is it adjusts, of course, for not just the direction of the trend, but also for how much volume is coming in. Of course, we see so much volume coming in the first half hour or so in this 5 minute green volume surge candles. The gray ones, by the way, of course, are below average. But the point is that, what we're looking for is that launch point, right? We want to get, in this case, the breakdown point on the downside. Breakdown on bigger than average volume, yes, we want to buy put. So what do we recommend to subscribers? By the way, where are the Qs trading there? You can see we're trading in the neighborhood of 725. You can see, what are we buying? We're buying an out of the money put. Now, these are 0 DTE, same day expiration, meaning they will expire at the end of the day. Now, most people think of the cash market closing at 4 p.m. Eastern Wall Street time. The QQ options will trade actually till 4:15 p.m. Eastern, okay? So keep that in mind as well. But basically what you're looking at here is a situation in which, yes, we've gotten our breakdown. We're buying out of the money puts, and look what we paid. We paid 94 cents, $94 a contract, and we're basically making a bet that the Qs are going to move down well past and below 721. So we're going to already be betting that they're moving down, probably in the neighborhood of about 1% at least, to start to get us in a position where we can start to cash out of some of this trade. Now, here's how do we manage risk on this trade? Remember, we're using an example in these charts of we'll put in no more than $1,000 into any one trade. So 10 contracts, each contract costs you got to multiply times 100, 94 cents times 100, $94 per contract, controlling each 100 shares of the Qs. Remember, at 725, you're controlling about $72,500 of value of the Qs for $94, for less than a Ben Franklin, less than $100. So the idea here is that, okay, we're saying massive leverage, right? But let's face it, there's also time risk, right? If nothing happens on this trade, we could put ourselves in a position where we could be in position to lose our full investment. So how are we going to start off our risk? We're going to say we don't want to lose more than half of what we pay for any option. So if it goes from $94 a contract down to $47 a contract, we would get stopped out at 47 or less. Okay, so that's part of what we're going to start with. Okay, so we're talking about a 50% risk. That sounds like a lot for most newer traders to options, but the reality is that's not a lot when you consider the gain potential. So what is our gain potential? We're looking for up to 500%, but we're not going to hold the whole position for that ultimate target, because a number of times you won't get to your ultimate target. So what we do is to say, how do you get to a risk-free position quickly? So instead of selling half at a double, which, again, sometimes we'll get there, sometimes won't, we say sell 2/3 of your position or more at a 50% gain. When you do your math on that, if you're putting in $1,000, you make 50%, it's up to $1,500. If you sell 2/3 of your 1,500, you sell 1,000 of your 1,500 out, you basically have all of your risk money, your original $1,000 back in your pocket in the safety of cash in your trading account. So now you're just trading what we call the free trade on the rest. The runner position is where you really get paid on big trends trades. Every big trend strategy I look at, which is why I named my company BigTrends.com back in '99 because of the money I'd made trading mainly the internet bubble on the way up when I was previously head of research for the nation's largest options newsletter in the '90s. Basically, it was a function of saying, look, the big trends are where you really get paid. Any major trader that you look at is going to tell you that, yeah, the little stuff that's not the quick little scalp moves, that's not how you make the big money, especially in options trading, because the big money is made by these asymmetric returns that are way bigger than what your risk is, right? Many, you may have heard the R multiple. How many units of reward can you get per unit of risk, right? So the idea is that, okay, we could lose 50%, we can make 500%. We did here by the midday point in the market. And in this case, the market actually kept dropping into the close. We theoretically could have made even more. I'm not in the game for theory. I'm in the game for reality of saying there's too many times where you can make a lot and then give it back too, right? So we're very happy to book our last three contracts out at the 500% win. Look at where the Qs are trading, 714 or so at that power lunch midday point of the market there about 12:45 Eastern. We had a 721 put. You'd say, well, geez, at some point that thing's worth about $7. We're out a little bit before that. Actually, it took 564 off the table for the 500% win, right? A six bagger versus the $94 a contract we paid. Now, do the math with me real quick on how much money did you make off of each of these legs. When you made 50%, you can see you made here less than $50 a contract times seven. You're making a little bit under $350 for the first seven out of your 10 contracts. That gets you your risk money back, right? Because seven contracts times $141 a piece. Here you are getting out for like, you can see like 987 bucks back for the 940 you put in, right? So even if the other three contracts crapped out, which can happen, because we will let those things run until 3:30, even if it's against us on the last three contracts, we give it a chance. If it doesn't go, say, okay, pass, basically break even-ish, maybe a slight profit here, but call it a scratch roughly if it doesn't pan out and goes to nothing on the last three contracts. If it does, what do those last three contracts make you? $564 when you paid $94. Each of those contracts making you $470 times three, getting you almost what, $1,400, 1410 of profit out of your total is 1731. So the last 30% of your position here, you can see, is making you something in the neighborhood of about 70% of your total profit. So that's the power of this methodology, is to say, look, take advantage of it, making almost maybe 75 or 80% of your profit on the final three contracts. Let the winners run. That's the classic thing. Cut your losers quickly, let your winners run, at least on part of your trade. Why don't we do it on the whole thing? Because you'll see on a number of other examples here where it didn't keep going, and we don't want to put capital at risk if we can't get to a free trade reasonably quickly. That's what we did this morning. We got to our 50% win reasonably quickly, and then we just said, okay, now whatever happens on the rest, we'll go ahead and see as of 3:30 today where that last partial trade finishes. We know that 500% winners are not the norm, right? We know that that's basically the outliers that carry this portfolio, but these outliers happen more often than you would expect. And so the idea here is that here's another example, again, another downside play. This is about a month ago, back on May 12th. And so you can see that, here again, we gap down. The gap doesn't necessarily mean anything to us. It's more about the first 15 minutes low, the first 15 minutes high. That's defining our opening range thresholds. You can see that right after that, we're getting that breakdown, and you can see that our volume is picking up as we come in here. It's above average. Doesn't look like by much, but it is. And that gives us a green bar that confirms. We call it the big trends volume confirmation method. This was an interesting one because, right after we got in, we paid 88 cents, 88 bucks to control each 100 shares of the Qs on the downside. You see the Qs are trading here about 705. We're buying 3 points out of the money, 702 strike puts. Paid 88 cents. And look what happens. At first, we get a retracement against us. We were initially down on this trade after 15 minutes. You see it, and it bounces back up here. If we'd hit 44 cents or less, we would have been stopped out. I think it might have gotten to 47 cents, something like that. We almost got stopped out. And so that can happen too, where if you do get stopped out, you take it. But if you don't, you say, okay, enough wiggle room to keep you in the game is so, so important here. Right. So that's what we're really talking about is that you've got to give yourself the wiggle room. You've got to give yourself the opportunity to stick with your biggest and best ideas. Right. So that's another big part of the game here is that you don't want to be cute and say, well, I'll be more risk managed. I'll go ahead and I'll I'll put a 25% stop in there. If you did that here, you would have been lost at down 25% when we made our 500%, right? So you see our snap back down. Literally, all these moves are happening. You can see from the time we got in, first move against us, the first 20 minutes, the next 15 minutes, we get our target up 50%. So that's all in the course of about, you can see here, like 40 minutes, right? So the idea is that this is why I recommend when you get signed up with a super special that you want to stick around to take advantage of, that basically you get a ton of time, you get great value. One trade could easily pay for your investment on long-term subscription here for a long time to come. But basically the idea here is that, okay, what we're looking at is you think that, okay, well, why don't I just take it all at 50%? Why be greedy? Well, because look what happens. Again, by the midpoint of the day, just about 1250, our final three contracts of the 11 we got out of eight at 50%. The last three contracts going from $88 a contract to $528 a contract. So we're locking down here $440 times three of profit on those last three, making $1,320 on the last three contracts, a total of $1,672 profit on the whole position. These examples, by the way, are all before commissions, but with options, you shouldn't pay more than a buck a contract in, a buck a contract out. And as you get more active, you actually should talk to your broker about getting your commissions down to 50 or 60 cents a contract is what more the norm of what I pay and what most people should be paying if you're getting reasonably active in options trading. So your commissions are way down from what they used to be when I got started back in 1990. But the point is that, okay, look, don't get cute. Don't try to stop it out too quickly. What I always tell people is if 50% sounds like too much of a stop for you, then trade it smaller, right? In this example, you could literally trade as little as three contracts, sell two of your three, and then hold on to the last one for the runner and still make probably about $550 on just on a three lot, $500 at least. So the idea is that, okay, getting comfortable with how this works is very important to allow you to stay in the game, right? So you've got to realize that it's got to fit your own risk tolerance. It's got to fit your ability to execute. Because literally, when we call these trades out in real-time email and real-time text to your smartphone when you become a subscriber, all you have to do at that point is go ahead and log into whatever brokerage platform you want. It's not dependent on any brokerage. It takes a matter of just a few minutes. You get logged in, you know how much you're investing per trade. Try to stay consistent on the overall dollar amount you invest per trade. I tend to recommend doing a fixed dollar allocation, not a fixed contract allocation longer term. You might start saying you'll start with just a few contracts at a time, but sometimes we might have the trade we made today was like $280 a contract getting in. And so if you're saying, well, I'm buying three contracts every time, well, today's trade would have cost you like 800 and $840 or whatever, whereas three contracts of this one cost you less than 300, right? We want to keep your dollar exposure relatively similar. Okay. But the idea is that, look, there's risk. Past performance never guarantees future results in all these examples. But the basic premise is you've got to be able to stick with the trade once you take the risk off of the trade. What the goal of this whole thing is to give you not just financial staying power, but psychological internal staying power to say, I have conviction now to let this trade run. Why? Because I can't lose once I get the two-thirds or more off the trade at up 50% or more. So the idea of this trade isn't when you get to a no lose position, you should let it run and until it gets to 500% or to our 330 time stop, win, lose, or draw. We'll show you some of those examples as well. And you say, why should you care when you look back? Of course, you say, you should care because this has become to me the ultimate way to get leverage in today's markets, which are so volatile. I mean, day to day lately is tremendous movement on the Qs. The average true range is way up. It's moving a ton from high to low. Even today, you've seen it as I look at the just the action on the Qs today. We gapped up a little bit. We had closed yesterday at just under 694. We gapped open at 699. We traded up quickly to 706, and we just traded down in the last 15 minutes to 695, and now we're back at 701. Point being that there's tons of opportunity, tons of movement. Your goal is to take advantage of it. So the beauty of this is that, why would you buy more time than you need if you know you don't need to be holding it overnight? Frankly, that's one of the things that I'm trying to minimize in terms of risk management again, is not having the overnight risk. I don't know what President Trump's going to say overnight. I don't know what's going to happen with Iran and whatever bombs are being fired, missile shot, talks being had or not had, Strait of Hormuz open, not open, what's oil prices doing? There's what's the inflation report doing? What's the jobs report doing? There's loads of gap risk in today's market, right? You take that out with this strategy. I don't know about you, but I sleep incredibly soundly because I know we don't have any position on here, and we basically are waiting until we get the follow through the next morning. If we don't get the follow through, by the way, we don't trade, right? So we will have plenty of days where we say, not the right pattern, not trading it, right? So that's part of the secret of staying in the game for decades, is also knowing when not to trade, okay? When not to put capital at risk. So here we're talking about the opening range breakout setup. You learn its filter with the VWAP, volume weighted average price, and the big trends volume confirmation to go with it. The only options we trade are typically somewhat out of the money options, expiring same day as we enter, and just saying we know that there's risk in that. Frankly, there's risk of 100% loss if you were passive and did nothing and the market didn't move, right, or didn't move in your favor enough, right? So that's why we say use a 50% stop, use the 50% profit target in the first two thirds, and then go for the runner winner of up to 500% on the rest when you're winning, right? That's where you're using the market's confirmation for you, that when you're on, I don't know about you, when you're on the right side of a trade, have you ever noticed that when you're right, trading seems easier, and frankly, the trend seems to last longer than you would expect. Have you ever noticed that? Have you also ever noticed that when you're in the wrong side, when you're fighting the market, when you're hoping that it's going to come back, when you're underwater, that hope is not often paid off, right? Often that when you're, how do most big losses start out? They start out as small losses, right? So that's where we're saying, look, get rid of the losers, let the winners run. It's classic trend trading 101, right? So 5 minute chart, it's amazing to me. I used to mainly put most of my swing trading focus on an hourly chart, but my analysts, we're actually using AI in our testing and trading as well. So we've been using Claude, Anthropic's AI, a lot to process a ton of data, right? And so we don't talk about that much here in the slides, but yes, AI has saved us. It's not just saved us time, it's allowed us to run through so many more simulations, so many more what ifs, so many more confirmations, non-confirmations, like which tools together work the best, and not having to have, I've got a great research team with me, but I don't have to now triple up my research team to process this data. We're letting the AI help tell us, yes, this combination works the best. This combination that you thought worked didn't work as well as you thought. So we've really developed what we think is really one of the ideals of running that. Now, I still have humans here that are helping me to fire out the trades, because when we get a new signal to buy the cues or sell the cues, we convert that into the options. We use volatility-based calculations to tell us which option gives us the sweet spot of the right reward for risk to be able to get us potentially one of those 500% winners same day, and manage the risk that we're not going to get whipsawed in between as much. So it's all part of that trade-off, right, of risk versus reward. We define our opening range in that first 15 minutes rather than waiting for a full half hour. And then basically we say, okay, now let's see where we go from here. We're also looking, of course, for just looking at just one bar to come and break out outside of that first 15 minutes high-low range with the volume confirmation. But we've got to get the follow through quickly between 9:50 and 10:05. If we don't get the follow through there, then those 15 minutes as a follow through window have now finished, and now we say we're done. We will not take a follow through later than that 10:05. Okay, so if it's after 10:05, no trade today. Go on about your other business, your other trading, or your other whatever else you're into, and basically wait for the next setups the next morning. Okay, so plenty of trade opportunities, though, plenty of profit potential, and then always going to be managing the risk. So we don't want to overpay for an option, and of course, we know that we get the most bang for the buck waiting for the final morning follow through. a lot of people would say, hey, out of the money options, you can lose everything you put into it. That is true. And so that's why we say, well, let's cut our loss down to half of our max risk, not let it just burn to nothing, but saying, look, if it's not getting that follow through quickly enough, if we hit a 50% price stop, yes, we will take those. That's part of trading and saying, okay, look at this. Our average contract entry price back to 2023 in this system has been just under 85 cents a contract, 85 bucks to control each 100 shares of the Qs. Like we said, right now the Qs are trading just right around 700. So 100 shares would cost you right around 70 grand. And that you're controlling that 70 grand of stock for less than 100 bucks, right? So the idea is that and so the idea is that that ETF, I should say, on the Qs is basically something that's I like trading it not just because it has the every single day expirations, which is part of the reason we need this, but also because it's the AI driven vehicle that's the most focused on the leadership of AI, leadership of technology, up and more recently down, right? So 50% stop loss plus 50% first target on two-thirds, right? That's kind of an eye opener for people to say, oh, I'm used to the selling half at a double as a free trade, but sell two-thirds at 50% gain, same goal, free trade created when you can do two-thirds out at 50% win. 500% target on the final piece, right? Why do we come up with 500%? We just saw it happening enough again with our testing and our trading. That we saw it happening and say, okay, when you go back and say overall performance, I always remind people, hey, we're looking at the past. Looking at the past does not guarantee the future, right? Past performance does not guarantee future results. We know future results are going to vary. There will be phases in the future where we'll be trending better than this. There'll be phases in the future will be trending worse than this, or even in a drawdown phase. It's all stuff that you have to prepare for. So that's why one of the key things that we're doing here is we are not compounding this look back. We're saying whatever you decide to use ultimately for a per trade allocation in dollars, stay with it. So that means that if I know a lot of people who try to compound their results, they try to say, I'm gonna crank up my results by as I double my portfolio, I'll double my amount allocated per trade. And while that might grow your account faster on the way up, what it guarantees is that on a good run, if you keep on applying more and more capital based on that compounded approach, you are guaranteed to have your most capital per trade on right into your next drawdown. Okay. If you think about that, you say, I don't think I want to have that kind of volatility. I don't want to have that type of a gut wrench giving back too much of my hard-earned gains because I put in too much money on the next trade. So we like the fixed allocation model here, 1,000 bucks a trade, starting with a $5,000 model portfolio. So you see, this strategy is great for smaller account traders. It's not something that you have to say, I've got to be a big trader to do this, And oh, by the way, I don't know if you heard the news, but the SEC back in April abolished the pattern day trader rule. Now we're only doing one trade a day and might only do two trades a week on average. Okay, so we're not doing the enough to even generate a pattern day trader issue, which was back in the day where they said you had to have a $25,000 plus account, or else they would lock up your account if you did four or more day trades in a 5 consecutive day span. That's gone. But at the same time, it's gone, but brokers still have some time to apply it and implement it. So some of them are going to be faster, some of them are going to be slower to apply. So check with your broker. But as you see, once as brokers have gotten rid of this, then basically small account traders uh, can certainly do this. You can still do it now. It's a small account trader. You could have accounts in multiple different brokerages as well. There's a lot of ways around this, or trading just a cash only account is a way around it as well. Point being that that's not an issue anymore. So more than a six bagger here, $5,000 model portfolio grew to 30,878. So a gross profit 25,878. That's before commissions and before subscription investment, right? So the idea being that that's going back to the beginning of 23 through today on all closed trades, not counting today's trade, which, like we said, got to a risk-free position. We don't know what's going to happen with that until the end of the day, but basically we'll see. We're just sitting back and just waiting for what happens come 3:30 on that position. And we're going to look at some time stops at 3:30 as well here. So you see that's the total growth. Again, past performance not guaranteed in the future. So you can't just extrapolate. That's over about 3.5 years. And you say, okay, the goal here, that's not compounded, but the goal here is to keep on following every signal, win, lose, or draw consistently, right? So that high-low range is defined first 15 minutes. Then we look for that 5-minute follow-through candle with the big trends volume confirmation. We also want to make sure that that VWAP, volume weighted average price is also supporting us, right? So we want to be above the volume weighted average price on the upside. We want to be below it on the downside. Okay. Whether we gap up or down, it's the VWAP will adjust pretty quickly to prices and tie in volume as well. So only window we could get in is between 9:50 in the morning Eastern and 10:05 Eastern. So we've got a really tight entry window after we get our first 9:30 to 9:45 high-low range established. Okay. I don't give the settings away here, but when you become a subscriber, you get all settings. You get all, you can follow right along uh, for home gamers, basically home traders that you can follow right along. You can learn the system. You could even potentially apply it into other big name stocks and indexes as well. But we feel like the Qs is really the best starting vehicle for this. So more examples in different market environments. So obviously, we know the recent volatility that current markets had. You say, how have you done in other periods? Here's one back in October last year. And so here's we talked about a couple of downside ones. Here's an upside one, right? You can see strong momentum up pretty much right off of the open. You can see that this one got strong momentum. Now we will never buy the open or sell the open, right? We're going to wait the 15-minute window here. You can see, where do you think our signal is? Can you see it coming here? Right there. So basically you say, okay, why? Because we're getting that and the volume is surging as well. Okay. Get that combination of things happening and you see, boom, there it is. So we get in at the start. Why did we not circle that one? Because we get in at the start of that next bar. Now notice, as we get in there, that first 5 minutes that we're in, we do get a dip, do get a little pullback there. So I don't mind that because I want to make sure subscribers are able to participate. So those first few minutes, I love to see some volatility, not just in our favor, but even slightly against us, because I'm saying, hey, we give a little wiggle room from where the options are trading at the point that we fire it out. So we want to make sure you can get into trades, but you can see it is important when you get your signal to go ahead and fire it in there promptly, right? That's what I'm saying. When you get your real-time email, also do get set up for the real-time text alerts because I don't know about you, I find text alerts get my attention more immediately compared to emails. But you can also have your email set to basically pop up on your phone right in front of you as well, however you want to do it. But the idea is that, look, we bought some cheapies here. We bought 48 cents options, right? 48 cents to control each 100 shares of Qs. This is back when October the Qs were trading closer to the low 600s. And you can see here that, in a matter of about 20 minutes max, we were already from 48 cents to 72 cents. So bought 20, sold 14, 70% of our positions. You can see, can't always sell exactly 2/3, right? If we had 21, sold 14, that would be 2/3, right? But, we might have 20 or 19 and still sell 14 contracts. So we might have to sell 70, even almost 75%, depending on how much we paid. But 50% out, you can do the math and see that that's getting you back just a hair more than you invested. We invested $960 before commissions. And then you can see we're getting out right in the neighborhood of about $1,000. And you see now we got 6 contracts to let free roll. Oh, by the way, look what happens. After we get out, you get this pullback right back towards the VWAP line right here. Guess how much money you're making right around the VWAP line? Probably not much. You might be close to break even. We don't try to put a trailing stop at break even. We don't say get out at the VWAP line breaks. We say, look, you have a free trade. You don't want to get whipsawed out of a potentially bigger trend. So as we popped from 607.5 to 608.5, we got that first target, and now we're trying to let that thing run. Look at the strike price we've got. We've got a 609 call. A big part of the leverage of this strategy comes as you go from out of the money to in the money. You pick up more and more what's called delta on each successive move in the Qs, each successive point move in the Qs in your favor. That's called the gamma effect. Gamma tells you how much more delta you're going to pick up. What is delta? It just means if I tell you delta is 50, it means that when Qs move a point, you get half of that. You get 50% of that move to in your favor or against you on that next point for you or against you in the Qs. Right? As you go more and more in the money, that delta will rise closer and closer to 70, 80, 90%. And ultimately, with no time left near the end of the day, we'll start to approach like a point for point move with the Qs. So the idea of all that, I don't want to get too technical, but the idea of that is that that's where you truly are taking advantage of the gamma and greater increasing delta effect when you're trading, not just for fractions of a point scalping, but trading for multiple point moves here. Here you see at 3:30, our time window hits, we got to close it at 3:30. The Qs are still trading till 4:15. You got a 45-minute technical window there to get out. But we just like to say at 3:30, let's go ahead and time stop this out. Make sure subscribers have plenty of time to go ahead and hop out before the 4:15 close of these options. So we're not into the game for trying to acquire the QQQ shares, right? We just want to say clean it up, move it on. We're trading near 611. It's worth almost $2. We're out at a buck 95. That final target at 500% is not achieved. We only get 306%, which we're still very satisfied with a $1,200 gain, give or take. Of course, with 20 contracts with commissions, depending on if you pay a half buck to a buck. It's why, hey, as you get more active, start to do more trades, it's worth trying to get your commissions down from a buck a contract down closer to half a buck a contract. Because of course, if it's a buck a contract, you're paying $20 in and out, it's $40. If it's half buck, it's only $20, right? So why not save some money? Check with your broker as you get more active. They should be willing to cut your commissions down even better than you might be used to. Okay. Not every trade is going to hit its final target, of course. Time stops hit at 3:30. Here's another 3:30 example, and kind of saved us some dough here, getting out at 3:30 versus waiting into the close where the market's kept rolling over here. So you can see first 15-minute signal here, but you see we wanted to get that breakout not just above the VWAP, but also you see it's breaking out above our moving average as well, and we get that volume surge there, right? So the volume was a little spotty there, so it's saying not getting any kind of a signal off of that first area here. We had to wait a little bit, okay? But we said, okay, look, it's getting us in right at the end of our entry window there on 10:05, and say, okay, look what happens as we get in. We're dealing with a little retracement back into our moving average and our VWAP lines here. That's okay. We're saying we're down a little bit. We paid $115 a contract. If you put $1,000 in, that gets you 8 contracts, controlling 800 shares of the Qs from our entry window around 621 and a half. We bought a 623 strike call. That was back on November 5th. Of course, all these examples on the same day, November 5th expiration. Same zero DTE strategy. You can see it took us a little bit more time. It took us to about 11:45. We had popped up to about 624, about a buck in the money, and now we're out at a buck 73, 50.4% gained on 6 of our 8 contracts. So this we had to sell. Why do we have to sell 75% of our position? Because if we sold 5 of our 8, that's only like 62%. It doesn't get us our risk money back. You can do all kinds of permutations and figure out, well, hey, I could sell, you know, I could actually have a smaller target on 3/4 of my position than 50% and still get my risk money back. But we just like to kind of keep it fixed at 50% target on the first piece, sell 2/3 or more. And now we got a 2 contract runner. The 2 contracts in this case don't go huge. We only got up to about 626 and change. We're getting our time stop hit down around 625 and a half, 625 and a quarter. We're out at 2 1/4. 95%. So this only makes 568 on that trade. You see, though, if we were passive and waited into the close, we're back down into the low 624 area. That thing might be trading for a buck 40 into the close, right? So that 225, good to lock it down and just kind of be done. We don't worry about the volume up or down at the end of the day. The volume is there essentially to help us just to take advantage of the takeoff point, right? That's the objective here. Okay, so you're getting the idea here, hopefully, on how this works. And so, now we say, okay, look, here's a trade where we got whipsawed, unfortunately, because it would have been a woulda, coulda, shoulda, right? Would have been a winner, but bottom line is that it whipsawed us. Do you see where's our first 15-minute high there, and we just crossed above it there, right? So you can see that, guess what? Start of that next bar, we're going to get in. And you see it immediately starts reversing. We paid $66 a contract for the 610 calls when we were about 604, and it ripped quickly down to 600, right? So 604 to 600 down about 2/3% on the Qs knocked us out. Unfortunate, but it happens, right? So 51.5% loss. Sometimes you get a little slippage where you don't get exactly your 33 cent level. We got 32 cents. So we took a little bit more than 50% give back. That was unfortunate because you see it did snap back up, kept rallying. Decent chance we could have at least gotten our 50% win. Of course, by the end of the day, we're right back to the strike price. So no big gain on that one. But the idea is that, of course, unfortunate to get whipped. That I show it to you because whips happen. We're trying to minimize the whips by getting the volume confirming. But clearly, if you look back, you'd see, well, we'd like to see that thing hold above VWAP. We'd like to see it hold outside of the opening range area. We've tested do we get out when it comes back in the opening range area, and that has whipsawed us out of some big winners. So we're saying, look, it's just the cost of doing business, right? Every business owner knows there's lost leaders, right? There's things where you say that's just going to be part of what I'm going to have to deal with, and saying that it's still overall been an effective strategy over multiple years looking back. So the beauty of the strategy course is you have zero overnight risk. You do not sweat anything overnight in the markets with a strategy. You also are not overpaying for option contracts. You're getting them relatively cheaply, getting plenty of leverage potential and plenty of opportunity. So you see, here's another one where this was the power of getting the risk-free trade and being able to ride out a drawdown. So you can see that we got that breakout right at the close. And so we're getting in close of that first confirmation bar with big volume, right? So we're actually getting to the start of that next bar right there. Okay. So we're trading just about 620 and 3/4. We're buying a 622 call. So you see, if we go from out of the money to a little bit in the money, gets up to about 622 and 1/4 here. We're up maybe about $1.50 on the Qs. That's only like about maybe 1/4% rally in the Qs. Good for 50% in the options. The 67 cents a contract turns into 101, 67 bucks, $101. And we're saying, thanks very much. We lock it down. Then we go through this drawdown. Guess what? You can bet down here at the worst of it, come about just before 11 o'clock, there right into 11 o'clock after we'd booked it in the neighborhood of about what, 10:05 after we got in about 9:45, 9:50 actually. 9:50, we're getting out maybe about 10:05, 10:10. So again, this is the power of getting in quickly. Sometimes you'll get your profits very, very fast. That happened to us this morning as well. Quick in, quick out. But the idea is that, okay, look, get your 50%. And then it was down probably over 50% at that low. So you say, hold on, why wouldn't you put your stop at break even? Why wouldn't you get out if it got back into your opening range area? Why wouldn't you get out if it broke VWAP? You can see how many different questions, and we'll get questions from newer subscribers. Why'd you do this? Why didn't you do that? But the idea is that the strategy is once you get to risk free, give it till 3:30. Why? Because you can see here, instead of stopping yourself out at break even on the rest or at lower, that you see we're able to take 131% on the last 4 contracts. So it's those little decisions tend to add up cumulatively over a longer period of trades in time in your favor by letting the winner run. So giving yourself the benefit of the doubt of, hey, you got your risk off the trade. Now give it a chance to roll. Now, sometimes it doesn't work out as well on the rest, right? So, what does it look like when you see one that didn't work out? This is one where it didn't happen, right? Where it didn't follow through. You see our breakout happening here, nice volume confirmation. You'd say, man, you're kind of late there. Aren't you chasing? Well, you see, the market's chasing. Institutions are chasing. Institutions are just like you and me. They want more of what's working, right? So when it's going up, and guess what? If institutions have cash on hand and they're underperforming, guess what they're going to do? They're going to look to the Qs to get higher beta, higher leverage, higher kick on the upside, and start to get more of that exposure. So the buying power is surging here. We paid 62 bucks a contract, got 16 of those, 11 to 16 sold at 93 bucks. And you see now we're out at a risk-free position. We're betting that even as it pulls back in here or pulls back in here, good chance that it can bounce back. Doesn't happen, right? We get all the way back to the opening range high there, and then you can see, look, our 330-ish area. We're like, okay, guess what? It's not even though we had more time, we're telling subscribers, look, just let it go, let it expire. It's not worth anything. And you say, oh man, you gave all your profit back. Well, we made 31 bucks. Well, guess what? With commissions, you're basically scratching it out at maybe only making if you paid $1 a contract, maybe you're only making 15 bucks. But the idea is that I'm not bragging about that. I'm just saying that's going to happen. But what I'm saying is that that's worth taking that risk to give up some part of your profit for the potential to make not just 100, but 300 or 500%, as we showed you on other examples. So showed you a bunch of calls recently. Now here's another put, and here's yet another example where you can see there's your immediate follow through on that volume breakdown here. And you can see we had to wait this out. As we're getting in here, you can see that we're not making our 50% through this slow burn down. Then as it retraces up, you can bet that we're probably down 25 or 30%. And then the trend keeps going to the downside, there's our 50% target hit at about 115. Now, what I love about this example here is that's 50%, right? That's a 5-0 right there. Okay. And you think, well, you don't have much time left, Price. Why are you guys going to hold this? It's 130. Why not just say take it and run? Well, because look what happened. In just the next 2 hours, from 130 to about 325, we get 500%. Say, how is that possible? Well, because we were trading into 584 here. By this area here, we're down to 580, right? We've got a 586 put. So as you pop down to 580 or so, you see like, oh, that's worth $6 intrinsically. You see that it has some time left. It pops down to basically about $7.50 intrinsic. We're out at 732 and saying thanks very much and not holding and hoping. You see by the end, you'll see volume pick up at the end of the day, regardless, almost. Because so you think that's meaningful that it's coming back up, but actually it's a lot of the other day traders, institutions, and individuals that are all like, okay, I'm clearing out some of what I might have put on to begin the day or from an earlier trade, right? So you get a lot of that volume surge. So don't necessarily make a lot of it at the end of the day. Okay. But you see that trade generates $1,586 when the person who just takes 50% of their whole position would only make what, about 8 contracts times about $51, $408 if you're just taking the 50% gain on the whole thing. Do you see how much more powerful that is? Yet another downside. This one was very fast. You can see that this is back in February 12th. Bought these for $1.34 on the 610 puts. We're about 612. Got our breakdown, and then you can see in by about 10:30, 10:35, we're beginning our first target. And literally by 11:15, we've gotten 500% because the Q's dropped from 612 down to about 604. 8 points. That's only like 1.33% on the Q's. 1.33% leads to 500%. To get the idea of how powerful this can be for you. $1,675. One more here. Another February example where you see the breakdown follow through. This one didn't happen right away. It happened closer about almost 10 o'clock. And then you see that, okay, here again, we're getting that follow through in about 30 minutes. Cheapy from 34 cents went to 51 cents and then eventually went to 204, right? So we're not afraid to buy the cheapies if we see that it's a powerful signal and that it tells us that we can get even more bang for the buck with still a manageable risk to stay in the position and not get stopped out. So this one, of course, went further down before it came back up. But again, it's better to take the bird in the hand. That makes $1,870 on that whole trade. So one more call trade that hit a time stop at 3:30 here-ish, or 3 o'clock-ish in this case. You can see we got the breakout. You can see it goes up, then it pauses. And again, so if you don't get filled right away, you can still keep your order working. If we haven't gotten our 50% gain yet, keep your order working. If you don't get filled on that first breakout, you get filled back into this. And then you see that it does hold that VWAP and moving average a couple times there. First time there, again, right at the noon hour. And then by about 12:20, it's taking our first profit. By the end of the day, the last 2 contracts, you finish up around 615 and a half. We're getting out 370, 224% on that final piece, $854. So how do you take advantage of this? I know I'm kind of tight on time here, so I want to show you a super special that Fausto has been so good to me over the years. I want to make it really attractive for Cyber Trading University group here to take advantage of this offer that I'm not going to keep out there very long. And I'm not a big fan of like 1 month trial periods. I really want you to see this over a longer period of time. And I give deep discounts to make you really want to be a long-term Big Trend subscriber. That's why we're 27 years and counting here at Big Trends, because we give a lot of value. We're not trying to take a bunch of money out of your trading account. We want you to see how good it is. And then typically people buy even more products from us over time as you have a good experience with one like this. So that's our objective. We want you to see great value and a great experience. And frankly, have your first reasonable winning trade pay for your entire longer term subscription. So I'm talking about 12 months to start here. The next year, and I'm going to make it even more attractive for you here in a minute. But basically, if you were buying off my website a month at a time for $297 a month, you'd have $3,500 plus of value invested for a year subscription. I'm going to scratch that in a dramatic way here. I'm going to say the first 25 traders here If I take it to 1297, I showed you a bunch of trades that could have made you 1500, 1800 or more, but I'm going to make it even more attractive. I'm going to take that 1297 and I'm going to say apply this special promo code that I just approved for Fausto in the event here today. Day 1000. Use that promo code on the page I'm about to give you, and it saves you an extra grand. Take an additional $1,000 off. Get 297 bucks for the next 12 months to cover you through this same date, June 11th of 2027. It's all yours at this link we set up just for the CTU event here, bigtrends.com/CTU. I want to show you how to apply it so you don't miss it before I'm done. Then I'll hand it back to Fausto here in a couple minutes. But basically, let me show you how this works. Go to bigtrends.com/CTU. Thanks for posting that for me. Basically, you'll see our order pages are incredibly simple. In my trading and in my life, I found that the KISS principle really does apply. We want to keep things as simple as possible and no simpler. I think Einstein said that. But keeping it simple really works much better. So we 1297, like I said, that alone, we started off there. That's a great value. But I said, look, for Fausto's group, let's do something special. So what we did is we set up this promo code. We even remind you on what you're getting here, 12 months of real-time trade alerts, plus all the supporting education, the support team that I have here at Big Trends there for you anytime you got a question. You can literally go up on that promo code that's mentioned there, day 1000, and copy it, or you can type it in. But if you copy it, you go over here to this link that says have a promo code. Yes, you do. It's the day 1000. You paste it in or you type it in. Day 1000, that promo code box. And then you got to hit the apply button. So hit that apply button, and then you see instant $1,000 savings. It's not going to be there very long. These spots are going to get snapped up quickly, that kind of value. Remember, we're talking about the next year's worth of trades in zero DTE. And again, like I said, it's not going to trade every single day, but it's going to give you plenty of trading opportunities. One trade could pay for that many times over, right? 297 bucks for the entire next year, 12 months access. Like I said, a year's worth 3,500 bucks. That's more than 90% off of a typical purchase off the website. Okay, so 297 when you apply that promo code, remember it, or it's on that page. Remember, especially remember this link here, bigtrends.com/CTU. Okay, a couple of quick frequently asked questions before I hand it back to Fausto. Also, by the way, I did a strategy session for all subscribers where I'd go through these settings specifically, how you could follow along, and then the FAQs real quick. We're just buying calls and puts. It's the simplest approach to buying options and getting massive leverage with zero DTE last day of the options life. And you're never left hanging. You know when to hold, when to get out in every single trade. And my support team's always here real time if you've got a question. Real time emails, and do get set up for the real time text alerts, which will send you off of that page. You can get signed up on that page with credit cards, or also we offer PayPal. Save you a lot of typing. Use PayPal and click through securely to your PayPal. You lock it in for 297 for the next year. Same day entries and exits. Our entry window is tight, right? So you're not waiting around all day for a trade. 9:50 to 10:05 is our only entry window. We had one of those today. So our next potential trade would be tomorrow morning. Okay. Same day exits at 3:30 at the latest, or if we get our 500% win or our 50% stop. How many trades a month? Up to 10 trades. I say 8 to 10 trades a month. A couple trades a week is a reasonable expectation. That gets you in the neighborhood of about 100 trades or more over your next year subscription, averaging less than 85 bucks a contract. So small account traders can take advantage of this with a lot of educational support. The strategy session detailing how you can use the settings and rules. I just ask that you keep that for yourself. Do not share this on the web. That's part of your terms and conditions. We've spent lots of years of research and testing to put this to work for our zero DTE options traders. A dedicated email you get to my analyst team. And again, one trade, like we showed you, the one that just happened last Friday, that trade made 1,700 bucks plus. And so the point is that for 297 to get that kind of potential return, I can't guarantee what any one trade's going to do. The bottom line is that make sure you take advantage of it. 12 months normally be a $3,500 value. It's yours today for only 297 bucks when you correctly apply that promo code. So make sure you note the promo code day 1000. It's shown on that page as well, and go to bigtrends.com/CTU and lock in your super savings, more than 90% off. Thanks to those who are already locking in the value. We're excited to serve you with real-time entry and exit instructions, never leave you hanging, and take advantage of the hottest trend in options trading, zero DTE options. So I'm gonna hand it back over to Faso. Faso, thank you so much for having me. It's always a pleasure to share with all your group what our latest innovations are here at Big Trends, and look forward to seeing you soon, my friend.
No problem, Price. Thank you very much. But I got one last thing to ask you before you go. Did you
Yes.
pick? What did you pick for the Belmont Stakes?
Well, I liked the Golden Tempo, but of course everybody else did because of course he won the Derby. He's a beautiful horse. Phipps family that owns him. They got massive. I know you're a New Yorker, massive New York racing connections going back generations. So I was really happy for them to get the win. And he's a beautiful closer.
That was
He
incredible.
dead last to first, especially in the Derby. I mean, it shows you that last little quarter mile is a long way for most horses that have never gone that far. So yeah, it was a phenomenal Derby, and we're excited for Golden Tempo and the Phipps family doing so well there.
No, that's awesome. And by the way, they're having the opening of Belmont next year, so they know they're having the Breeders' Cup here. So hopefully we'll get to meet you. Hopefully we'll get you over here.
I'd love to be there with you, my friend.
Thanks again. All right,
Thanks, Fosto.
no problem. So I'm going to take over from here. And by the way, there's this offer. Just go to bigtrends.com/CTU and get that promo. Now, what I'd like to do is let me take over the screen over here really quick and share the screen. There we go. Perfect. All right. So I want to bring in my next guest. Okay. So hopefully you guys have been enjoying everything here at Cybertrade University. Remember, all these classes have been recorded for you. So if you can't listen to everybody, you can always go back or be on your dashboard. And also remember, we got a lot of great promotions. We got $1 million giveaway for all Canadians. That with Mumu, we also got a bit. You also got Tom Sosnoff giving away $1 million away in crypto stock. So we have a lot of money being given away and a lot of great gifts, and most importantly, great education. So, but with that, let me bring on my next favorite guest in here, and I've known this person for, like I said, everybody in here has been over for 20 years. Greg Capper, just to let you know, I've known him and I respect him, everything he's done. He's one of the true pioneers of online trading and is one of the best educators in the industry that I've seen. I mean, at the end of the day, when someone's been trading as long as he has, I mean, he's obviously doing something right. I've been with him at the Money Show event. You probably remember him. He started a company called Pristine Trading. Greg always had, I have to say, had the best looking boots out there. And it seems like everywhere he was there, he was packed with people. Traders always gathered around him because he just had a great wealth of knowledge that people are learning from. Now, Greg has been through a lot of market cycles, just like I've been together. We've seen some good times, some bad times. And if you can survive all that, you could survive anything. He spent years building, fine tuning his trading strategy. And that's why many traders respect him. I always laugh thinking about the old days before social media and email marketing. But I think Greg will tell you this, but he used to send out faxes back in the day. It was trading ideas, market updates. Always got a kick out of that. Some of you guys remember that, but that's how we communicated back then. And things have changed, obviously. But one thing that hasn't is Greg's passion to teaching people. Now, after building Pristine into one of the most respected names in education, Greg started his new company, Master Trader, where he continues to teach and share his knowledge. And that's for decades. That's why we have him back here. He's taught everybody from individual traders, money managers, market makers. He's written books. He won trading competitions. He's helped thousands, tens of thousands of traders to improve his skills. But more than that, Greg's a great guy. He's a great teacher. He is someone I always enjoy learning from, and that's why I have him here. So let's give him a warm welcome, my good friend, Greg Capper. Greg from Master Trader. It's Greg, welcome aboard, and look forward to hearing what you have to teach everyone today.
Thank you, Fausto. After that intro, I'm blushing. I'm honored. Thank you, and I don't think I need to say anything more. I mean, you know enough. Go to Master Trader and get to know what I do. But I'm going to give you a great presentation. So, thank you, Frenchie. So let me put my screen up, and I'll let's get going here. So my way of doing these presentations is to teach you something you can start using today. Right? It's 12 o'clock. By 1 o'clock, I'll be done. And you'll listen to the other presenters, of course, but you can start to assimilate what I'm going to share with you and start using it immediately. And let's do it. If you have questions, you're welcome to put them in there. I love questions. Fausto gave you some insight as to my past. And here it is. Let me get a little pointer out here. And this. Oh, there we go. Okay. Yeah. So some insights into that. And I'd like to everyone to know, as long as I've been doing this, teaching others, as Fausto says is here, hedge fund managers, specialists, market makers. I thought they were gods. I found out they were not. Prop traders, people in the industry that now either work for education companies or they have their own. You can read about some on my website. But yeah, back in the 80s, I didn't know anything. There wasn't much information out there. Hey, Andre, there wasn't a lot of information. So there was pluses and minuses to that because I was searching for information. I could get information in the mail, stuff mailed to me, could find out who was doing it. And, eventually the internet became what it is today and more and more and more. So yeah, I used to send out fax letters. I had fax machines going out all night. I had a 800 hotline. People can get advice. The first online chat room ever. You couldn't talk. You could only type. Offices, which became, the brick and mortar became an extinct, a dinosaur, as well as the hotel seminars, which I used to do. This was the old days where we used to do it. And as Fausto mentioned, we used to go to traders expos. I mean, some people still do, but they've become more events for software and brokerage firms. So I sold all that off in 2015. Those were all recordings. I used to do the trading challenges, so on and so forth. What I said. There's the booth. You really don't get an appreciation of this gigantic booth that was there. It was such fun. Back at the time, this was 1999. Everybody said party like it's 1999. It was an amazing time. That was the first one. That's me in the middle. And, the concept was 3 T's, right? Training, trading, and technology. This was the logo of the old company. Master Trader used to be, I think, probably the first online retail brokerage firm, which eventually all of those big brokerage firms took over the industry that said, stay away from those day traders, you lose all your money. Now they're the ones that telling you to come and, day trade over there, great commissions and so on and so forth. But, it was a long, long, long time ago, we're talking decades now. And so now there's Master Trader continuing to teach investors and traders how to do it themselves, self-sufficient, self-reliant. You're running your business. Yes, I can tell you what to do. Right? We do that in our chat room, our green room every day. It's called our newsletters. We tell you, give advice, but everything comes with education. That's my primary focus. When someone becomes a member, a subscriber, a student, is to educate you to become self-reliant. And let me tell you what we do, how we do it, how I do it. And while there has been changes over the years, because the markets environments have changed, they've changed drastically in the last several months or a year. Wars, AI, but we've seen these kind of changes, in the past. They're different, but the same, meaning, the evolution of the internet and the type of companies and the hype and what was hyped up and what crashed and burnt, right? The crash and burn will come again. But it all comes down to you and learning. So some of the things that I've learned, because I followed the path that everybody does. How do you get started in this industry today? Well, you come to events like this, which are great. You can come and kick the tires. You can listen. Does that sound reasonable to me? Does that strike a chord with me that it's for me? Would I like to do that? You might, and certain things you might think you like to do. So a lot of traders think they want to be day traders. The activity is great, but it's like, are you ready to drive a Ferrari and you don't even have a driver's license? Things happen fast. Decisions have to happen fast. You need a process. So that's part of your learning curve. So slow down. That's one of my biggest advices for you. Slow down. You know, learn something, test it, go slow. But part of the path is the indicator-based methodology. Stochastics, MACD, Elliott wave, GAN, speed lines, trend lines, whatever. I saw on a website where they advertised over 400 indicators and over 100,000 others that were built on. And think about the settings. Which one do you pick? Which one? Which settings? It's insane. Well, it wasn't that bad when I started out, but there were plenty of indicators and there was still the settings. So it just evolved and grew on itself. Ultimately, you come full circle. Price is king. Everything else is secondary. I look at it in a candlestick format. Why? Because it creates pictures that I can see. You could look at it in a bar chart, but I can see these pictures set up with a void. What's a void? We'll look at a few charts, but in essence, it's an absence of support and resistance. For example, something making new all-time highs. It's an absence of any overhead resistance. Bar by bar analysis. This is a very powerful concept. I created a whole course on this in detail for day traders, for swing traders. And it became so powerful over the years. But when I first came up with this concept, it wasn't based on the power of how I use it today. It was based on controlling emotions. Once you're in a trade and you're long and you see a red candle and you're new to this, you're like, oh my God, sellers, red candle, maybe I better get out. And so you have to put these candles in the context of what preceded it. And then you have ongoing information to guide you with your initial bias. Trend analysis. So one of my pet peeves, if you've heard me speak before, is the indicator-based methodology. Maybe because I spent so much time trying to figure it out and I couldn't, honestly, but I found so much subjectivity to it that I could never gain confidence in it. So trend analysis, trend lines, yeah, forget that. Broke the line, goes right back up above the line, or vice versa. So you have to define exactly in a black and white format. How do I define a trend? Is it up, down, or sideways? Without fib lines, VWAPs, any of that. If you want to add something like we do, if when we're day trading, the Qs or the futures or leverage ETFs, we use a trader pivot lines. It's another discussion. But one thing I will tell you, if you're going to put anything on your chart, make sure that the majority of other traders are looking at the same thing. Forget the proprietary stuff. Trader pivot lines, if you're a day trader trading the Qs or futures, whether you're a 5-minute chart, a 2-minute chart, a 15-minute chart, they're all in the same place. So trader, it's a self-fulfilling prophecy. Let me put it that way. Technical analysis is a self-fulfilling prophecy. The whole thing, there's nothing new about it. It's how you put it together. That's the art of it. And multiple timeframes, which we're going to talk about today. Support and resistance. Look to the left. You don't need anything proprietary. It's not about the squiggly lines on the chart. Prior swing low, high, congestion, relative strength and weakness. If something, the market's going down and something is going sideways, it's showing relative strength. If it's going up, it's even stronger. These are secondary, but they can be useful, which I'll show you. What are the broader markets doing? Broader markets right now are so confused. They're correcting. It's day to day, big up, big down, inside days, outside days. a bit of insane. You need a way to interpret that, because we're all here to make money, but sometimes the markets are not, let's say, agreeable for your perspective on any given day, or they're choppy. Internals, market internals and intermarket analysis, they're helpful. This is the big giant one, the gorilla. Position and money management. I've been teaching for a long time. This is the part that the fewest people are interested in, money management. And if you're new to this, you'll say, come on, Greg, that cannot be. I'm telling you, I have an amazing money management course. That's the candlesticks. Oh, yeah. Money management. Yeah. Once you're doing this for a while, and if you think you need a psychiatrist because of your trading making you crazy, it's probably because you haven't embraced money management yet, because these two are intertwined. And without these two, you can't make this work. That's my opinion. And so all of these create strategies. That's what Master Trader Technical Strategies is about, combining these. And there are, let's say, subsections within these big sections. All right. Why are they losing money? You hear it, 90%, 80%, whatever it is, they're losing money. Why? Well, it's not because they don't have enough indicators. That's for sure. Right? They're losing because they're making decisions from the wrong time frame. Yeah. A lot of traders gravitate toward 1 minute charts and 2 minute charts. It's too fast. Right? Some of them, are using 30-second charts, or like 16 tick charts or 10-second charts. It's kind of crazy, And so, as I said, things moving really fast. They're mixing time frames that don't match their goal, right? Which we'll cover. And they're doing trades where the larger picture and the entry are not aligned. So these are relatively simple things. Most things in life are, but you need someone to show you how to put it together. And that's what we're doing here, right? So let's understand multiple time frames. Our goal here is to build a thought process. 5-second candle on one Nasdaq prop trading firm scalping. Yeah, well, you'll generate lots of commissions. Are they making money off your commissions, Patricia? Yeah, you'll push that button in and out. I can tell you a lot of stories over the years. This prop data trader rule that's going away, why was it created? Because it was created because of a trading firm that not even hired traders, they brought in traders to trade. It was called Attain. And the guy lost all of his money, went back and shot everybody. Eventually blew his own brains out after he shot everybody in the office. And so from there, politicians said, oh, we need a trading rule to protect these people from themselves. Yet you can trade futures, you can trade Bitcoin, you can trade all of these risky things to lose all your money, or you can go take a test, which is now going away. Bravo for that. So multiple time frames. For longs, we're going to take a longer time frame and an uptrend, buy at support. Pullbacks to price support. Smaller time frame, we're looking for bases or reversals. This is a big one. Enter near support. If you're going to buy long, if you just refrain from chasing, or you let it break out, and sometimes it'll keep going. Most time it's going to pull back. If you buy pullbacks or let it consolidate, that builds a new support area, you're in where the buyers were before. That's where the demand is. And we have to have a stop loss. If anybody's telling you to place a trade and they're not giving you a stop loss, run the other way. Okay? Money management. For shorts, it's just the opposite. Back, larger time frame in a downtrend, price are at resistance, rallies into resistance, smaller time frame. We're aligning these. I'm getting a bias. We're building a thought process. Smaller time frame rolling over, could be a breakdown. These patterns form in different ways. Our entry is near where the supply is. These words are interchangeable, resistance and supply. I like to relate things to technical terms to how people think. What are they doing there? Why is that resistance? Because there's supply. It's because somebody wants to sell there, or they did sell there. They're going to sell there. The stop above that pattern. Why? Because That's where the supply is. Once it starts to roll over, we need confirmation. It shouldn't go back above there. It's that simple. Right? So multiple time frame analysis is about alignment. It's a little picture here. Are they aligned? Right? For longs, larger time frame should support a bias. Hey, it's going up in the longer time frame. If you're a swing trader, that's your weekly time frame. If you're a day trader, you have a choice. What are you going to use for your higher time frame? I'll show you what I use. And for shorts, the larger time frame should support a bearish bias. Pretty simple so far, right? Nothing esoteric, nothing hard to understand. Smaller time frame, entries near resistance. And it keeps focused on that bigger picture. What's so hard about that? Patience, discipline, not happening on that given day. You're itching to press the button. All right. So why do we use multiple time frames? I have to create a bias, an entry, a thought process, right? Creating your thinking. Now, if you want a red light, green light system, this isn't it. This is not it. I'm telling you right now, this is not it. If you want to think in a constructive, systematic way, this is for you. Multiple time frame analysis is not about looking at more charts. Ask these questions. Where are prices going? Where are the buyers and sellers? What's the larger time frame bias? Where's support and resistance? Is there a smaller time frame entry pattern? This is the beginning of the trading plan. And so this big blue line, right, without looking at candles or moving averages or volume, it's going up. I have a long bias. Weekly time frame, I've got a long bias. Daily time frame is my entry. If I'm a day trader, and I use a 65-minute chart as my big picture bias of what's going on there. If I see something that's been in a downtrend, the 65-minute is bottoming, and it's got room to go up, my thought is breakout. It's in an uptrend. It's gone sideways for a while. It's building support. It's got room to go up. My bias is it's going to go up. Now, I usually don't use the 15-minute chart until the latter part of the day, where pricing maybe gets a little squiggly. After lunchtime, things settle down or around lunchtime, and I may want to condense the data. And so one of my concepts is, if you're looking at your time frame of choice, say it's the 5-minute, and it's like, I can't make sense out of that. The bars are going up, down, sideways, overlapping each other. Condense it. Remove some of that activity and see if it makes sense. If it doesn't make sense, I'm telling you, don't trade. It's not something you want to trade. You can move on to something else. Right? We have choices. So as it ebbs up and down here, I'm thinking be a buyer. The big picture's up. It's pulling back towards support. Be a buyer. Now we have to look at and find an actual pattern. Right? These are just lines. So as we look at candlesticks, I can look at individual candlesticks that tell me buyers are stepping up. Well, let's stick with the multiple time frames here for a moment. So I talk about monthly time frame, but from a swing trading perspective, and if you're an investor, right, looking for a bigger picture, right, you could look at that monthly and say, hey, what's it doing? Once I see what it's done and I see, hey, that's a rounding top. Somebody might have some fancy names for that, but I just see it was going up, it came down, it went up, back and forth, it broke down. Support's down here. I think it's going to go down there. Okay, fine. I don't need that anymore. Weekly time frame. It's in a downtrend. So it's moving down. It's the same point in time here. It's going down. I think it's going to go down there. I'm aligned. Daily time frame. It's going down. Right? 20 pointing down. 50, these are simple moving averages. 200 pointing down. I'm going to show you how this one chart tells me what's going on over here. Right? Where is it an actionable setup? It's actionable here on a breakdown. Right? It's actionable here on a retracement pattern. Over here, it's moved too far already, but that's not our focus right now. But our focus is once I have a bias, I need patterns that tell me it's time to act. So these three charts, stock is being sold. It's undeniable. Now, someone might have some kind of, I don't know, different indicators, some fancy thing, Elliott wave, or something else. For me, it's pretty simple. The trend is down. Support is down here. I believe it's going to keep going down. So if I'm going to focus on this, the next step is to find a pattern in alignment with my bias. That's it. Right? All traders are working together. What does that mean? Well, it means that all these time frames create thoughts and beliefs. And everybody, other than those that are trying to scalp little counter trend moves, believe that this stock is going to go down. They're looking to sell. They're either selling or they're looking to sell. That's a big help for us. So for day trading, we just change the time frames. It's the same method. We're just changing time frames. It's a sense of top-down analysis. My presentation here isn't about incorporating the bias from the broader markets, but that's exactly what I do in my advisory swing and options trader, which I'm going to give you an access to last week's letter. And you can see exactly that top-down analysis of what's happening in the broader markets, in the S&P sectors, breakdowns of those sectors. And from there, we look at individual stocks. And then I combine the market internals with that. So day trading, daily is up 20, 50, 200. 65-minute, the 20 is pointing up. I believe it's going to go higher. I'm looking for pullbacks. Pullbacks like this, consolidations like this. This is what I call this is bullish price action. What does that mean? You might think. That means it's at resistance and it's not pulling back anymore. It's going sideways at resistance. I look at individual bars, bar by bar analysis. They give us tells as to what's happening. It went down and it came back up again. That means there are traders down here buying dips, which could be in this time frame. They're buying dips. So on the 5-minute chart, which is where I want to find opportunities like this, 20, 60. Why is 60? It's equal to the 20 on the 15-minute chart. This tells me that the 20 on the 15-minute chart is pointing up. This is telling me that the hourly chart is pointing up. Nothing magical about them. It's just a good way to use moving averages versus a subjective way of saying, oh, it's a 200 period moving average. No, look, it's related to a higher time frame. I know all three time frames are up. That's my bias. This is the kind of pattern that I'm looking for, a pullback pattern. I call this a bottoming tail bar. A candlestick book probably has some other fancy name for it, a hammer or an inverted hammer. There's got shooting stars and all this fancy stuff. For me, it went down and it came back up. Buyers are in control. You see that here. Buyers are in control. It was a retest pattern. Buy it. It should go up. So this is where we have, it says our stop and management. Now, climactic moves. What is that? That means climactic moves, I can be a counter trend trader at certain times, but things that have to move dramatically. It has to become climactic. For longs, it's got to have gone down for a while. Or I don't like climactics on the upside. What I found over all these years is that buyers don't give up control as easy as sellers do. Meaning longs will throw it up at the bottom easily. Bulls don't throw it up at the top so easy. There are patterns that imply that, but look at the semiconductors. They were up 50%, some of them, 70%, 100%, 150%. This is not normal, what happened recently. It's not normal at all. But historically, I can tell you over decades that buyers do not throw in the towel as fast as those that are long and want to get out longs. Climactic on the downside is much more emotional than on the upside. There's emotions connected to both, but when it's going up, I would say greed is much more powerful than fear at a certain time. Right? Fear eventually, all these emotions eventually evolve to a point where it's either a fear of missing out or the pain becomes so unbearable that it forms patterns that communicate to us of that I had to get in at any moment because I'm going to miss, it's going to keep going up, or I have to get out now because I am so convinced after holding this loser. For a day trader, you could have been holding it all day. Or as a swing trader, you might have been holding it for a few months. And you're so convinced now that it's going to continue, you got to get out. It forms pictures of what that looks like. How do I know that? Because at one time that was me. And as to reviewing all the charts, I was like, how the hell did you sell the low? And you start keeping a journal and you're like, that's what that looks like. That's what capitulation looks like. That's what throwing up looks like at the bottom. So pictures, right? Technical analysis, I said, is a self-fulfilling prophecy, and it's pictures that communicate to us what others are thinking and what are they going to do next. So here, bigger picture, entry point. Here's my swing trader. There's a calculation, if you need it, with the bars and how, what they mean on different time frames. But in this swing trading chart, it's going up. For day trading, I set up my 5-minute chart like that. So for swing trading, I look at this chart. I can look at a weekly chart, but I know the weekly chart's bullish. Now I'm looking for a picture that's alignment with my bias, that this, at the point in time that this is ready to keep going up. So one of the things I mentioned in our trading room, we have discussions in there almost on a daily basis on different concepts and trading strategies. And a new subscriber in the room is more of an investor, and entry points would not as much of a concern. Everybody's concerned with losses, not so much of a concern with the exact entry, which is fine as long as you have money management. And I explained to that person that our method, our style, is to look for a moment in time that's going to pay me right now. I believe it's going to pay me right now. So patterns like this that pull back within an uptrend, multiple timeframes in an uptrend, I believe buying patterns like this are going to pay me right now. This is even a better one where it's got this little bit more of a rounding bottom. So when I look at patterns, they communicate to me that buyers are in control or sellers are in control, or partially they're losing control. But I'm looking for moments in time to act where something's going to move in the direction that I believe it will very quickly. I'm not looking to enter something. If I have to swing trade, I'm expecting something to pay me over the next several days. If I'm looking at a day trade, I'm looking for something to start going in my favor. 5-minute chart, you should start moving in my favor within the next 10 minutes. I'm reevaluating. I may not do anything at that time, but that's my expectation, right? Trading methods create expectations. The idea, again, is all traders are working together. Why are they working together? Because the ones on the 15-minute chart are thinking it's going up. The ones on the 60 or 65-minute chart believe it's going up. So we all think it's going up on this particular day. Now, where are there going to be buyers? Well, there'll be buyers on breakouts like this. There'll be buyers on pullbacks like this. There'll be buyers where prices pull back a small amount. Prices are becoming a little more bullish. Buyers are stepping up more aggressively. Over here, they were less aggressive, but they're going to show up. And over here, for whatever, at that point in time in the day, they're starting to lose control. I can see this objectively. So the bullish move on the 5-minute chart is over. And then stay away, let it regroup. Right? Now they're not in alignment anymore. So just stay away. They're not all facing down. So I'm not shorting that either. So this is part of a review why do you use a 65-minute chart instead of a 60? Good question. I use that, and I use the 60 for many, many years. What you find is that it's a fact that when a 60-minute chart, either the first half hour or the last half hour is going to be the bar, and all the other bars are 60 minutes. Now, that's really not a problem. But the problem is that software packages aren't unified in that. Some will make the first bar the 30-minute bar. Some will make the last bar the 30-minute bar. With a 65-minute bar, all the bars are equal, right? 65 minutes. As I said before, in technical analysis, you don't want to be proprietary. You don't want to be looking at a 21-day moving average or some Fibonacci number moving average exponential if you are swing trading the daily time frame. You want to look at exactly what everybody else is looking at. It's a self-fulfilling prophecy. So what? Lower time frames are populated with algos. I'm not trading 1-minute charts. I know where the algos are going to operate. So here's a concept algos do. It's become some fancy name, not liquidity hunts, they call them. Well, I've been trading what's called liquidity hunts for almost 30 years. What is that? I call it a greater than 100% retracement. It's taking out the stops. It's a washout. Look for it to reverse. Well, people figure that out after all these years. I figured that out decades ago. So they know where stops are at. So don't trade from the 5-second chart. That's a razor blade that's going to chop you to pieces. Don't trade from a 10-second chart. You get me going. You know what? Come into the green room with me, ask questions. In the first day, you will learn so much, you won't believe it. But think about trading this way. They're pictures of others' beliefs and expectations created with money. That's what technical analysis is. We're pattern traders. Think about what is creating your beliefs to trade. Is it an Ichikumi cloud wrapped with a stochastics and a MACD? You're going to have brain damage, folks. Patterns communicate how traders have acted. What are their beliefs? What are their expectations in the time frame at that moment? These candles, bar by bar analysis, tell us what those expectations are on an ongoing basis. We have to put that together with the bigger picture. Right? One candle doesn't mean a lot, but it could. Like last Friday, that was a big, giant red candle. Of course, it meant much more than the prior ones did. It broke down. So it's candle language. They tell us what other traders are thinking. So candles, yeah, I use them every day. Don't trade without them. Don't care what they're called. I'm going to have my own names: bullish 180s, retest reversals, bottoming tail bars. This is a bottom. I call it a downside shakeout. Some might call it a head and shoulders bottom. It communicates to me if this is in an uptrend, buyers are stepping in. Sometimes where there's a little more uncertainty, you get a bottoming tail bar, you get a gap down, and buyers step up again. This picture tells me buyers step up on the dip and they drove it higher. This gap down, no one cared that it gapped down, and they drove it right back up again. With a poker analogy, the institutions are showing me their hand. Right? They showed me their hand. Right? They're sitting there on the bid. I don't care that it's down there. It's cheap. And it gapped down. It was cheap, but it went up. It didn't gap down there and stay down there. And if it gapped down there and stayed down there and it's still a red bar at the end of the day or at the end of 30 minutes, and this is in a downtrend, you can start thinking short. It becomes common sense. Bigger bottoms happen where there's greater uncertainty. When traders are confident, big bottoms don't happen. This communicates uncertainty. Took a longer period of time. Something's been in a downtrend for a long time. Gets a big bottoming type of pattern like this, it should go up. So what's next? These pictures tell us that it should go up. Now, nothing proprietary here, but we're putting together that thought building process. Where are buyers? Buyers act at support. They act where they believe there's going to be demand. that buyers are going to come in again. Traders working together. This was in a downtrend, moving down. Why did they step up here? I have no idea. Well, could be prior support. But the point is, I'm not looking to buy a bottom in a downtrend. But after I see a move like that, that tells me that they were so aggressive that they're going to show up on pullbacks. So that gives me my bias. Supply, resistance, they keep coming in. This is more of the type of a pattern that happens in a bull market. And you can call it a head and shoulders top, call it whatever. It goes up. They sold again. It's distribution, and it happens over time. We can't get so caught up on the exact patterns to say it has to form this way, or, there's nothing you can do. You have to understand that different patterns happen in different ways over time. Different market environments influence what's happening in the moment. And whether it's like semiconductors now or AI stocks, people are making money, they're doing well. They're correcting now a bit. It isn't that severe yet. So these kind of patterns happen over time. And what that means is this bullish belief begins to dissipate a bit. It's in question. Why is it in question? Something's happening in that industry. Right? It could be semiconductors, it could be oil, it could be gold. It doesn't matter. It's all the same. It's about human beings trading. But that confidence that was happening is dissipating. And over time, it gets less and less and less, to the point where it's like, oh, crap. Right? It's not going back up anymore. I heard a money manager yesterday say, yeah, Apple's down a lot, but I'm not selling it. It's still above the 50 MA. It's like, okay, that's his line in the sand. Good to know. Look at Google today. Look at Google today. I shorted Google, leveraged Google ETF, right? GGLL, because of the underlying. Yesterday, Google closed under its 50-day moving average, and it's got room to go lower. And it went sideways at that 50 for over a week. Take a look. Right? And now it's breaking down. So you want to know what others think. What is their trigger? Right? What pattern is their trigger? And money managers, it could be a 50 MA, it could be a 200 MA. So a little recap what we've been talking here. Price patterns communicate to us what others are thinking. Trends tell us what they're thinking together. Right? It's in an uptrend, higher highs and higher lows. Location. Right? Trend, location, patterns. We're looking for alignment. Right? So this is what gives us a high probability putting this together. Right? As it says, one concept is not a strategy. We take all of this and we put it together, and as where it's aligned gives us an entry point. Let's look at a few examples. Right? 5-minute chart. What's the pattern here? What does it tell you? What are the trends? Should be real easy. 5 is down, 15 is down, hourly is down. It went down a lot. These little dots here, this is not proprietary. They're marked, I call them pivots. Other platforms call them fractals. All you do, some call them pivots, right? Whatever, you just set that to 3. 3 lower bar highs to the left and right, or 3 higher low bars to the left and right. Creating little support and resistance areas. Then a downtrend. It breaks down. This happened the other day, not yesterday, the day before yesterday. If you go look at your 5-minute chart of the diamonds or Qs, and prices were bottoming, especially of the diamonds. And then there was a moment on the 5-minute chart, it spiked down like that. It was like, what the hell happened? More news? Maybe there was. And then it ripped right back up again like this. I was like, that's a bottom. And what happened that day, if you go and look at what happened intraday, that's what formed that big bottoming tail bar, right? That day. where prices started rallying back up again. But there's a bottoming pattern. So this could be a counter trend trade setup. Buyers stepped up. This was shorts got killed on this at this moment in time that shorted this breakdown. It wasn't time to act yet, but it tells me what to think at this point. And it might start rallying up again, right? Where these come to alignment. A lot of times what happens, interestingly, that this 15-minute moving average, this is a 15-minute chart, the 20 MA, and the 20 on the 5 here, they begin to pinch together right around 215, 230, and you get moves from there. People come back from lunch. I don't know, I just seen it happen a lot, right? So don't trade long against a downtrend. Look for trend alignment. That's what puts the odds in your favor. All right. A couple of more examples. So this is a great swing setup here, right? This is a power move. The slide only around 60% of the time, the sideways only trends, whatever that, I'm not sure what that means, Dalio, but come into my green room, take a trial, and we can have lots of discussions. So power move up above the moving averages. There's a little pullback pattern, a 3-bar pullback. There's probably some name for that. That's a long setup, no brainer to me. Press the button, see what happens. Stop under here. Now here, similar pattern. I say it's not a great setup. And this is some distribution. It pulled back. So the trend is in question. There's still, there's a rising 50 MA there. Buyers are beginning to set up, but this is not having everything aligned where prices are above the moving averages. The moving averages are what I call stacked 20, above and rising above the 50, 50 above the 200. So that's a positive. That's a scan that I look for. But that's not one of my patterns that I'm looking for. And I did a chart of the week. Go to the website. And the only reason I didn't recommend this, there wasn't a pattern at the time, but I wrote a chart of the week over the weekend. And about this stock, Casey's, Casey General Stores. And it was reported earnings on the 9th. And so the pattern was setting up. The weekly was in an uptrend, which is what I explained how to utilize this information in multiple timeframes. It had pulled back to price support. And I said, we look for a pattern here for a reversal for a long. Well, I said, but it's going to report earnings, so we're not going to trade it again ahead of the earnings. I was providing the thought process. And so it rattled around that day, and then it gapped up on the earnings. I think it's around here now. But I can take a look. Actually, it gapped up and it went up to $920 in one day, so it's been some incredible, crazy moves in this market. But it's up here right now, and it's consolidating up there today. Yesterday it gapped up to 800 and it went all the way up there. But the chart suggested that this was a higher probability because buyers were in control and it had pulled back. And it was going to report the earnings, and then it came out. So we're beginning to wash, repeat here with our foundational thought process. Alignment, 20, 50 declining under, prices coming up into the moving averages. What was support becomes resistance, basic stuff, breaks down, retraces to where the sellers are. Now, bar by bar analysis. This bar right here, this was the nail in the coffin, so to speak. And as this is moving up into this area, I know that this is where there's going to be sellers. I know it. This bar was like, you just showed me your hand again. It broke out above the highs into this area where all the supply is, and it came all the way back down again. Shorted under the low. Share size it accordingly. I'll show you what I mean by that in a moment. Share size it up here so that if it goes up there, anything can happen. you're going to lose a certain amount of money that you are willing to lose. All right. Money management is the key. Then it's like, how are you going to manage this, trailing it bar by bar and by pivots, right? But the odds are it was going to go down. 5-minute intraday, we do the same thing. Look, we're just changing time frames. 65 minutes in a downtrend, make this gap down that morning. And at that point, a lot of traders trade gap fills, meaning they will fade the move down at some point, looking for it to fill the gap to sell it, or they are looking to short into the gap. Right? So I created a whole gap trading course on trading gaps. Some people just, that's all they do. It's great. You got to have a constructive way to do it. Sometimes things don't move very much. Like right now, the market is dead. Right? It started up, it went down, it came back up again. It's just not doing anything. It's waiting for something, maybe the SpaceX tomorrow, right? But its market is dead right now. But a lot of times, like I said, around 2 o'clock in a downtrend, the psychology of this pattern is, oh, maybe I'm going to sell into the gap fill, or I shorted, I'm waiting. It went up, some get out. It's about patience. Traders lose patience, especially if they're thinking long. They bought down here thinking it was going to go up. They lose patience. And so at this point in time, right, lunch hour time is over. Traders come back. Breakdowns work. It got real tight over here. And notice when it broke down, see these little pivots? There's going to be buy orders down here every single time. This is what the algos do. Right? It comes down. They know this concept of pivots. And so when it comes down there are bids down there. They're going to be buyers. Now, they're in and out, right? So now, as it comes down there again and it doesn't bounce up, that's your tell. These little green bars that don't follow through to the upside, that's your tell. See this bar right there? This is the power of bar by bar analysis. It tried to go up and it came back down again. It's incredible stuff. Right? So now this is the capitulation at the end of the day. Right? They're long, they're buying, it's going to go up. It doesn't go up. Maybe there's a chance. Oh, there's no chance. I better hit the bid. Everybody is selling. Get the hell out. And they're like, I don't want the hot potato. There's very few bids. So it collapses and it goes down. As I said, we're building a thought process. I've given you a huge amount of that thought process. This is the typical route that traders follow. Yeah. Even back when I started in the late 80s, there wasn't all the indicators that there were, but there were lots of them in different settings. And it's like you're always questioning which one, which settings. Oh, please. And so I created my own indicators back then. I thought, oh, if I can make a better mousetrap. No, stop chasing the indicators and the settings, never understanding why it doesn't work. And sometimes it does work. You see it in the past, it worked. Why isn't it working for you? Move over, master trader technical strategies, understanding multiple timeframes, trend, price patterns, location, risk management. This is your key. Right? Indicators can be a tool. You know how I use indicators? I use them like an ADX, DI plus, DI minus, things like that to define trends and scans. Is the 20 above the 50? Is the 50 above the 100? Is the 100 above the 200? Is the 20 pointing up above the 50? That creates a structure of telling software what to look for. And if you think AI is these people that now are selling AI to tell you what to do, this was the same thing back in the 90s with the red light, green light systems. It's the same thing. It's just a replay now. Now it's AI that's going to make you $1 million. It's not going to happen, folks. But as people learn how to tell AI the right thing for you, the way you want to trade, that could be helpful. But you're going to take someone else's, indicator-based system It's going to tell you to trade when MACD turns green above the 0 line and the stochastic is below 20 and all of this. It's been done before. Think about what's creating your beliefs. And this is part of what I just explained to you, what your edge is. Master Trader Technical Strategies, the thought building process. If you're questioning what you're doing right now, you're questioning your beliefs about what you were told works. And why did it work? Why does it sometimes work? How to understand different types of days like today that's going nowhere. We have an expression, SOH, sit on your hands. Right? Nothing's happening here. Yes, institutional traders are the ones causing most of them, but their algorithms are doing, but you can't compete with that. You have to know your limitations. Don't go trade the 5-second chart or the 10-second chart or the 30-second chart. Move away from where they're not there and give things more room so that they can fluctuate. Right? Basic money management. Basic money management. Right? Your checklist, share sizing. I just took a number, $100,000 account, break it up into 4 trades, risk per trade, $300. This is what keeps you in the game. Share sizing, figure some slippage. And once you do that and you know, this is my entry, this is my stop. Stop is where my trade isn't working. I'm going to get out. It's my entry. You got to know what's your potential target. Where might it go? That's part of a plan. Your stop is your guarantee, your partial guarantee that you're not going to lose all your money. You're not sitting there with your pants down, right, being exposed and losing a large chunk of money because you've put in your stop. And there's no reason today's day and age with the software that your stop isn't automated and in there taking you out of the trade without you thinking about it. Right? Thinking can become dangerous when it comes to whether you're going to stop out or not. Right? Whatever your loss can be, these are calculated losses based on what's acceptable to you. Right? You can adjust this based on what's acceptable to you. Right? Keeps you in the game, especially when you're starting out. You shouldn't even trade for money when you're starting out. You should trade to define your trading plan, your methodology. And, oh, it worked today. Why didn't it work today? The market environment was like this. You're learning. You're in a learning mode. Right? I created this with AI. You can't create this with AI. You got to know it. You got to know what to tell AI to make. It's an amazing thing. But if you don't know what to tell it, it's like having, a bazooka without the shells, or you don't know which way to point it. So AI, tell me what to do. Right? There are plenty on there now that they're going to sell you their AI. Tell me what to do and when to place the trade. This is what I'm telling you. Price action, multiple time frames, pivots, market internals, risk management. Keeping a trading journal is about telling you how to think, right? And putting this together to become a self-reliant trader. Right? I created this with AI. This is your brain becomes AI, right? But you have to know what to think. It's a thought process. I told you how technical analysis works and the thought process about it becoming a self-fulfilling prophecy. And you create your trading plan, whether you're a day trader, whether you're a swing trader, or you're an investor. You're putting that together, right? All together, multiple time frames, right? Again, I'm repeating now, but you got it. Now, where's the link here? I got to get a link. I think I shared it with Rich, but I shared a link where you can go and read last weekend's letter, right? That link is for the bundles, but I had shared a link where you can read last weekend's letter and consider whether you might want to start out as a subscriber to the advisory swing and options trader. You can read the whole letter with the analysis of the broader markets, of sectors. I break down the S&P sectors, what's happening there. creating a bias for the next week, a video reviewing all of that. So it is a great letter and comes with trades, text messaging updates throughout the week. So basically real-time analysis of trades and and the management of those trades that we send to you. The bundles were created recently so that if you want a complete education, thank you, welcome, Ellie. You want a complete education to be a swing trader, there's a bundle. You want a complete getting started bundle, there's a bundle for that. You want a complete education as an option trader, whether it's directional or income options, I have a bundle. Day trader, there's a bundle. So they're specialized into what your focus would be. And where you can put them all together. So look, this is about your future. You want an education? I've stood the test of time, 30 years of teaching some of the best in the industry, including, I don't know, but technically the best market makers. They work over order flow, but tens of thousands of individuals over the years. And I don't think there's a better place you can be to get started. The advisory letter is a great place, but consider the bundles and all of those individual courses within those bundles. You may say, Greg, I just need to get zoned in on my directional option trading or my credit spread trading. And those are available individually, but the bundles are huge savings to that. If you have any questions, email me, Greg at Master Trader. I hope you enjoyed this. Watch the recording. I know I've been told you're like drinking from a fire hose with the information that I'm providing you. So just watch the recording, email me, consider the green room where we trade live each day. And we have great conversations as to, what's happening in the markets and different strategies and so on. So hope to hear from you soon.
Thanks a lot, Greg. I really appreciate you coming on, and hopefully everybody takes up on his offer. We'll have this recording for them, Greg, and everything else. But Greg, it was great to having you on again, and look forward to having you back again. It's been awesome and great hearing you.
Thank you, Fausto. All the best.
All the best too. Enjoy and keep yourself cool down in Florida.
All right, thank you. Bye-bye.
All right, let me take over and just take over here, and perfect. All right, so I want to bring in our next speaker. And this is a great speaker, the Traders chick, Marina Valentero, and she's been around also for a very long time. If you've been joining us here at the Cyber Expo, you've probably seen her several times. And, she's just a very, very, just a wonderful person. Very interesting. She reminds me a lot of things that I do, even some of you things do. But she's one of the speakers that, having here at the Expo and having her back, she's got a wealth of knowledge of trading and teaching. And one thing, like I said, I really, really admire about Marina is that she's an adventurer. She's always traveling somewhere around the world. She's moved place to place to place. She'll probably tell you a little about it. I don't even know where she is sometimes in what part of the world she is these days. But one thing that's great about it, that she could trade and she could do this anywhere she wants. You don't have to be stuck in an office. Trading gives her the freedom to work from anywhere. And Marina is, living proof of that. She's spoken at major events like the Money Show, Traders Expo, Ninja Trader, has mentored hundreds of traders around over the years. What I like most about her style is she keeps things very simple. She focuses on finding high probability setups that traders of all levels can understand. Now, whether if you're just getting started or just been trading for years, I think you're going to learn a lot by listening to her stuff. And that's why I would like to have her back. So please give me a warm welcome to my good friend, Marina, the Trader's Chick.
Hello. That's a great intro. Thank you so very much.
Well, you deserve
really,
it.
really appreciate it. And I love being back here. And I also love the fact that I'm the only woman out of all the men. So there you go. That's even cooler. Let me share my, how do I do this here? All right. I think you guys are able to see my entire screen, right?
Yep, you're
Yeah.
all good.
Yeah, you can see it, right? Okay. Well, hello, everybody, and thank you so much. Hang on just one sec here. I want to kind of minimize some of the things that are on my screen. Well, thank you so much for having me, Fausto and Rich. Again, I love being on this presentation. I think you guys, yeah, I think now we are going on several years to doing these. And yes, I am actually traveling right now. I am here with my family in Prague. I'm hanging out with my parents in the Czech Republic, so it's kind of cool. It's actually been really fun, and summer's here, so we are going to London, then Austria, and then Italy. And yes, as Fausto says, trading, that is literally the point of trading. You could do it from anywhere in the world. Oh my God. Once you figure it out, once you get it, there's no stopping you, right? Like you'll be able to do it from anywhere in the world. And I get very restless. So I like to travel a lot. We travel usually between 3 to 4 months out of the year. So as much as I would love to be a trust fund person, I'm definitely not one of those. So I have to say, trading has been absolutely essential to our lifestyle. And I'm so grateful for it every single day of my life, honestly. And I like to keep it very simple. And that's actually the beauty of trading, that it can be really simple. Once you recognize that, you could cut out a lot of the fat and the noise and just go for the simplicity of it. And yeah, you could become very successful at it. So, this is me. I am Marina, the trader chick. And today I want to talk about the simplicity and kind of going back to the simplicity of it, because you know what? We could get caught in these rabbit holes pretty quickly, right? Like we could go down the wrong rabbit holes or just get stuck on a lot of things that don't make any sense. And then we get very intimidated. And then we get pretty much almost like an analysis paralysis type of a situation, especially when we have too many indicators, when we have too many charts, especially if we are trading too many instruments. And there's a lot of other things that actually work against us when we do day trade. And that's literally what I want to focus on today, is kind of cutting out those misconceptions, those misleading beliefs. Because once you actually get the misleading beliefs, everything turns fantastic. On the Tower Bridge. Oh my God. Before coming here, Danilo, we went to like 4 different bars along the bridges. Literally, me and my husband arrived half an hour before starting. I'm like, I have to present, because we were just enjoying. Prague is really interesting because it's so dependent on the weather. And we've been here for 5 days, and it's been raining, sunny, and it just became sunny. So we ran to these beautiful outdoor bars. And of course, you have to drink the beers. Anyways, let's jump in. So I'm just going to do a quick official intro. And like Fausto also said, I have been living in quite a lot of different places in the past 25 years. I am an expat. Me and my family lived in Central America, Costa Rica, and Guatemala for over 20 years. And now we've been living in Barcelona, Spain. So that's why Europe has become our new playground, because it's so much easier and quicker to get around Europe. So that's why we've been traveling the majority of Europe versus Latin America that we did for 20 years. So now I live in Barcelona. Before I became a day trader, I was actually a fitness instructor and a travel writer. I'm still a travel writer. I still have my travel site. But the reason why I bring up that I was a fitness instructor is because this is one of the biggest misconceptions that people have, is that you have to have some sort of a financial background, a software engineering background, or an engineering background, or a mathematical background. None of that is true. Completely not true. I mean, I was literally a fitness instructor before I became a day trader. And that's the beauty of day trading. You can do it, first of all, from anywhere, and you could come from any walks of life, right? So before we hop into my presentation, because obviously we only have less than an hour to do this, I have the entire presentation here for you 100% for free. So go to makingofaDaytrader.com, makingofaDaytrader.com, completely free. Get the presentation so you can follow along. And I know that Faust and Rich will be giving you the replay so then you could go at your own pace. So please go to makingofaDaytrader.com where you could download the entire presentation. All right, guys. So let's get into it. What in the world is day trading, and why is it not investing? So, unlike investing, day trading, you do not want to diversify. So this is really, really important. If you could get one thing out of this presentation, this should be that one thing, because the amount of people that I have, the amount of people that come to me and they're like, I want to trade successfully and I am trading. And then they give me like this whole list of different things that they are trading. And I ask them, I'm like, so are you successful in any of them? And they usually aren't. Because for investing, yes, you should have a very robust portfolio, but when it comes to day trading, you don't want to diversify. So a really good example is, imagine your child comes up to you and says, hey, I want to learn how to play a musical instrument, right? So you're like, okay, well, what do you want to learn? What instrument do you want to play? And they go to you, well, I want to learn how to play the violin, the flute, the guitar, the drums, and the piano. And you're going to look at them like, are you for real? Like, they are such different instruments that if you focus on just the one instrument, that's when you can become really good at it, right? That's logical. So the same thing works when it comes to financial markets. They are literally called financial instruments. So if you focus on the one instrument, that is when you could become really good at it, right? Whatever it could be in equities, it could be a crypto, it could be uh, futures, it could be any of that. We will get into the different things that you could trade. But the thing is, if you're going to be doing all these different ones, trading is very full on, right? You're sitting in front of your charts. You cannot be driving many different vehicles at the same time. You cannot be working on different strategies at the same time, which usually requires if you are going for multiple instruments. So, one instrument, guys, pick the one. And investors care about the companies that they are investing in, correct? For example, if you are investing in Apple, you are cool to sit through several months, maybe even years, for all their different products, and you really believe in their ecosystems. So you don't care about the fluctuations. However, if you are day trading, you only want to see what's going on during that day. So you don't really care about that iPhone that's going to be coming out in 3 months, right? So that's the thing that's a massive difference. And that is really important because day traders, we don't care if it's going up or down, because we can make money going up or we can make money going down, right? As long as you understand the technical analysis, you could be making money on either end. Now, let's bust some of these myths, because this is such an important thing. Once you bust those myths and those misconceptions, the floodgates of becoming successful really starts to happen, right? A lot of times limiting beliefs keeps us from moving forward. And this is a very big truth when it comes to day trading. First of all, that people say day trading is gambling and it's too risky. So let me give you this example. If you say that you want to become a pilot today, does that mean you're going to hop into a plane and take your family up and go to Bali? No, for sure not. Like, the idea of it is ludicrous, right? If you want to become a pilot, you need to go to pilot school, you need to do simulation hours, and then you need to fly with an instructor. I mean, there is a process, right? Before you take anybody anywhere in the air, right? So with day trading, it's no different. Just because you have a little bit of money does not mean you're going to be a millionaire the next day, right? There is no barrier to entry, unfortunately, when it comes to day trading. So what happens is People just feel like, well, I have some money, let me just put it in the market. I call it donating it to the market. However, when you have a strategy, when you understand what you are doing, you remove the risk, and it's certainly not a gamble anymore because you have a very specific strategy that you're working with, right? The other myth or misconception, and I can't actually believe that this is still going on, but the other day, one of my students said that their broker was, giving this information to them totally untrue, that you need to start with $25,000 to get started. Absolutely not. You can get started today with $500. That is the beauty of day trading. You can start with a very small account. And let me tell you another thing, just because you have a lot of money does not mean you're going to make a lot of money. Okay. If you don't know what you're doing, you're just going to lose a lot of money. That is really important to understand. So, where did this myth come from in the first place? This $25,000 to get started. So, before the internet, brokers had a very specific reason for the 25,000 because they also give you margin accounts. And we're going to talk a little bit more about margin accounts, but I call margin accounts loan sharking. So, you don't need $25,000, okay? And like I mentioned before, there's this big misconception that you have to have math and financial background. I have zero math background and no financial background because I don't need to know the numbers. Technical analysis has nothing to do with the numbers. Patterns have nothing to do with the numbers. If you want to figure out your profits and losses, guess what? Calculators do the job just right. And that it is really stressful and chaotic. Well, if you're looking at this situation, and for some reason people think that this is okay, the human mind cannot sustain all this information, right? First of all, you'll burn out within maybe a month. Secondly, you just cannot process all this. It's absolutely impossible to process this information. Okay. One chart. I use one chart, two indicators. That's all I need. Remember what I said, one instrument. If you choose one instrument, you could go down to one chart, and I personally use two indicators because here's the thing. We have this thing that we need to be buying the latest software, indicators, algorithms. Absolutely not. What's the most important thing to have is a very strong, good trading software, right? If you have a good trading software, it comes with incredible universal indicators that you can use, that you do not need to spend more money on. The thing about platforms is you do need to have a good platform, right? If you want to be a trader, you cannot be on some rinky-dink app. So what happens a lot is a good example is if you want to become a Formula One driver, are you going to go into a race in a minivan? No, right? You're going to have the proper vehicle to do so. And that's the same thing when it comes to trading. But you do not need to buy all these other additives because a good platform has everything you need. So stop with wasting that money and just learn how to do it. The other big thing is research and news. I get a lot of students that want to trade equities, which is great. You know, equities is fine. You need to again choose the equity you want, choose the sector. We're going to go into that in a minute. But the thing is, they wake up at 4:30 in the morning, sit and do the research, and then they spend 8 hours in front of their computer, in front of their charts. And then because they're totally, it's not sustainable, they're losing money. So then they sit for another 2 hours doing research and news. Absolutely not. So the majority of the time that the news is actually happening is that these pundits want to just sell you their agenda. It's all about the technical analysis. That's all you need to look at. And it's usually never covered in the news or the market research. Okay. You do, again, for day trading, you do not need to know the news. Yes, for investing, maybe so, but day trading, no. Okay. Now, this is a real syndrome. And I think every single amateur trader at one point has done this. I certainly know I did. So, Trigger happiness. It is a thing. So a lot of traders or beginner traders have this idea that we need to be in and out of trades all the time. And when I first began, I remember I used to go like in 40 to 50 times within a trading session of 2 hours. Even if I was winning, which is doubtful, right? I mean, this is crazy. Even if I was, I mean, the commissions alone was eating at my profits, right? Today, I take 1 to 3 trades because the way I look at it, and once I realize what professional traders actually do, they are like big game hunters. What does that mean? Big game hunters focus only on the big game, right? They're not going to be shooting at some prairie dog or some field mouse. They're going to sit and they're going to wait for the big catch. The same thing with professional traders. Guys, you need to have those high probability trade setups worked out. That is called the strategy. And once you have that, you're going to have so many red lights that you're not going to want to just go in every 5 seconds. Okay, it's really important because the most radical way to trade is actually very conservatively. Okay. And usually small profits on a daily basis, that's when it actually brings you big profits yearly because you're consistent. You're not aggressively going in blindly. The other thing that I see a lot of people doing is FOMAT. I actually coined that term. What it is fear of missing a trade. What does that mean? Fear of missing a trade. I'm going to give it to you in a way that you understand. Imagine you want to go surfing, okay? Or it doesn't matter if you like to surf or not. I'm sure you have seen surfers, right? So as they're preparing to get into the water, they see this absolutely gorgeous wave, right? Do you think they're going to jump in from the shore and paddle like madmen to get to that wave, which passes by the time they arrive there? No. You know why? Because they know there is another beautiful wave coming. Same thing when it comes to trading. There's so many times people are like, oh my God, there's a really good trade. And they start to trace a trade because maybe they were on the phone, maybe they were in the bathroom, maybe they just spotted it when it was a little bit too late. Let it go because there's always another trade coming. There are millions of fantastic trades coming because if there wasn't, that would be the last trade ever in the entire world, right? So you got to realize once you start to chase those trades, it becomes emotional and you will lose. And you want to keep your emotions as much out of your trading as possible. Now, what to trade? So, as I mentioned before, choose your lane, choose your instrument. Okay, because you cannot do too many different markets. You will lose in all of them. That is not good trading. So, what markets are there? So, we all know about Forex, right? Foreign exchange, the currencies. So, again, in this particular case, as when it comes to Forex, usually trade pairs, right? You don't want to do too many pairs because the countries you never know what's going to happen, right? So if you focus on maybe one pair, then you can really focus on those two countries because today everything is so crazy, right? And things fluctuate. So you want to be on top of it versus trying to keep up with all the different politics and all the different craziness that's going on, right? Equities. When I ask people, hey, and or people tell me, oh, hey, I'm a day trader. I'm like, great. Well, what are you trading? They're like, oh, I trade equities. I'm like, really? Because there's 5,000 equities just on the US market alone, right? So when you ask a pro trader, they would normally say, well, I trade sectors. It could be either technology, pharmaceuticals, entertainment. They focus on a sector, or they could go big caps, small caps. And quite honestly, today there are some really amazing companies like Meta, Microsoft, Tesla, Amazon, Apple that are so volatile, so high in volume that you could literally just focus on just those one, each, not all of them, and be really successful as well. So choose the ones that you want. All right, futures. This is another one, right? People are like, oh, because they hear that I trade the E-minis, which is on the futures market. They're like, oh, I trade futures. I'm like, really? what do you trade? You trade wheat, you trade soy, you trade gold, you trade the indexes. You can't trade them all because they're so different, right? Gold will never move like wheat. The indexes, even the indexes like Nasdaq and E-minis will not move the same. So again, choose the one that you find is the one that you enjoy the most. Learn it, master it, and I can guarantee almost 100% that you probably won't even want to continue trading many others because you'll be doing well with that one that you have mastered. Okay, same thing when it comes to options. Stick to it, guys. Once you really figure this out, you can become successful, then you can decide. But don't start to dabble in everything and lose in everything. And the same thing for crypto, right? Crypto, yes, Bitcoin is one of cryptos, but the reality of crypto is that there's like 6,000 altcoins and projects, and probably more today, right? With all these meme coins. You gotta figure it out. The only thing I will definitely tell you about crypto, do not leverage. Don't leverage. That is a guaranteed way to not only lose all the money that you have, but to also lose money that you are leveraging, which means borrowing. Okay. So definitely stay away from the leveraging. All right, so let's demystify brokers because a lot of people, again, they come to me ready to learn how to trade, and they're like, okay, I have a broker's account. I'm like, okay, well, what instruments are you going to be trading? Because you normally get the broker after you know what you want to trade, right? Because if you want to be a futures trader, do you really want an equities broker? That's not their specialty. So they're going to be charging you extra commissions and extra fees because that's not their specialty. But if you know that you want to trade the E-mini, then you would look for a futures broker because that's their specialty. Now, the biggest lie out there is margin accounts. All right, brokers make this sound as if though it is this perk, right? That they're going to give you a margin account. Margin account literally is a loan. That's what it is, right? So let's say you have some money. Right? In most cases, they give you margin accounts, they do want you to have $25,000 or more. So let's say you have $25,000 and they're like, oh, okay, now you could have a margin account of whatever. So basically, once you use up all your 25,000 on buying on different positions, you could also take another 10,000. And people think it's a perk, but what happens is you're borrowing that 10,000, buying. What if you lose? Guess what? You have to pay back this 10,000 plus interest regardless if you win or lose. There's no reason for you to be borrowing anything. Trading should start with play money. You should never, ever borrow anything to put your family's money at risk. Remember that, okay? That's gambling. That's just plain stupid. And once again, you need to understand that if you want to trade, if you want to do crypto, you need to be on a crypto exchange because if you're going to do crypto on an equities, exchange brokers, guess what? You're going to be paying a lot more commissions and fees because equity brokers don't really work with exchange, crypto exchange. Actually, they use crypto exchange to be able to do your money. But if you go to a straight to a crypto exchange, guess what? You have a lot less money that you have to put out, right? Because that's the specialty. And once again, I'm going to really, really bring this in. You need to have a good platform, guys. You cannot trade without a good, strong platform. Now, really important to understand day trading lingo. Everything in the world that we do has its own lingo. If you're a mechanic, there's a lingo. If you're a pilot, you've got your own lingo. If you're a doctor, you've got your own lingo. The same goes for financial markets, right? Same thing, you go for those markets, right? So again, here I'm seeing to use leverage, not margin. Leverage is literally margin. Just so you understand, that's the lingo that you need to understand. Leverage is another way of saying we will lend you money. Don't ever leverage anything, guys, please, or anything else, okay? So let's learn the day trading lingo. All right, intraday trading. Why does this why is this important to even understand intraday trading? Because a lot of people who don't understand this, because what it is literally you're in and out of you're in and out of positions in the same day. That means your time frame should never be on a week or 2 days or even a full day. It should be in minutes, right? Because you're intraday. However, if you're swing trading, then you could look at a day chart or a week chart. So you have to understand the time frame that is in front of you. All right. And that's why it's important to understand when people are saying intraday trading. Bull market, market going up, bear market, market going down, and trending markets. Everybody has this idea about trending markets, usually that there's a trend going up, trend going down. Interestingly enough, the most important trend is the sideways trend. Why? Because that's literally where the majority of the money is usually lost. So, guys, remember, sideways trends are the most important. You have to understand them, and that we do through technical analysis. Now, another really important thing. We all know about risk management, right? We've heard about it. We pretend that we do it. A lot of people have a mental stop placed in. Mental stops are literally the exact same thing as you getting in the car and putting your baby in this back seat and saying that you'll put a mental seatbelt on that baby. So if there's an accident, you'll have a chance to save them, right? No way. You'll never save them, right? It's your ego talking. So risk management, you need to put that risk in place. You cannot move it. Interestingly enough, it goes the same for the profit target, because greed plays a very strong hand in that situation. There's how many times have we been put in our profit target and the market is going in our direction and it just hit our profit target, but we remove it because, oh my God, it's going to continue further. And guess what? Right at the profit, it turns around. You didn't have your profit target in, so you didn't make that money. Turns around, boom, and now it stops you out if you had your stop in. But usually you remove it because you have that mental stop, and boom, not only do you lose everything, but you also probably lose your account, right? I mean, we've all been in that situation. You guys, be professional. Put that profit target in, keep that risk management in place. All right? And you could do this all from a good charting software. That's what the interfaces are usually for. All right, so let's talk about indicators. The thing is, I don't know about you guys, but when I began, I had over 10 indicators and I had 3 monitors going on. I was in constant analysis paralysis. Also, you're listening to all these different gurus. Everybody's using all these different indicators. The thing is, everybody uses the indicator that works for them. And I ended up losing a lot. For the first 2 years, it was nothing but losses. And I had 10 indicators. And finally, I was completely out of my mind. And I ended up removing the majority of the indicators and just putting in the ones that worked for me. You need to know what works for you, not what works for somebody else and is not working for you. For example, Fibonacci's, Kettler bands, Bollinger bands, never worked for me. I had them there for years, and all they did was really stress me out. I never aligned with them. I removed them, and I felt this load lift off of my shoulders, and I began to treat my charts with a lot more joy as well. All right, I'm going to say it again, the trending markets, guys. We all know up, down, but sideways, that's where you could get really burned. All right. Okay, just a really quick review because I'm still shocked that a lot of people who put their hard-earned money, live money, don't know the difference. Buying, going long, literally, this is buying, going long. That means you are entering low, exiting high, taking the profit in between. Selling, going short. Guys, this is really important. You are entering high, exiting low, taking that money in between. It doesn't matter anything else. Don't care that there is this demand, that demand. Right here, technical analysis telling you enter high, exit low, take the money in between. Boom, you're good. All right. Now, this is a really important thing because the amateurs are usually entering at a market entry versus the pros, they go in with a limit order. So a market entry is literally you looking at the market and being like, oh my God, this looks really good. I'm going to just go in. Basically, you're telling the market, I don't have any strategy. I'm just going in. So the market likes to take advantage, and that's called slippage. I don't know if you guys have heard of slippage, but it charges you usually between 20 to 25% of your trade. So you automatically are losing that. Limit order, on the other hand, you're telling the market where you want it to fill you. That is showing that you understand what's going on. And if your strategy is working, this is where you want to enter the market. Okay. And the same goes for the stop limit, because if you do an entry exit, again, you're telling the market you have no idea what you're doing. You're just scared. You want to get out. And of course, you're going to be charged with a slippage. Now, stop limit, it tells the market, this is all I am willing to risk on this trade. And the market respects that. Okay, this is really important stuff. All right, really, really important. All right, guys, technical analysis. The thing with technical analysis, it sounds a lot harder than it is. It's actually quite simple. It could be done on any chart and it could be done with any instrument. That's the beauty of it. And the best part of it all, once you have your charting software, this is all free. 100% free. So let's talk about technical analysis. The most important technical analysis starts with the areas, resistance and support areas. The market respects these areas, and you need to respect what the market respects. Individual retail traders, we have no pull in the market. So we need to respect what the market does. So what's the resistance area? It's literally where the market's been going up and boom, it starts to hit a ceiling 3 or more times. You need to draw that in. This cannot be a mental resistance, right? Because when you are trading, your money is in the live market. There's a saying we have in trading, everything is to the left. If you are looking to your chart and there's nothing going on the left, guess what? You don't have a clue what's going on. Draw those areas in. Resistance area, literally the ceiling, 3 or more times hitting. Support, downtrend, boom, it's now hitting a floor 3 or more times. Make sure you draw it in. I don't care if it's just a line, however, but you need to have it drawn in. Reversal patterns. These are my absolute favorite. I love reversal patterns, right? And those are the double tops, triple tops, double bottoms, triple bottoms, head and shoulders. Is the reversal pattern 100% indicative it's going to reverse? Absolutely not. What it is going to tell you is that the market is totally slowing down. It is losing its steam, and there's probably like an 80% chance it's going to reverse. But I'm not going to put in a reversal trade until I have a lot more confirmation, but I am going to stay out of the market until I do get that confirmation. Staying out is as important as knowing when to get in. Divergence. To me, divergence is by far my holy grail. What is divergence? So if you look here, the price action is going in one direction. I personally use the MACDs. That's my favorite indicator. If you look at the MACDs, it's going the opposite direction. It's literally just being divergent, right? Like they're going in two separate directions. What does that mean? That I have to change direction and trade that? No. Again, it's telling me the market is losing its strength. I never want to put my hard earned money into a market that's losing its strength. All right, guys. So you need to do the same. Stay out. When you see divergence, and it's so simple to spot, just don't put your money into it. Wait until there isn't divergence. Wait until the market is flowing in the same direction. Okay, let's put all of this together. Remember, as I mentioned before, makingofadaytrader.com. Go and get your entire presentation right here for free. You'll get it all this way. You could review it at your own pace. You could also ask me any questions, and you'll also get the replay. All right, makingofadaytrader.com. Go there. All right, so let's put all this into practice, right? Breakouts, we all know, are probably some of the top high probability trades out there. But if you don't know what you're looking at, how are you going to be able to spot the breakout, right? So this is a breakout right here. So what exactly is a breakout? It's when the market is going in one direction, right? And all of a sudden it goes into that sideways trend, right? Like indecision, choppiness, you just don't know what's happening. You have to draw that in, right? Remember, you want to draw those resistance support areas in. And the breakout is that it continues in the same direction as it was before. It did not change directions. Now, when you have a setup, you'll understand what to look for. For example, here's a strong resistance area. I told you before, I love the MACDs. So the MACDs is the red dots with the black dashed dot line. So the black dashed line, that is the zero line. The zero line is when the market has almost no strength, right? So obviously in this resistance area, there's very little strength. But then all of a sudden, boom, it breaks out. And look at the MACDs. Look at how strong they're moving and the price action. This is when you want to get in. There's no divergence. It's just a lot of strength. But if I don't draw in my resistance area, I might miss all of it, right? Because then I'm just guessing. As I said before, everything to the left. Because when you're in the live market with your true live money, your adrenaline is pumping the same as it would for a Formula One racer. All right. And you want to be prepared. They never get into a car unprepared. All right. So we have absolutely everything we need to take action. Everything we need to take action. But how do you know you're doing it right? Right? We have all these amazing summits and presentations and events, and you could watch really cool YouTubers, listen to podcasts, watch other people do the live markets, read books. But how do you know you are doing it right? Because all of this is great, but the real question you're probably asking yourself is, how do I get started? Right? Because this isn't usually beginners that are asking me this. Usually seasoned traders, people who have been trading for a while and are still inconsistent with making money or losing money, they usually ask me, what can I do to turn this around to be profitable consistently? And funny enough, it's as simple as lacking the understanding of the basics. I'm totally serious. A lot of times we overlook the basics, jump into the hard stuff, and don't fully understand what's going on. I actually like to say that we put in windows without building our walls to hold them, and our windows just keep on crashing. Right? So here's a good analogy. For example, I know the majority of us have been driving for years, right? I mean, I've been driving now way more years than I want to talk about. But the reality is, when I first sat down, I didn't know what I was looking at, right? And it's interesting because now my oldest son is learning how to drive a car. And I remember the first time he sat in the car, we're telling him, all right, so you have to put your gear shift into neutral, make sure your foot is on the clutch and at the brake. When you want to go into first gear, he's like, wait, clutch, brake, gear, I don't understand any of this. And he's been in the car most of his life, right? Because these are the basics. This is the basic strategy of driving, right? Even understanding where are the blinkers, where's the horn. This is all part of the basics of driving. Now, I want you to go even more into your creative mind and imagine somebody getting into your car and they've never been in a car before. They've never known what a car, anything inside. And you tell them, all right, buckle up. It's going to save your life, and they're looking up, buckle up. What am I buckling up? What is going to save my life? But the second you show them the seatbelt, they are now protected, right? So we are not born with the basics. We do need to be taught. And this was my own sad truth. I spent over $20,000 on my own trainings. Literally, I spent over $20,000, and yet I was struggling for years. I was losing money all the time because I never fully understood the basics. And well, no, it's not true. I was never taught the basics. And whenever I was asking, please explain, what is this reversal pattern? Where's the divergence? Can you show me what a resistance area is? I was either treated like I was born with that information or completely ignored. And that led me to lose almost $4,000 in 5 minutes. No joke. And this was already like 2 years in. And I just felt like such a failure. I'm like, if I was in this chat room and they were talking about some trade, I was like, at this point, I just need to understand what that means. So of course, I started chasing this trade, lost that money in reverse. I had my mental stop in. I mean, I went through the whole thing that the majority of us go through, right? And I ended up losing $4,000. And that's when I just couldn't do it anymore. I felt defeated and I quit. I literally quit and I walked away. So I quit for about 5 months and it was terrible, right? But the thing is here, we all are bit by the trading bug, right? We are all bit by the trading bug and it never stops itching. And do you know why? Because deep down inside, we all know we can do this. And during those 5 months, I was constantly still watching other people, and I was saying to myself, you know what? If they can do it, I definitely can too. So after 5 months, I decided to come back to my charts. First of all, I had 3 monitors going on and 10 indicators. I literally took 2 high definition monitors and I donated them to my garbage men. I got rid of them. They were so toxic. I removed all of my indicators and eventually came back to only using 2 indicators. And then I started to study the basics because I never learned the basics. I hopped right into the hard stuff. And that's when everything changed for me. And several years back, one of my students says to me, he's like, Marina, your entire strategy and philosophy of teaching trading is very similar to Coach John Wooden. And I mean, I never heard of this guy before in my life, right? So, of course, I went online and I looked him up. And if anybody of you know who Coach John Wooden is, was literally the legendary coach ever of basketball. And his entire philosophy is when in doubt, get back to the basics. And we're talking this guy, his teams won 88 national championships, 10 NCAAs. They were A-list players. Regardless, every season he would start with the basics because your ego can get to you. And if you forget, so the basics for them was how to tie your shoe, how to roll up your sock, how to dribble the ball. Why? Because if your ego is too big, you're on that court, you didn't tie your shoe too well, you might sprain your ankle or even worse, completely be out, right? From blisters and sprained ankles and be out for the season because you have to go back to the basics. And today I have a very special offer only for the participants that are here today. My introductory course, bootcamp for day trading. You could do this on any apparatus, on iPhones, smartphones, tablets, desktops, laptops, anywhere you could do. One-time fee, $97, one time. I want you guys to just pause for a few seconds. You guys are taking your time out right now, and I'm so appreciative of that. Please go right here. We're going to go to this browser, bootcampfordaytrading.com. I want you guys to follow along right here, bootcampfordaytrading.com, and it's going to take you here right now, bootcampfordaytrading.com, so you can follow along with me right here. And this is the order form. So just come here and follow along. We're going to go into it in just a little bit. Bootcampfordaytrading.com. So you can follow along and see exactly what you'll get for one time $97. First of all, what can you buy for $97 today? Right? I mean, what brings you that same return on investment? Do you guys like to play golf? Well, me and my husband, we used to play golf when we lived in Guatemala. When we first moved there, it was like 27 bucks. Before moving 3 years ago from Guatemala, it was $167 per person. And that's Guatemala. I can't even imagine what it costs in other parts of the world. Do you guys like to go out to lunches or dinners and invite your friends or family? Guess what? You cannot get anything for $97. We live in Spain, and going out for a regular meal with a bottle of wine is usually more than $97. Okay. So let me break it down for you. This is what you guys will be getting, a simplified day trading package. And I know a massive bottleneck for the majority of people is setting up your platforms, right? I know that. So I have the platform tutorial already built into this bootcamp. So we can have the platform set up and get into the fun stuff, the trading. Then we're going to dive into dissecting those upward trends, downward trends, and most importantly of all, the sideways trends. And we're going to focus on the magic telltale signs, the reversals and divergences, because once you recognize them, your aha moments will be incredible. Okay, and we're going to understand the support, resistance areas, all of this, and divergence. I'm going to talk about divergence again and again because it's one of the simplest to spot, but it is probably the most powerful to spot. And of course, the breakouts, right? We're going to master the breakout trade. And not only that, there is such a thing as fake out breakouts. And once you understand how to avoid them, you stay out of fake out breakouts altogether as well. And spotting the really great, really strong, profitable breakout trades. And you'll have unlimited access to this curriculum. All this is valued at $1,600 right here. Now, I want to just do a really quick testimonial showing for you because, as Fausto said, I have students from all over the world because with day trading, you can trade anywhere in the world. And I am a testament to that, guys. There is no issue with internet anywhere anymore. Internet is great everywhere you go. So you could do this anywhere. So here's what a couple of my students have said. Michelle, best money ever spent. Finish the boot camp. Derek, you are the only mentor that truly checks the work and really loves it. Adrian, I'm enjoying your boot camp, learning every day. So remember, I asked you something really, really important. How do you know you are doing it right? How do you know who's going to be there to help you? And what I'm putting in for the same price, for that $97 on top of it, the bonus 1 month of mentorship with me, one-on-one mentorship with me, endless questions, feedback, because I know for a fact that one thing could be what takes you to that next level. And I will be there. So you don't have to wonder, am I doing this right? Am I doing it? What is going on? Okay. And on top of that, I have a live trading chat room on top of that, where we sit together and implement everything we are learning in the live market so you can see what is happening. All of this is totaled at $2,600. But for you guys, it's $97 special price. All right, let's go to bootcampfordaytrading.com. This is right here, bootcampfordaytrading.com. This is the order form. As you can see right here, one-time payment. So let me just put this in here for you. And I have some questions. Oh, okay, I already see that it was put in here. Thank you so much. And all right, let me see here. I think there's some questions. Right, hold on. All right, what is this? What's the best website? Bankers, Strategy, Money, and Run. Here we go. Check the mirrors first. Seatbelts, right? Okay. What is your favorite two indicators in MACDs and the EMAs, Trey? I have the EMA 20, 52, 135. That is my two favorite. And prop recommendations. You mean prop firms? I personally recommend you just put your own money in and start small. Prop firms, they have their own business model going on. Just focus on learning how to trade, and you guys could become really successful traders on your own, honestly. And that's what I teach. So here's what you guys get for that $97. Everything in the course. 30 days one-on-one mentorship with me and being in the membership in the live chat room. All of this is worth less than one price of a trade, right? I mean, I don't know about you guys, but I normally do like $200 to $400 per trade, usually a lot more. This is less than one trade. This is 10x the return on your investment so that you guys could have 100 of these meals, right? Just that education alone, you'll be able to understand and truly read the markets. But here's the thing. Because of my mentorship, I'm only able to take on a limited amount of people. Okay, so that I could truly, truly focus on you. And one thing I have to say, it is a full house. So I get sold out pretty quickly. And this is only available to you guys live today on this presentation, only to you guys. I normally charge a lot more. This is 60% off of this course. And I normally don't offer 1 month of one-on-one with me as well. So you guys, this is only special to you guys. Okay, guys. So go here, bootcampfordaytrading.com. This is it right here, bootcampfordaytrading. And if there's any questions or anything, please let me know. And I'm happy to answer them, or anything at all that you guys need. Oops. Let me know. I am here to answer all your questions. And thank you so much for taking your time out. Commodity number one, time, right? That is something that we can never get back. So the fact that you gave us and me this time right now, it's really, really, really special. And I just want to say thank you so much. And Fausto and Rich, thank you so much for inviting me again. It's always such a pleasure to participate with you guys. I really have fun. Thank you, everybody.
Maria, thank you so much for being here too. It's been always a pleasure, and enjoy for your new adventure. Look forward when we have you back and see what you're up to. And in the
Thanks. Bye,
meantime,
everybody.
no problem. Let me take control over here really quick, and hold on one second. Share my screen. There we go. All right, so we got about 5 minutes before we could bring in our next speaker, Larry Gans, and want to just kind of touch upon in the market what's happening. So we had a big little rally in the market. Let me just bring us over here so you guys can see what's going on a little bit. Apparently, President Trump just tweeted something about stopping the bombings going on here, and when that happened through about 1:30. We got a big pop in the Dow. You can see we literally just went from like 50,100. We bounced about almost over 600 points just on that news. So if you own any positions like coin or any ones you've been watching that we've been looking at, everything really pretty much went up. Everything took off a little bit. So hopefully that was a good feeling. If hopefully you weren't short and went long some of these stocks. So that went pretty well. And regarding everyone, whoever is here interested in joining CyberTrade University, remember we had a couple of things that we did talk about. First of all, if you are logged in from Canada, we have this big promotion going on with Moomoo. Hold on one second, and let me just bring it up here so you guys can see it. Let me just scroll down. If you are logged in from Canada, we teamed up with them, and you are able to win they're giving away $1 million, and you get to be featured go to the Nasdaq Center and be able to see, get a tour, and even get a chance, I think, even to ring the bell. But there'll be so many different types of members and gifts that they're going to be giving of that $1 million. If you want to learn more, and if you do sign up with us, we will give you 1 month free of CyberTrade University, so we can get you prepared to be competitive and everything else. And like I said, this only applies to Canadians. And here's the link for that. Let me just give that over to you. There we go, right there. Put it in the chat room. And you just got to do is put your name, email, and phone number. We'll get you registered for that. All right. So I'd like to thank Moomoo and teaming up with Moomoo on it. One thing I do like about that platform is they do got TotalView. We do showcase in our trading floor, and it's like I said, it's our new brokerage firm that we've been using. And I don't really recommend too many brokerage firms. A lot of them are pretty much the same, but this one actually felt different when I first met with them. So great platform, great everything. And if you're in the US, you could still get an account with them. We are having a promotion with them also. So if you are interested, please email us and we'll tell you a little bit more about it. All right. So just hopping over here really quick in our trading floor and see what's been going on. As I told everyone, we were all invited to come to the trading floor. We just made a quick little alert here on the top left-hand corner. Hold on, let me get my pointer right here so you guys can follow along. There we go. Okay. So yeah, we did an alert regarding about the spy, President Trump, on social media, explaining a little bit more about scheduled strikes, bombing against Iran this evening. Discussions and final points have been in both concepts. In great detail, approved by the parties involved. Okay, so it looks like we got some move going over there. It's making the market move it really nice. So looks like the traders in the trading room are doing pretty well. I mentioned to all of you, you're all going to have access to come in here, and we start our commentary within the next 2:30. All right. So let me move this over here on the right, and we got this over here. We're looking pretty good there. All right. So what I'd like to do right now is I would like to bring in my next guest. Hold on. There we go. And to tell you a little bit about my friend Larry. So Larry Gans, for some of you know him. He's been on our Cyber Expo many of times. He's also been on my podcasts, and he's our next speaker. I'll tell you a little bit about his little bit of his background. It's over 30 years of trading, and very few people in our industry can match that type of track record, being around that long. But Larry traded professionally. He even ran an international trading desk for one of the largest oil trade companies in the world while serving as an executive vice president. He'll be happy to tell you a little about that, how he did that, and how he had to control it and how actually to trade those markets. I always enjoy having Larry and on our events because he brings a real world experience and a straightforward approach to trading. He's not about the hype. He's about the process, the discipline, the managing risk, which I know is very difficult for a lot of us that we want to learn, but he definitely will show you a little bit more how to control that. Back in 2010, Larry founded PowerCycleTrading.com, where he helped thousands of traders learn his directional options trading strategy. What I like about Larry's style is that he focuses on finding high probability opportunities while keeping his risk defined, which I know is a very big challenge for us traders. And that's why something that every trader can appreciate when he talks about it. Now, whether if you're an experienced trader or just getting started with options, you're going to pick up a lot and valuable insight what Larry has to talk about. So let me bring him in here and let's give a warm welcome to my friend Larry Gaines.
Hey, thanks for having me here today, Fausto.
Thanks for coming.
So you want me to go ahead?
Yeah, you can go ahead and share.
All right, sounds great. All right, I think that's good to go. Let me just check one more. Hold on once. Okay. All right, we're good. All right. Yeah. So thanks again for having me here today. And, what I'm going to share with everybody is, how you can target big returns with small risk using really three dynamic option strategies: the butterfly, condors, and the calendar spreads. Okay. So that being said, let us get rolling. So the following webinar today is purely for educational purposes. Any stocks, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. Now, again, like Faust had said, I've been, trading options now for over 30 years. And, what I've found to be the most valuable go-to option strategies that can literally help any trader or investors out there in any kind of market environment are the option butterfly, long condor, and the counter diagonal. So they're kind of what I call my trading secret weapon. Now, the huge advantage that these strategies offer is that they have a kind of a unique, really option framework that's designed to take advantage of time decay and volatility, which are the two main option pricing components. So again, they can be used in any type of market environment if you just know how and when then to use them. So the next thing is let's go through kind of the steps or kind of a process. So what I like to do is first, kind of go over, how, option pricing works. And so you need to understand that in order to, maximize your option profits. Now, when we're pricing an option, you look at the most important option factor, and that's understanding the concept of time and volatility and how they impact the price of your option. So when we look at time decay, it's going to always work against the buyer, but it's going to benefit the seller. And that's because of what we call the theta. That's the Greek. The option theta is the value that shows you the decay or time decay of your option. And so it's going to be either have a positive or a negative impact on your value of your option. So long stock options, such as if you're long a call or if you're long a put, they're going to have a negative theta value. So that's going to indicate that they lose value as the expiration draws near. Now, all short option, they're going to have a positive theta value, which indicates that their position is going to gain value as expiration draws near. So when we look at volatility, that's the one price component that is expressed as a percentage of the stock price, indicating a one standard deviation move over the duration of an option cycle or series. So in theory, a stock should end up within a one standard deviation price range of its original price 68.2% of the time during the option cycle. Now, this theoretical probability or forecast of the security price range should be a part of your process used for selecting your price targets for your trades that you're looking to take. So this is kind of one of the first steps that I like to go through with any trade setup that we're looking at. So we do kind of what we call the expected implied move based on volatility and where price is. And that's going to give us kind of our theoretical forecast of price targets either up or down that we're looking for based on your option pricing model. So it's kind of one of the first steps to go to. Now, step two is to, again, understand how to trade time and what that is. So we can actually trade time by selling time to take advantage of that option theta time decay or theta. By selling options, we are, in essence, selling time and volatility. The other thing to think about is think of an option like a coupon that you get at a store. So, you look at the coupon and it says, okay, you have to use it by, let's say next Friday, the, 22nd or 27th of June or something like that, or else it's going to expire and it's no longer going to be valid. Well, that's exactly like options are. So we have all these different option series, and they have a specific set time frame that they're going to be able to be used, and after that, they're no longer going to be valid or they're going to expire. So you can think of options like a coupon. It's a good way to kind of describe what they are. Now, when we look at the option time decay, you can see it really starts to tail off when we get towards about 30 days out. So when we first start out, say 120, 190 day or 90 days out, the time decay is very, very small. But when we get 30 days from expiration or day zero of that option series you're trading, then it really starts to accelerate. And now we have all these different weekly options, and we can do a lot of different incredible kind of interesting things, by the extended time decay that we get from these weekly option series, or even options that decay, 1 or 2 days during the week. So it gives you a lot of different ways that you can take advantage of, selling time, or even when you're buying options, it's going to reduce the amount of price you pay because of the accelerated time decay that's stripping out that part of the option price. Now, step three is to learn how and trade the probabilities. So it's kind of what I call the market maker secret. So when we look at option markets, markets use probability statistics for pricing the movement of your option to its expiration. So we're using option platforms that's based off of what we call the Black-Scholes model, and that inputs time, price, volatility, and that's going to give us some really good indications of statistics that we can use to kind of price out and analyze an option. So by knowing the probability then of your underlying security finishing within a certain price range at expiration becomes key to then determining what options you want to buy or sell, and then what option strategy to use. So this forecast is what we refer to again as that implied move or the expected move of your stock. So it's a kind of an estimated theoretical range of a one standard deviation move up or down by its expiration. So that's kind of where we start out. It gives you a really good solid price points that you can work with to give you, targets for your profit targets that you can establish based on the option model. So here's an example of how you can use this probability statistics in what we call the delta or the option delta. So when we look here at this, this is option platform, this is Apple. And in this example, Apple's trading at $190. So if we look over here right there at this column here, it says delta, and right next to it says probability. So this is probability out of the money, and this is the option delta. So when we look at Apple here, it's trading at $190. We look here at the money strike 190 is giving you this delta of 0.52. So the way you can use this is a couple different ways. Is you can look at that and say, okay, at a 52, or let's say that's 0.50, you've got a 50% probability that Apple is going to be at $190 or below by expiration in 28 days, or it's going to be a 52% probability that it could be at 190 or above. Now, as you go further out the strike price of the chain here, you can go, let's go out here to that 217.5 strike. Now, when you look at this and you go over to the option delta, you can see it has an option delta of 0.04. So when we look at the options, one option contract is equivalent to you controlling 100 shares. So that's what we call the option delta. So an option delta of 1 is basically 100. And if we look at the probability statistics here, that delta of 4, then if you look that reciprocal of that is going to give you 96. So that's the other thing you can look at. There's a 96% probability of price will be below 217.5 at expiration. All right, so these are quick ways to kind of assess probability. So in other words, you could say, okay, there's only a 4% probability that price will be at 217.5 at expiration, or 96% probability below. So what this does for you is gives you the odds of, if you were to say buy that 217.5 call here, you've only got statistically, theoretically, a 4% chance that the price at expiration will be at 217.5. But the other side of that is, if you sold at 217.5 strike short, you've got a 96% chance or probability that price will be below that, so you'll keep that premium. So these are really quick ways that you can assess probability and use those, into your trading. So I just kind of wanted to go through that. Now, step 4 is then comes down to selecting that perfect option strategy. So the kind of goes through two strategies I like to look at and use for market cycles and market conditions that I'm trading, whatever that environment is to fall back and look at the butterfly spread, long condor spread, and the counter diagonals. So these are kind of really some great dynamics spread strategies that you should add to your trading platform or your portfolio. And these are all be spreads, so they're going to have defined risks and defined profits, but it's going to keep your risk really low. But you're going to have some really great high returns on your capital at risk. So the first one we'll talk about is the butterfly. So there are a lot of different variations of the butterfly, but the kind of the standard one or typical one is what we call the balanced butterfly. So basically, it's got kind of 3 striking points. You can see in this example, let's say we're long a call here at that 10-10 strike, and we're short a call here at 10-20, and then we're short another call at 10-20, and we're short or long a call here at 10-30. So we've got this call here, 2 striking points here in this call. So that's kind of your butterfly, and that's the body of the butterflies where you're short. All right, so that's the long call butterfly. So that's kind of the risk profile of what that looks like when you kind of design the butterfly and put it out. And we'll go through some examples here in a minute. The other one is kind of what I call the cousin of the butterfly. It's called the long condor. And what this one does for you is it widens out that profit zone that you have. So, when you look at the butterfly, your max profit is going to be when you kind of at the top of what we call the tent. So you really have to kind of thread the needle to get that maximum profit. But with the condor, we can widen out that spread. And so that helps, give you a wider profit zone. So that's one thing I love about using a long condor. And the third strategy we'll talk about today, and I'll go through how it's used, is the long counter diagonal spread. So it's kind of a combination. It's a diagonal, but it's kind of like a debit spread. But instead of having the same duration time frames for your long and your short, you're going to go out further in time for the long dated price or part of the option spread, and the short dated part is going to be closer into time, so you can take advantage of that accelerated time decay. So really fantastic strategy, and we'll go through some examples of those. So first off, let's look at that call or put butterfly. So again, when we look at the butterfly, we can use either calls or puts. So what I like to do is when we're looking for an up move, kind of a directional trade to the upside, I'm going to look at using a call butterfly. If we're looking at a downside move, I'm going to look to use a put butterfly. So that's kind of the basic starting point. But what the butterfly is, it's just a combination of a vertical debit spread and a vertical credit spread, put together. So, if we're going to the upside, I'd be looking to do a vertical call debit spread and matching that with a vertical call credit spread, and we can create that butterfly. So it's going to give you a spread strategy that's going to get a limited profit, but it's going to also define your risk, and you're going to have a limited amount of risk. Again, it has that 3 striking points of the butterfly, and it's going to be also constructed by using either calls or puts. So if you look at the butterfly, you're going to be short that body here, kind of that area here where you're short, and long what we call the wings. All right. So it's a targeted directional swing trade I like to use for, so example, I'll go through a number of different examples, but let's say we're trading here at $100, and there's a really good upside potential target you think up here to, maybe let's say $150. But also at that $150 strike point area that you're looking at, there's a lot of maybe resistance in here. It could be moving average resistance, could be Fibonacci. So it's a lot of upside or overhead resistance. So that creates a kind of a great area that you can set a butterfly targeting that kind of upside resistance. So that becomes the body. That's the way I kind of like to set them up. Now, these are great for trading also high volatility markets because we can really keep our risk low, and also great for trading high price stocks because we can trade a high price stock over $1,000 a share or something for a very limited amount of cost on the butterfly trade. Now, the trade duration could be 1 day to kind of 2 weeks. You don't want to go much past that. You start getting into what I call dead money because they really start to accelerate and have great impact when you get to the last 2 to 3 days of the option series, or when it's going to expire, because that's when time decay and volatility start to really decay and collapse. All right, so the kind of the sweet spot that I like to look at are, butterflies 6 to 9 days out, something like that. All right, the other great thing, they're positive theta, no time decay. So that, if the market's kind of churning sideways and you have a butterfly on, you're not going to lose value of it based on time decay. So you're going to have a positive theta value. Now, the other really fantastic thing about the butterfly is the potential, returns you get. So, you can get 2 to 1 to 10 to 1 or even higher returns on your risk. So, you could, like, for example, you put up $1 at risk and you might end up making 10 with the butterfly, or you can make 20 times that. So we'll go through some examples to show you exactly how that can happen. And they're also fantastic for hedging. All right, so that's kind of the butterfly, and then it looks like it's a combination of your vertical spread. So here's an example. So here's a vertical call debit spread, and in this example, you're going to risk $300, and that's going to be the debit paid. So here you're long this call at, say, this 10-10 strike right there, and then you're short the call here, that 10-20. All right, so that's a call debit spread, $10 wide. All right, so if you look at that, $10 on an option contract will be $1,000. So remember, one option contract's equivalent to 100 shares. So a $10 wide spread would be $1,000 wide, okay, per spread. And here you've got your debit cost of the spread of $300 to do this $10 wide call debit spread. So the potential profit then is the difference there of 700. So if you get at that strike at expiration, that 10-20 or higher, you're going to make $700. So your cap there of 700 keeps going, you make 700, right? So that's going to be a 233% return on that risk of 300. So in this example, you risk $1 to make $2.33. That's a positive risk ratio, what we call a positive risk ratio. Now, the other side of the trade, if we add a vertical credit spread to it, in this example here, let's say we do this vertical credit spread and we're going to sell short this 10-20 strike, okay? And then we're going to be long the 10-30 to cap our upside risk in case the market keeps going up. That's a vertical credit spread. And we bring in here a $200 premium. So again, this is a $10 wide spread, 10-10, 10-20, I mean to 10-30. So $10 wide spread or $1,000 wide. We bring in $200 credit. So the difference, though, is you're at risk. In this example, then you're risking $800 to make $100 or $200 here. So you're kind of, looking at that, you're saying, okay, why would I do that? I'm risking 800 to make 200. So when you look at credit spreads, they're what we call probability trades. So, if you were to sell that 10-20 strike, and let's say that 10-20 strike, when you sold that, you looked over at your platform and it had a delta of 20. That's going to give you then a potential 80% probability of that trade being at expiration below 10-20. Remember, so a delta of 1 is 100. And if you had that 20 delta here that you shorted that 10-20 short strike, then the reciprocal of that 80% is your probability that it'll be below 10-20 at expiration. So that's why you get that negative risk ratio. That's kind of a quick explanation of that. So in this example, you'd be risking $4 to make $1. All right, so that's a negative risk ratio trade. But when you put the two verticals together, you just created a really dynamic spread here, the butterfly. So now you have that called debit spread right here, $10 wide. We're going to say that's a balanced butterfly, 10-10 on the long call, 10-20 on the short call. Then you sold that 10-20, bought the 10-30 here, $10 wide. So you did that. So originally you had that $300 debit cost here. You've received a credit when you did this credit spread, $200. So now you've reduced your risk by creating this butterfly spread to $100. Now, at expiration, if it goes out here at the top of the tent at 10-20, you would make $900, right? So your spread width is still the same, $10 on each side or 1,000, but you've reduced your cost to $100 risk. So the potential is the difference, profit of 900 or a 900% return. So that's kind of the basic concept of the butterflies. They're, great. And of all the option spreads, the butterfly will give you the highest return on capital of any of the other type of option spreads that are out there. Now, the next one, again, is what we call that long condor, and kind of what I call the cousin of the butterfly, because it again is the combination of two vertical spreads, your vertical debit spread and the vertical credit spread. But instead of having that tight, window or having to thread the needle, we can widen out that profit zone that gives us a bigger zone for profit. So again, these are great for your directional swing trades, upside or downside directional trades. You're going to, have your risk capped and set at a defined area, and you're going to have your profit cap as well. But you're going to have returns of, 2-to-1, sometimes up to 4-to-1. Depends on your option spread that you set up and how wide the spread is. But they're also, a great strategy because they're going to really reduce your risk a lot. And when you're trading really high volatility markets and a lot of uncertainty, I really like to go to either the condor or the butterfly because we can get our risk reduced, but we also still have potential for huge returns on that lowered risk. Okay, so it's a great strategy for that. Also, you'll get that positive theta, no time decay off the condor spread. And that's what it looks like there. You have that wider profit zone, just like the butterfly, but instead of having to really thread that needle, you can have your zone of profit widened out. All right, and you can leg in, leg out of these spreads too. So they're really what I call give you a lot of flexibility for hedging and legging in, legging out, or just put them all on at once. So great strategy. Now the third one we're going to talk about here today and go through is what's called the calendar diagonal spread. So we do a lot of these because they have so much flexibility. So these are kind of a medium to long-term directional option strategy that you can do to speculate on a trend either up or down. And again, these are also can be used for some good hedging. So a vertical diagonal debit spread is where you have your long option leg set out further out in time versus your short option leg of the spread, which is going to be closer into time, set closer into time to take advantage of the accelerated time decay of those short duration options. So the trade is constructed by taking advantage of that accelerated time decay characteristic from the short dated option part of the spread that's going to decay at a much faster rate than the back long dated part of the option spread strategy that you have on. So the other thing about it is you've got this additional vertical spread component that adds a great directional element for greater profitability. So it does what I call kind of buying options at a discount. And this is a strategy that you can use, if you want to, you're looking at a very long-term trend you want to take a bet on. You can go out and use your leap options. I mean, you could go 1 to 2 years out to buy the long dated part of the spread and then, sell closer in. So you may have heard these referred to as your, poor man's covered call, based on that, because instead of, buying shares, which cost you a lot more than, your options, you can really reduce you amortize down the cost of the trade really fast. So this is a strategy that I really like to go to, and we do a lot of these, like I said. So, for example, here, let's say you were going out and you're really bullish on, maybe Amazon or whatever it might be. And so instead of going out and buying the shares, maybe you say, okay, let's go out and buy options on Amazon, maybe a year out or 2 years out. So you go out there and let's say you buy, this is kind of one extreme way to do it, but let's go out there and you buy, options that are, out to 2028 expiration. So you could go long, one option contract here, which would be equivalent to 100 shares here, out in 2028. So this might be the $200, strike here, and then you sell against it closer in. You could sell against it. You could even sell this week the 12 June the 12 June series against it and have a, kind of covered call, but you might sell the 225 strike here. So you're short that 225 strike, but you might be long that 200 strike way out there, the 2028 series. So that's the extreme case, but this is a strategy we use a lot in all different types of, environment in any type of time frame. So I'm going to show you a lot of really great examples of how these are used. So the next thing I want to do is go through some trade examples. So these are going to be trade examples that based on what are done in my trade room and my alert service that I send out to my alert members. So going to show you, butterfly spreads, long condors and counter diagonals, and some trades that we've done through my alert service to kind of show you how dynamic these trades and these strategies are. So just to give you a little bit of background on how dynamics these strategies are, these are going to be spreads that I've used for my alert service and what I call my level 3 pro trader alert service, which I'll talk a little bit more about here in a minute. But I started the first part of my alerts back in 2018. And so I've been doing these for a long time and we've had great success. Now, through today for this year, 2026, we've had run around 85% win break-even rate. So we've had 55 trades so far closed out for 2026, 39 winners, 8 break-even, 8 losers. So a winning break-even rate, we're running 85%. So really nice high win percentage type trade setups. Now, full disclosure, these are unaudited results, but a summary of these, what we've done. Now, since starting back in 2018 through today, we've closed out without over 1,021 trades, 726 winners, 81 break evens, 214 losers. So win break even rate really high, 79%. So I'd like to have more, a really high win break even rate because to me it gives you more confidence in the trades. And it helps you to, as a trader, mentality to kind of be confident with what the trades you're doing. So these are going to be some setups that we've done and to show you the dynamics of these top 3 strategies. So the first one I'm going to show you is one that we just did on CRM. This was the alert that was sent out. To my members, we sent this out on the 9th. So this was one that we set up this week. And so this was a short trade on CRM and did this with a long put condor trade to keep the risk reduced to low, as low as we could, because CRM has already been sold off so hard it could easily have a bounce. So I wanted to keep my risk controlled. So I won't go through all the details here, but this is we use a service called Telegram to send the text alerts out to members. But so it goes out within a minute or seconds within when I push the button to send it. But this is one that we just did, and so CRM was trading at 180.50 and sent this out to do a long condor, a put condor. So it was trading at 180.50 and sent this out to the members. And so this is basically the trade setup. It was going long, then the 12 June, that's for Friday's expiration this Friday, the 180, 177.5 call put debit spread, and then combining that with a put credit spread, the 170, 167.5. So that creates this put condor like that. All right. So you're long a put, short a put, short a put, long a put, and that's the put debit spread side. And this is the put credit spread side to offset the risk, lower it, and also give us more positive data. So sent this out to do this around 75 cents or $75. So that would be your risk, $75 per spread. Now, the next day, it started really going down really hard. So we set this up as 180.50. The next day, it was trading at 172.70. So I sent out an adjustment alert to go ahead and adjust this, and we're going to roll the whole spread down. So we're going to roll it down. So we're going to have end up being long now. Instead of the 180, 177.5, we're going to roll the spread down and be long the 177.5, 175 put debit spread, and then roll down the short strike part of the spread down to 165, 162.5. So these are the kind of adjustments we might do in order to kind of roll the trade. And so then today, sent out alert. We've got some really good profit in it right now. But here today, this was trading at around 167. So sent out an update to make sure to lock in some profit today, because this is going to expire tomorrow. So at this point, when I sent this out earlier today, this was about 8:47 this morning. It was up $110 per spread. So let's take a look at where this spread is right now. So the trade setup was, right here. One second here. So this is a 4-hour chart, and this is my daily. You can see I like to use what I call momentum to give me kind of direction of price, but it was breaking below this 50 simple moving average here on the 9th. So this break below that gave a good trigger for a price target trigger for the downside. I had what I call my momentum downside cross here, so really strong indication that this had more downside. And then it got down to the 165 strike here today, which is my short strike. So I sent out, make sure you take some profit in case it goes through there. So looking really good right now. And if you look at the profile of this thing, you're going to see that you're risking $73 right here to make potentially, if it goes out between your spreads here, you're going to make 177. So that would be a 242% return, this week if that goes out tomorrow, and that's that range there. So again, we're long here this vertical put debit spread, the 177.5 to 175, and then combine that with the credit spread side, selling short the 165, 162.5. So that's a put condor for a downside move, in this market. So I'll pull it up here in a second to show you. So this is where it was a little bit earlier. It was trading right here at 165.57. So this spread was, at 134, $134 per spread, less the cost of 73. So it was up at that time $61 per spread, or 84% return. And now let's take a look. So it is trading right here currently at 167.13 right here. So this is up about $83. So it's going to bounce around. This purple line is what it's doing in time. But tomorrow, towards the end of the day, if it's trading right here, this will be up $177 per spread, on that condor. So, we'll see where she is tomorrow, but it's right here, right at this 165 mark right here. And so with this spread, we want it to close above that. We want it to close inside the two spreads here. So you can see the outline here. Here's your put debit spread side right here. You're long that put here, right? The 177.5. Okay, long that put, short this put. So here's your put debit spread. That's the 175. And then sold way down here, the short put, which is now close to it, the 165 right there. And then long the 162.5 here. So that's the kind of the structure of it, but it keeps your risk super low. You've got a positive data. You can see the positive data here has got over $89. So it's a really great strategy. If the market just sits here for a while, we're taking advantage of that. So that's the put condor. Now the next thing that I'm going to go through is a butterfly. So here's one that we did with Google. So this is a wide wing call butterfly spread on Google that was set up. This was back on April the 9th. This was an alert trade sent out. Google's trading at 315.90. And we were looking for, it was a call butterfly. So we're looking for an upside move. And so we did this trade to keep the risk real low. And plus, trading a higher price stock, it makes it cheaper than buying the shares. So Google is trading at 315.90. The original butterfly setup was to do the 320, 330, 340 call butterfly at around $1.85 or $185 per spread. Now, what happened though was this thing, Google started to really take off. And so we rolled up and adjusted the spread up from 320, 330, 340, sent out an adjustment to roll the spread up to the 330, 340, 350. In order to keep it above where the price was. We didn't want the body of the butterfly, which here was 330. We didn't want the price Google to go through that because then we could be maybe assigned. So we rolled it all up. When it was trading further out or further, the price was moving up pretty fast. So rolled that spread up and turned out really good on rolling this spread up. So I'll show you how this worked out. So we did this spread. Original trade setup was right here on the night, trade right about 315.90. And so the original one was the 330 strike, but then we had to adjust it up because it was really starting to rip and take off to the upside. So on the 14th, it was trading 332. So closed out and rolled up the whole butterfly spread to the 340 being the body of the butterfly, and then took profit on the 17th. So this spread then, with the adjustment that we did on it, we had so much profit in the debit spread side, the 320, 330 side, that we were able to adjust down the cost of the trade to $63 per spread. All right, so that was our total at risk, $63. So now we've got the 330, 340, 350 call butterfly, $10 wide spread or $1,000 wide. Okay. Now we've got our adjusted cost here at $63. So potential, if we were to go out right there at the top of the tent, that body of the butterfly here, this would make $937 per spread. That'd be over a 1,487% return. That's why these spreads of all the option spreads, that gives you the highest potential return. So you can make over 1,000% on these trades. And, we do that, all the time. This happens. So here's where it went out. This was, the trade on the 14th was the adjustment. And then here it was profit on the 17th. Now it was trading at 341.15. So that spread blew from the adjusted cost here. We had of $63 per spread. Now the spread was at $873 or $873 per spread. Our profit then was $810 per spread. That was a 1,286% return right there. So, we're legging out or scaling out and try to leave some for the last day for expiration, because that's when it really is impact is for stripping out whatever time and volatility is left in the trade, and that goes straight in your pocket. So, a great strategy there, great profit, and a lot of fun to do these types of trades too, because you keep your risk so low, but you have potential to make some really big returns. Now, this is what we call the lotto ticket or the lotto trade, and this again is using the butterfly. And this was one of my members, Bill, wrote this, and he said the butterfly strategy is one of my favorites. It's the big winners that eventually make the difference in any trading account, with all the so-called low risk option strategies being sold to the public and account without the potential to hit the big one once in a while not betting the farm is a slow ride up a long hill. But this strategy is easy as ABC. So it really is, when you look at it, it's a really easy to concept or strategy to use because it's, just combining vertical spreads together. Now, here's one that we did on GLD, the gold ETF, and this was a lotto ticket trade using a call butterfly for an upside move. And the reason, we kind of call these a lotto trade is because when we see a very selective maybe setup and we want to take a shot for an upside or downside move, but we don't want to risk a lot, we can do it using the butterfly. And so with this trade, we were going to risk 25 cents or $25 per spread or even less, based on your execution of the trade. So that's why it's called a lotto. And I call this is a binary kind of trade. So either you win or you lose. And if you lose 20, win, you might make 3 to 4 to 5 times that. All right. So this was one that we did on GLD, and it was doing a long call butterfly. And it was trading when we set it up at 387.90. We were targeting 400 for the butterfly. So sent out this trade setup to do the 396, 400, 404 call butterfly. So it'd be a $4 wide spread on the butterfly for around 25 cents or $25. Now here it was, fast forward to the 19th, and now it was trading at 397.65. So this was earlier in the morning. So this was up at that point $135. That's a 540% return. But then later in the afternoon, that was about 8:50 in the morning. Then in the afternoon at about 1:51 here, now it's trading here at 399.80. This trade is now up $375 per spread on that risk of 25. So that's over 1,200% return. So that's why it's the lotto ticket. And these are, really fun and exciting. So here was the trade setup right here when we set it up back on the third. It was trading at right here at 387, started just trending up here and went out right there, pretty much came close to nailing it perfect at 400. So that's, kind of give you an idea where the chart was, what it was looking like. Here's the kind of the risk profile. So here's the 396, 400, 400, 404. So $4 wide spread set up for $25 or 25 cents per spread, $25, $4 wide spread, 400 less 25. So your potential profit, if it goes out right there at the top of the tent, is 375. That's a 1,500% return on that risk of 25. So with this trade, we got pretty close here. It was trading right there on the 19th at expiration on that day at 399.74 at that point in time right there. This was up $306 per spread. So that spread blew from $25. Now it was at 331. So, $306 per spread profit. That's over 1,200% return on that trade. So that's, a look there. Now here's just one more I wanted to show you. And this is what I call, hedge trading management. This is one that originally this was a trade that we had on Alcoa. And this started out as a long call calendar diagonal, but then we adjusted it with a couple of different adjustments and ended up with what is an adjusted long call broken wing condor, and we made over 1,000% return here. So this was a lot of stuff going on here. So I'll just kind of run through it quick, but this is what's pretty cool about these types of trades. So this originally set up on the 13th of May. It was trading at 68.40. And so did this originally as a long call calendar diagonal. being long the 29 May, short the 22 May, 69.73 call spread. So that's where it was. Now it ripped up, started to rip up. So rolled the spread out to the 5 June. I'm just kind of go through it really quick here. And then had the adjusted this to a call condor, the 70.75, 80.85. So call condor like this, but then it kept going up. So we rolled and adjusted the call condor up further out of the money to keep up with the market. So ended up with this now. The call condor we're along the 73, let's see here, the 773 right here. Yeah, the 73.78 call debit spread and short against it, the 86.89. So originally we had that 70.75 and it kept going up. So we rolled it up higher. And now we've got the call condor 73 here. 70, let's see, let me get this right here. We had it, the 73.78, 78, and then the 85, 86.90. So let me just kind of roll to the next screen. You'll see it. So we took off, we set it up right here, and then it's kept ripping to the upside. It was at 73, so we rolled the spread up more, and then here's where we, took profit. So we had a number of different adjustments. So it went from 68.40. We adjusted on the 22nd. It was trading at 71.90. Had another adjustment on the 1st of June. It was trading at 79.50, and then ended up with our profit on the 3rd. So the original trade here, you can see, was a calendar diagonal long that 29 May, short the 22, 69.73 at a debit cost of 205. This was up about 25 bucks. Just kind of wanted to show you the original trade. And then we did a couple of different adjustments and ended up with this call condor trade, broken wing. So we're long here, ended up with the 73.78 call debit spread, $5 wide. And then we had the credit spread side, the 86.90, $3 wide. So that's what we call a broken wing. So we had the debit spread wider than the credit spread, so that adjusts our risk down. Now we were able to we had so much profit in the trade when we rolled it, we were able to roll down and adjust our trade cost down to only $36 per spread, per spread on the cost, which gave us a potential, since it's a $5 wide spread on the debit side, to make $464 if it goes out in here. That'd be 1,288% return on that. All right. And that's pretty much where it went. So it went out right there, took it off a little bit earlier in the day, and ended up making 465 on the spread Bluetooth, less our cost 36. This was a 429% or $429 per spread if you did one spread, or a return on your capital at risk of $1,192. So these are kind of strategies I love to use, and they're great because they keep your risk low but give you the potential for big returns. And these were, trades that were done, with my alert service. So, what we covered today really only scratched the surface of what's really possible. So if you'd like to go a lot deeper, here's your next step. If you'd like to get into these kind of trades and start learning how to use them, and also making money as you go, then here's what you can do. So you can join my membership to my level 3 right here. Let me give you the link. And hold on one second. Here it is. Let me get that link real quick. Wait a second. Here it is. 1 second. Sorry about this. There we go. So just, you should be able to copy and paste that. That's powercycletrading.com/level 3. Here it is one more time. and put that in level 3. And then what you're going to get here is, my all new kind of community membership that just started. So this is all of what you're going to get for the price of $97 a month. So use that link there, powercycletrading.com/level 3. And with this, you're going to get my, highest level membership to this community, where you're going to have access to all my alerts. Okay, so I have 5 different alerts that I send out. It could be butterflies, calendars, things like that. We'll go through that in a minute. But you'll also have access to my live trading room, chat room, which is open 24/7. You're going to also then have access to my weekly Q&As that I do live and recorded every Tuesday. So have that access. And then what I do is also send out a list every day after the close of based on some scans that I run every day. My breakout reversal trade setups that I'm looking at for the next trading day, or the next couple of days out. These could be long or short trades. I send this out every day after the close, and then I also send out a video of the trades showing why I'm setting those trades up or sending those out. So you get that, as well as my power cycle directional reversal trading indicators. So you'll get that as part of this level 3. You're going to also get the my option course, Get Started Trading Options Today. So this is kind of intermediate option course. You'll get that with this membership, $97, plus my Fibonacci price target mapping course. You'll get that as well. And then what I do is I do a rotating monthly advanced option course every month, that you'll have that as a free access to that. So for this month, we're doing the option strategy guide course that goes through all the different strategies I like to use, the calendars, the butterflies, things like that. And then you'll get anything on my site, you'll get a 50% discount on all indicators in all my trading courses. So a lot that you're going to get, and it's only $97 a month. So that'll be powercycletrading.com/level 3. And go ahead and sign that up. And that's what you'll get. Now let's go through real quick a little bit more on what you will receive. So with this level 3 membership, you'll get my alert trades that I send out. So I have 5 different types that I will send depending on the market, 4 to 10 stocks or ETFs, over the course of the month. We've already done 3 trades this week that I've sent out. So it could be a selective calendar or calendar diagonal trade setup. It could be a selective butterfly or long condor that I just showed you on CRM. Or it could be, what we call pinning trades, where I use butterflies and calendars for that. Or it could be a credit spread or breakout trade for, like a debit spread or credit spread. And then during earnings season, it could be very selective earnings trades. So 5 different types of trades that I could send out for the alerts. So that's what you'll get there. Now, when I send out my alert, a lot of members will do their own things. If it's, an upside trade, they may just go long the shares or calls or puts for a downside move. But I will also always give you a suggested option trade or spread trade that will keep your risk defined with good returns with option spreads. So when I send it out, you'll have the entry level. I give you the profit target levels. Typically, I'll give you 2 to 3 targets, profit target levels on the upside. I'll give you what option series to use with your stop loss guidelines there. And then these trades, I monitor the trades all throughout the day and give you adjustments if needed, for the trade. So here's just kind of, one member, Waleed, who actually lives in Kuwait. This is what he said about the service. He said, Larry, I have to mention one thing. I am subscribed to a lot of services who send out trade alerts. Some are good, others are not that great. But one thing I'd like people on this webinar to know is when I get a trade alert from Larry, I do it blindly, as time has shown me that this man is dead accurate in his recommendations. Thanks for your great service, Waleed. So just to kind of point that out. And then what you're going to get when you sign up, hopefully you'll sign up today, and it's $97 a month. powercycletrading.com/level 3. You're going to get, my advanced course of the month. So currently we're doing this course. So you have access to this course for free. my option directional strategy playbook course. And so this is free for the level 3 members. Now this course is $397, but if you're level 3, if you sign up, you'll get this for free over the next month and a half, basically. So it's a 5-hour recorded on-demand course you'll get, and this goes through, the option Greeks, and then it's going to go through and teach you, how to use calls and puts, vertical debit spreads, butterflies and condors, calendar diagonals, and how to use these trades for hedging. So fantastic course. Kind of my signature course is this course that you're going to get starting out. Now, the other thing that you'll get is you'll have this course that you'll get free with your level 3 membership, and this is $297, but this will be free to you. And this is my Make Money with Options Today course. So this goes through the benefits of using options versus stocks. It goes through the option basics, and it goes through puts and calls, how they're used, how option expiration works, and then it goes through and covers how to do a covered call strategy, how to do a calendar, a protected put strategy, which is the collar, and then the vertical debit spread. So a really great course you'll get here, to start with, and this is a level 3 course. The other thing you'll get with the level 3 membership is my Fibonacci price target mapping course, which is $397. You'll have this for free, as well as for your level 3 membership. And so what this is a course that I put together using Fibonacci plus your moving averages, price action, support, and standard deviation to map out targets upside or downside, that you can use for really, defined targets to trade against. So it's a 3+ hour course that you're going to get. And so that's part of your $97 a month membership there. And then you're going to get my cycle reversal indicator, which is $197. You'll have that included in this level 3 membership. So this is one of my favorite indicators. I've got this. You can have it for Thinkorswim, TradeStation, or TradingView. So it's my cycle reversal indicator that I use for directional moves up or down. And so you can have that as well. So just a lot of great benefits for this membership, and it's something I think that you'll get a lot of mileage out of, and you'll get your return, really quick on it. So hopefully you'll take advantage of this and use that link that I gave you to jump into this level 3 membership. So with this, you're, like I said, you're going to be part of our trading community and part of my forum. So you get this. I've got that live forum that's open to you all throughout the day. I'm in and out of it, and you can talk and chat with other members. Plus, you're going to get all these great benefits. So if you have any questions, let me know. I have a little time left, and I can go through some things with you here. Let me see if there's anything here. Let me back up here. So are all the rolls at a debit or a credit spread? So when we roll the spreads, we'll roll the whole spread. So if we have a debit spread with the credit spread together, making a condor or butterfly, we'll roll the whole spread. All right. So, and I go through exactly how to do that. So you'll understand the trade and everything else. We currently have on one other trade. Let me show you the other trade I've got. Just set this trade up yesterday. This was on Kimberly KMB. So this was a trade I set up yesterday. This is a long call calendar diagonal. All right. So this trade was set up yesterday, looking for an upside move here. I'll show you real quick where this is. Let me pull this up. So this is one that we can really, look for a longer term move. Hopefully we'll get it. So this is one that was set up yesterday, and this was going out and going to the 26 June series, buying the 102 call long and selling against it to tomorrow's expiration, the 12 June 104 call. So this spread was set up for $1.90 or $190 a spread. So it's up about $25 right now. I'm not looking for it to move to 104 tomorrow, but if it did, it would be up over 130. But what we'll do tomorrow is we'll close out the short strike and we'll keep the premium there. That'll adjust down our cost and we'll roll it to the next week because we're long out here. For example, the 26th June, that's where our long dated is 15 days out, and then shorted against it that 12 June 104. So that's how it works. So that's the beauty of it. So we're long out here, 15 days out, short here. We'll close that out, roll the next series, short that, and then keep going. So what I was talking about earlier, you could go out literally to that 21 January 2028 if you wanted to be long that. So if you really think something's going to trend, this is a fantastic strategy. So, these are definitely something that, you need to put on your trading toolbox, for strategies to use. So we'll see where this goes. All right. So thank you so much, everybody. Here's that link one more time. rcycletrading.com/level3.
Thank you very much for that, Larry. It's always a pleasure having you on. I know we haven't had you in a while, and we got to definitely have you back. Let me tell you, you definitely, when it comes to those strategies, you definitely do phenomenal. And we always appreciate you coming on, and enjoy your summer.
Thank you so much. You too, Fausto.
All right.
Catch that big tuna.
Yeah, we're going to try it. I'll let you know.
All right. Bye.
All right. Let me just stop the recording here. And hold on. Let me bring on and share my screen. There we go. All right. So it's been a long day, everybody, and we're up to our last presenter, and I'm really excited. I'm glad you guys stuck around for John Hutchison, because from Trader Reserve, we haven't had him on for a little while, and I think you're gonna really love his style. The first time he came on, I was blown away, because he's probably he's one of the people that I trade very similar as options. So to tell you a little bit about him, he's a lifelong entrepreneur. His first business was delivering newspapers in Syracuse, New York, which I did the same exact thing. So I definitely, when I was a young kid, I remember selling this, doing penny savers and news dates and stuff. He later turned his passion to trading and investing in business, and he co-founded Trader Reserve. Over the last decade, John has built not only a successful company, but he also built a great community. You could tell by you really enjoying what he does, and he comes through in way he teaches his classes and works with his traders with such a passion. One thing I really admired about John and his style of trading, that there are a lot of people who teach options, but one strategy that really stuck with me, like I've said before, is it's one I personally use, and with great success. It's covered call strategy. I remember listening to, like I said, one of his presentations here on the Cyber Trading Expo, and I learned a lot. And simply, the principles, approaches, and how he goes about it just made a lot of sense. It really did. And you know what's crazy? It worked. That's why I really appreciate having him back on. I know he's been a big fan. The audience has been a big fan of having him back. It's not about to make this too complicated. He'll teach you the strategies and how everyday traders, so they can understand what they're actually and how to use it. So whether you're ready to trade options or just stick and learning something new, I think you're really going to enjoy what John has to share. So John, thanks for coming back again and being here, part of Cyber Trading University, and stick around to the end. And everybody, like I said, stick around. I think you're going to have a really good treat and learn a lot.
Thanks, Fausto. It's great to be back. I was here in March, and I have some pretty cool stuff to share. Following along on the presentation I delivered, I'll put my screen up here in just a moment. But I just want to make sure that I'm clear on something. You said you also delivered newspapers. I want to make sure that you weren't the kid across the street who kept throwing snowballs at me in the wintertime.
No, I was throwing. Yeah, if I would have a pretty strong arm. I was on Long Island, so pretty far from Syracuse to New York to Long Island, New York. But I remember those days. I was, it's so funny. I remember when they used to come and drop off. And I don't know what you got paid. I think I got paid like $3 or $7 a week, and had to walk house to house to house. I think it was like 13 years old, 12 years old. And, you had to put these penny savers and put these things together and stuff like that. But, it taught me a lot. It really taught me a lot. And one thing I just like to say, I don't want to cut too much into your time. I think that's something that we lost in today's society, is getting, minimum wage, and kids, they don't know what it's like to work anymore. And it really helped us to be what we are today.
And here I am about to talk about artificial intelligence, which is replacing jobs.
Oh, well.
See,
you got to start somewhere.
But you're right, and I delivered for the Syracuse Post Standard, and I believe I was making about $60 a week when I was 13. And so I was, and I had to hide the money from my mother, which is kind of funny. But it's where you learn that. You're right. That's where you learn that work ethic, but it's also where you learn, or a way to learn money management principles. Yes. And another thing that is not only lost on, as we all fall into the trap of forgetting those types of principles, whether we're trading or investing or even in real life. And I think it's a mechanic of life that gets overlooked too often. But the earlier you learn it, the longer it stays with you through life, whether it's in business, at home, doesn't matter. And that was one of the biggest things that helped me, except delivering newspapers when it was 5 below in Syracuse, New York, which I don't live there anymore, so I don't have to worry about the temperature. Thank goodness. Hello, everybody. My name is John Hutchinson. I'm going to throw you a big curveball. And let me preface my presentation in 2 quick ways. Although I will be talking about artificial intelligence, I am not here to tell you whether you need to believe in artificial intelligence or reject it. I am here to show you how you can leverage what's happening with artificial intelligence to profit from it. In this presentation, I am strictly focused on it actually from a stock side. However, there are a multitude of options tactics which work with these stocks, because in the current market environment, even though the Nasdaq has been and the S&P and the Russell have all been red for the last week, the volume is there, the price action is there, the premium is there, the open interest is there across the board for options traders. My presentation is going to be a little different in the sense that I'm focusing on it from the stock perspective, because 3 months ago, I was here with the CTU Expo in March. And during that expo, I unveiled what I was doing, how I was trading artificial intelligence. And at that point in time, and I believe the date was March 11th, the portfolio that I was running, and still am, was up about 20 points, 20% return in about 10 weeks. Since March 11th, that portfolio's gain has expanded to over 90%. I'm going to show you how. I'll also explain why. In part, I've undoubtedly benefited from surely you've heard the term, parabolic run-up, the massive run from early April through May. But I would ask you to keep this in mind. I've been in these stocks since February. So removing the fortuity or the luck aspect of buying into a massive run in AI stocks, which absolutely took place and I benefited from. But it's the process that I used to identify these stocks in the first place. And that process is not limited to artificial intelligence stocks. I've been using AI because of the factors that I shared with you a moment ago. It's literally where the money is. When Wall Street is bored and they're looking for risk, they gravitate toward AI stocks. To put a counterpoint on that, my portfolio today is up 5.5% total across 13 stocks, 5.5% return in one day. That's how rapidly these stocks move. That's how fast they can recover, even following a significant sell-off. And that's why I say, even if you're an options trader, there are opportunities within a multitude of names in this realm. The whole, is AI good, bad, whatever, doesn't matter. We don't care, because we're investors or traders. We want to know, where is the money and how do we get a slice of it? And that's what I'm here to focus on with you today. In part, one of the things that I want to show you is how I'm doing it. It's not a complicated process. Any investor can use free tools to do or to replicate part of what I'm doing. And I'll show you how as we go through the presentation here. And I'll also close later how you can follow along with me in the AI space in the stocks that I've been trading. And what I'm blending is fundamental investing practices with trading principles, just putting the two of them together. I'm acting like an investor, or thinking like an investor rather, and acting like a trader. And what that gives me is the ability to walk away from a trade, whether I want to walk away with a profit or guard against a larger loss. But it also gives me the permission, so to speak, to let something run. I have 2 stocks in my portfolio running triple-digit gains right now. And I'll share them with you in a little bit. 2 out of 13 positions. And when I say triple digits, 300% gains since February. I'll show you how I found them. And this whole idea is centering around artificial intelligence is because it's still the early innings for artificial intelligence. Sorry, that was a loss. When I started this portfolio at the beginning of the year, I started with 2 portfolios. Mine, a $35,000 portfolio that is set aside specifically to prove what I'm doing and how fast it can work with AI stocks. And at the same time, I had my dad following along with his Roth IRA. And his portfolio is trailing mine only because he doesn't take every stock, which is okay. And he travels, he's retired, so he has other things to do from time to time. But more importantly, what I'll be able to share with you here is how anyone can do this. You don't have to be in the market. You can be, but you don't have to be staring at the screen all day. This is not day trading. This is taking, again, investing principles and using them to our advantage to identify the right stocks to own, and then applying trading principles for when we want to exit those trades. But overall, for the year, a 73% win rate on 44 closed trades, 32 winners. My average winning trade right now is running 36%. My time in trade is running on average about 30 to 32 days. Most of them are running longer right now because I haven't had a good reason to sell, even with the sell-off. So already banked this year over $17,000 in gains. That's closed profit. So the overall return that I shared with you, the 90% return, is not 100% of that being in paper profits. About half of it is banked, and the other half is working for me right now. So to that end, as I said, I'm not day trading. I don't like day trading. It's not my thing. And I'm not swing trading or using a whole bunch of things on the screen. I'm using fundamental analysis at the front end to determine which stocks I want to own. And then I'm using price action as simply, do I want to own it at this price? And do I have enough profit potential if I do choose to own it at this price? So at the moment, I'm not using options, but I have said, many of these stocks are tradable, and institutions are gravitating toward a number of these stocks on the options side, using more institutional approaches, which means that they have both backing in the stock action and in the options market. So there's plenty of work that can be done on either side for somebody who wants to profit from these stocks either way. More importantly, I'm not buy and hold forever. I start with a simple principle and work backward, which is a 1-year target. And that doesn't mean that I will hold it for a year, but it means that that's my first end point. And as each quarter elapses, depending on the company's performance, their earnings estimates, their forward projections, their revenue growth, other factors that are more fundamentally based, I'm making decisions about whether I want to continue holding that stock for another quarter. For 9 of the positions that I'm holding right now, I've been holding them since the middle of February. And I've also traded in and out by adding shares on top and taking them off for short-term gains or short-term profits on top of the position that I'm currently held. So the key is, how do I own the right stocks? How do I know it's the right time to own them? And how do I know when to walk away? Those are always the button pushing questions. And so the entry, the hold, and the exit. And I'll try to give you a little bit more detail on how I'm doing that so that I can hopefully help you. But who am I? Why am I here? John Hutchinson, co-founder of Traders Reserve, along with my partner, David Durham. Our company teaches two core principles. One is selling options for income. And the second is this, investing and trading stocks for capital gains, capital appreciation. We've been working together and helping people for 15 years, since 2010. We reach an audience right now of around 50,000 people. That's our published audience. We have a little over 1,000 members. I've developed an index called the AI2 index, which I'll explain a little bit later on. But this is the mechanism that I developed to help me find the right stocks in the artificial intelligence realm. And the reason is because not all AI stocks are the same. They don't all produce revenue the same. They're not generating revenue from the same kinds of sources. So there's a wide disparity in understanding what's really happening, what's really taking place in artificial intelligence. Most of what you're seeing in the media is dead wrong. And it's hard not to say it that way because you keep seeing every story from AI is a bubble. No, actually it isn't. AI is going to replace workers. No, actually it won't. It's complementary. It's not 100% replacement. It's the end of the world. It's this, that. If you distill AI down to two words and think of it only from these two words, those two words are business transformation. That's what's happening with artificial intelligence. And that's why it's important. And I say that because 4 years ago, I was a skeptic about artificial intelligence. I did not believe in it at all. Excuse me, I saw all the same stories you probably did. Students in high schools using it to cheat or to write papers, lawyers using it to create fake legal briefs, things like the ChatGPT's early stages. And so I looked at AI back in the 22, 23 timeframe, and I'm like, this doesn't have any application. People are just using it to make fake stuff. What changed it for me, though, was two things. First, because I'm a small business and I'm a digital virtual business, I have a very wide network of people who are operating the same. Many of the other publishers, the people that you see and hear through these types of events, we all operate virtual businesses or digital businesses. We're promoting and advertising online. You all know that, so let's just be honest about it. But I also know a wider scope of businesses in different markets, in health, in coaching, in personal fitness, physical fitness, whatever. And what I started to hear from them through people that I know and other things that I attend was how they were using it to change the way that they operate their business. From anything from data analysis to writing content, developing a business plan or marketing plans, et cetera, creating advertisements, creating presentations. The early stage, this is about a year ago, the early stage started to fall away from me, and I started to see what I mean by a business transformation. And as artificial intelligence has accelerated in both adoption rates and capabilities, that transformation is accelerating today. And it will continue to accelerate in the next several years. And that's why I've made it the centerpiece of what I'm doing. I started this project around investing in AI stocks last year. It is my core focus, but as I said a little bit ago, the process that I use can be used on any company. I'm only focused on AI stocks because I believe this is where the fastest growth path is for stocks, at least in the next 1 to 2 years. Maybe longer, but we'll see what happens over those next couple of years. So two things rather that I'll push back on. Number one, you'll hear AI is a bubble, or the comparisons to the .com era. I can't convince anybody. I'm not here to do that, but I will tell you flat out, AI is not a bubble. When you look at forward growth and actual valuations, actual price to earnings into the future, many of these stocks are deeply undervalued. Wall Street is using old school cyclical metrics to price many of these stocks. A good example is Micron, stock symbol MU, the number 2 memory chip provider in the world, behind SK Hynix, which is a Korean company. and just ahead of Samsung, which is actually, I think Samsung is still on their 18-day vacation or strike, whichever you prefer to call it. But Micron is number 2, and they trade for a forward price to earnings ratio of less than 10 times earnings. That is not a bubble. That is not overvalued. That is seriously undervalued. And it is because the Wall Street analysts keep applying old semiconductor or memory chip cycles to companies like Micron, to other companies like SanDisk even. Take any of the semiconductor companies that are out there, even to a degree, AMD, Advanced Micro Devices, undervalued. So what's happening is, in part, beyond the business transformation, is even Wall Street is starting to understand that the way that they have been looking at artificial intelligence isn't correct, or wasn't correct, rather. And then they expanded their expectations to unsustainable or unrealistic levels. And here we are with many stocks like Broadcom, Ciena, both printing in the most recent quarter over the last 10 days, outstanding revenue, outstanding earnings, forward guidance that guides the companies higher, and yet stocks are getting beaten down with 10, 15, 20% moves. So recognize that the bubble isn't in these stocks, it's in Wall Street's expectations. And if you can unlock the companies where Wall Street is missing on those expectations, and you can identify which companies are best to own and give you real opportunities to find companies like I have. Micron, for me, I've owned it since last November. That stock is currently up 300% since our entry on that stock. Another company, Max Linear, stock symbol MXL, which we bought in February for $19. It's now trading at nearly $80. So there are significant moves that are available in these stocks because the companies in this realm are killing it. But a very narrow slice, and I'll show you that slice in just a couple of slides. But I just want to close off one last point. Is Wall Street and the media can't make up their mind about artificial intelligence. They keep coming out with headlines or stories that sort of cancel each other out. So, for example, if you say 95% of firms see a return on AI, then that doesn't explain other stories that say AI is finally delivering on its hype, or that adoption is rare, and yet back in the beginning of February, when Claude announced Claude Code, that AI was going to wipe out the SaaS industry. It didn't, it hasn't, it won't. But those two statements can't both be true. And this is what keeps happening. Every time you see AI stocks go down, it's usually related to a headline that didn't get the story right. And that's why I stress the way that I think about it is on the right side. I'm worried about who gets paid no matter which AI platform or model wins. I don't care about Anthropic, ChatGPT, Perplexity, Cursor, name of the day. I'm worried about who's making the money from artificial intelligence right now. And is it real revenue? And can I track it? Can I calculate? Can I fundamentally assess it? And is the stock priced correctly or incorrectly by Wall Street today? That is, in a nutshell, the process that I'm using. And I don't have to guess. I can narrow things down to simple numbers. To that end, as I said, there's a narrow slice of winners that exists right now, and that is in the AI supply chain. That is, think of the hyperscalers, your Google, Amazon, Microsoft, and Meta, building out their data centers when they can. It's everything that goes into the data center. That's where I've been focusing for the last 6 months, is the AI supply chain. That's semiconductors, GPUs, CPUs, servers, optical connectors, both copper and direct access. Optical and direct access copper. The optical market has been on fire for months. That's Corning, Ciena, Coherent, Lumentum, stocks, AAOI, Applied. They have a weird one, Applied Optoelectronics, all up triple digits this year. That supply chain is doing a couple of things here. One is they're the ones that are printing the money. The data center could be construed as the bubble. The data center in and of itself could be construed as the dot-com comparable. But the things that go into it cannot, because they're sold, they're physical. So that's why I've been focusing on the supply chain. When I look at companies like Micron, their memory, their high bandwidth memory, HBM4 is sold out for 2026, sold out for 2027, sold out into the early stages of 2028. All of the optical that I named, your Lumentums, Coherent, Corning, Sienna, sold out this year, sold out next year, sold out into 2028. You can't get the things that they produce. That is demand outstripping supply. And at some point, supply has to catch up to that demand. But when you look too at companies like AMD, even to a degree, Broadcom, they too are suffering under the weight of supply issues. They can't get to their customers what they need to get there. So that slows down a little bit the rate of growth today, but at some point in the future, it will accelerate. And as artificial intelligence continues to gain traction within the business community, as it is doing, all of these components will continue to change and evolve. So what is high bandwidth memory 4 or 4E today will eventually become HBM5 or HBM6. Semiconductor chips shipping today will not be the same chips that ship a couple of years from now. Seagate Technologies CEO was on CNBC just a couple of weeks ago and was asked specifically whether or not they would be building out new factories to meet demand. And he said no. And the reason was because the storage chips and wafers and products that they would build today won't be of any value in 2 years. So by the time they even get a factory up and running, the factory would be obsolete. So the entire AI supply chain is strained. It is sold out by and large, but these companies are still riding trends and will continue to as we get through the next 1 to 2 quarters and as their fiscal years begin to turn around into 2027 fiscal year. You're going to see many of these companies continue the significant moves that they've made this year into and through the next 6 to 12 months. And I know that because of the math that I do. Now, the other areas, AI Core, AI Frontier, those are also 2 very strong areas. AI Frontier is where I put, for example, defense AI. That's drones or other defense products which use artificial intelligence. AeroVironment, Paladine, Palantir even, the companies that are leveraging artificial intelligence for specific defense contracts. That is a growth industry. That is a growth industry that will extend into 2028 to 2030, so 3 to 5 years from now. On the Frontier side as well, we all know tomorrow is the big SpaceX IPO. SpaceX is also the parent, so to speak, to XAI. That is Elon Musk's version of ChatGPT. That is inevitably going to have to go into my index. It'll become part of my AI Frontier, a stock that I will track. I don't know that I'm not going to buy it at the IPO. I'm not on the list, so to speak. I didn't get the gold rope list for that one. But nevertheless, though companies like SpaceX and others like them in the entirety of the space area are using artificial intelligence or supporting AI as they start to work on how to put data centers in space, which is really weird, but it's coming. The AI core are your foundation chips like NVIDIA or Dell companies like Dell which provide the servers. So I've broken out into these different economies based on what they're providing. And the strength right now in artificial intelligence, as I said, is in supply chain. It's also in AI core. It is also in AI frontier. The weakest sectors are the companies that you would think of them as service providers, right? They would sit in between a product and a customer and translate that product into the use for the customer. Those are the companies like SaaS providers, CRM, Intuit, which owns MailChimp and their tax software. Other company, Braze, marketing platform, other companies like that. They are building in AI tools into their platforms as a mechanism of defense to protect and hold on to their customers. Now, they're not there yet, but that's because many of these models are just now catching up to their capabilities. But these are two areas of AI that have been the worst performing for the year, AI-powered industries and AI solutions, but have long-term potential as companies decide that they don't want to invest in a huge platform or server set or self-located data center. Instead, they'll farm it out, they'll contract it out, they'll use a third party to bring artificial intelligence into their business. So those companies have a longer timeline. Companies that I like in that space are companies like Nebius Systems. That's NBIS. That's a company that has a longer ramp to profitability, but they are essentially creating AI as a service. Company like Penguin Solutions, stock symbol PENG, a company that I really liked last year. They had a really poor earnings quarter. They were in the process of rebuilding their entire business in the AI realm, and over the last couple of quarters, that stock has zoomed. I haven't checked on it in the last 10, 15 days. But the stock had more than doubled in just 2 quarters. So that's how rapidly Wall Street will reprice many of these stocks when they see where the revenue is, that the revenue is growing faster than they projected, that the earnings are growing faster than they projected. Wall Street is moving these prices up substantially higher and faster. So the little edge that I carved out for myself is getting to these stocks before Wall Street reprices them. And even when Wall Street has repriced them, it doesn't mean it's the end of the line or the end of the road. Micron, for example, may be trading around $900 today, but it's still significantly undervalued based on future earnings expectations. Their current price targets from Wall Street are ranging from $1,700 to $2,000 per share for a stock that's still only trading at $900. I say only 900, but is trading at 900. And I realize many of these stocks look expensive today. So one of the really unusual approaches that I take is this. I don't own a lot of shares of many of these stocks. When I started out with a $35,000 portfolio, part of my approach was to prove that you don't have to own 100 shares or 500 shares or 1,000 shares. I've owned as few as 2 shares, 3 shares, 5 shares, 7 shares, and done extremely well given the overall rate return. It's finding the right stock, putting the right amount of capital to work, generating the return on that capital that it exponentially grows your portfolio or your money. That's the process that I've been using. And the steps here, one is building my own target from all known data. That's earnings, revenue, all of the fundamental data that I can get on a company and translating that into a price projection, not a prediction, but a projection. And it means that if the company continues to operate and perform at the level that they are saying that they will, this is where this price should land. So for a company like Lumentum right now, I have a $1,250 price target, even though the stock is trading just under $900. Another stock at $900. But I only own 3 shares. So I don't have all of my money or heavy amounts of my money invested in one stock. I'm able to spread my risk intelligently across a basket of stocks. As I said, I hold 13 stocks at present and let Wall Street do the pricing work for me. And the way that I find that is by looking at that price projection and then looking at where the stock is today and determining what that percentage gap is. And that's what I'm targeting. That's how I'm targeting the companies that I'm buying. That gap doesn't have to be hundreds of points or percents. It can be 30 or 40%, because oftentimes what happens is Wall Street will bid past my price projections. I'll show you an example of that in just a minute. And then the key is getting to these stocks before Wall Street. Even if I don't get the lowest price of the week, the day, the month, the quarter, I'm less worried about that, because what I want is the next week, month, quarter, and the appreciation that comes with holding the stock through that period. So take a look at this as a way to step back. A lot of numbers on the screen, but I'll keep this really simple. We're only going to focus on this. STM, down here in the middle. Their earnings are growing at 98%, but I can buy those earnings 38% cheaper today based on their current price. That is the idea behind buying growth at a discount. I'm buying a stock whose earnings are expected to nearly double, and I'm getting better than a third off the price for those future earnings. That's the process. Same thing with AMD. Today's price is trading at 54 times current earnings, the current year earnings, but only 36 times its future earnings. So if I'm buying AMD today, I'm getting a discount on this earnings set. I'm spending less money to buy faster growing companies. Same thing with Avgo, 68% growth across my portfolio. The average, the 13 stocks that I hold have an average of 72% earnings growth. And if at current prices, I would be buying them 23% less than what those companies would be worth at those future prices. So if it's simply a matter of knowing a couple of things. What is the company's current earnings for this year? I'll even just do a quick math here. So call it current year earnings, next year earnings. And once I know the difference between the two, with next year's when next year's earnings are higher than the current year, I can build a little ratio. It's just basic math, just division. And it tells me if the stock is trading at a premium or at a negative, at a discount to the current price. I'll show you an example of it in just a minute, as long as we have time. I realize I'm bringing up the caboose and everybody's had a long day. So I'll try to keep us on time here. But I want to show you what Wall Street actually does, and why I call it Wall Street pulling the price forward. When I find a stock that's undervalued into the future, it might be 1 or 2 years into the future, and I'm spending less money to buy those earnings today than it would cost me 1 or 2 years from now. What I typically see is Wall Street will pull that price projection forward faster and sooner. So for example, on stocks like AMD, STM, so that's ST Microelectronics, Broadcom, stock symbol Avgo, if I just sat on these stocks, then a year from now, the price would have to rise 50% for AMD, 60% for STM, and 25% for Broadcom for the stock to have its same value from today to a year from now. That's a significant value appreciation or gain potential. And that's the metric that I'm looking at. A 25% gain, that's fine. But what I know is Wall Street's not going to wait a year for that 60%. If this is a year from now and this is today, Wall Street's going to say, nope, we want that money today, right here, right now, and they will pull that price forward. That is how you sometimes get and do get parabolic moves like we've seen recently. Micron, a great example, being repriced substantially. So here's an example. Last year in September, when I first started this project on investing in AI stocks, I held a webinar not unlike this one. And in that webinar, I identified 3 stocks: Micron, AAOI, which is Applied Optoelectronics, and a little company called Amprius, AMPX. They're a battery. They are a silicone battery maker for defense drone industry. And they're moving into the artificial intelligence realm in other ways as well, but they were originally aligned in the defense area. So when I ran that webinar, I said, here's Micron, September of 2025, trading at $169 per share. My 2-year projection for Micron was $841, using the same process that I'll walk you through in just a minute. This is the example of Wall Street pulling the price forward. And the stock has been as high as over $1,100 a share. So it actually blew through my projection substantially. And that's because Micron's earnings are expected to grow substantially, rapidly, quarter to quarter, this year and next year. So Wall Street has to reprice these companies. And this explains why Micron is still trading at a 9.5 times forward price to earnings ratio. Even Applied Optoelectronics at that time last year, it was trading at 29. My projection was 96. The stock is well above my projection. They are in the optical market, one of the markets that absolutely blew up between November, in a good way, exploded higher. There's no good word to blew up, exploded, doesn't matter. jump the shark if you prefer. But from November through April of this year, the whole optical complex, all of those stocks up 2, 3, 400% in that time frame. Now they're all sold out. So now those stocks will continue to grow. Amprius was on pace. The stock had a year-to-date high of 24. So at one point it was up 100%, but was not near my 2-year projection. So it's okay. I can be wrong occasionally. I don't have to be 100% right, but I am still up on this stock from last year, or from earlier this year, excuse me. We bought in at $11, so we're up about $5, $6 per share. So it's still moving higher, just not at the same rate and not at the same pace as the other two stocks. But that's how the concept of Wall Street repricing can work. And this year alone, this is a snapshot of 16 positions, which have all been closed at double-digit gains. My largest position, Silicon Motion, that's SEMO, a 121% gain following earnings. That's also one of the companies that my dad didn't buy. I told you my dad is running a portfolio based on the trading that I'm doing. And the only reason was because Silicon Motion, which is a foreign company, they're based out of Taiwan. You have to call your broker. And my dad said, I'm not going to call my broker just to buy shares in that company. After seeing the returns, he said, next time I'll call my broker. So there you go, a little insight into my dad. But anyway, he has cherry picked. He's made his own decisions, and his portfolio is still up 50%, following the mechanism and the methodology that I'm using here. But really, ranging from 30 to 100% gains is based on the process that I'm using. Even though tech stocks have come in, there are still concerns, whether it's macroeconomic, whether it's the war in Iran, whether it's oil prices, inflation, Fed rate hikes. These stocks are resilient. They keep coming back. And it is because it is the only place that Wall Street can find appreciable risk for their money. That is the underlying reason why these stocks keep bouncing back so fast. So let me see if that's a good place. Yeah, I'll break here for 1 second. Let me take you out. We'll do a little bit of math, and it's getting even better. Let me take a quick second. We'll swap something out here. So here's the current portfolio for the day, now up 6.5%. So even higher than what I told you just a couple minutes ago. I used that just to FinViz Elite just to keep a quick track on things. But let's go to finance.yahoo.com. I'm going to stick in Micron and show you the free way to replicate similarly what I do. Go to, so here's Micron, good old Yahoo. If you go to the tab on the right-hand side, oh my goodness, it's a long day, isn't it? On the left-hand side, it says analysis. We can see forward earnings. Now, for my purposes, I'm looking out 5 years. So I'm showing you the shortcut because Yahoo only prints 2 years forward earnings estimates, earnings and revenue estimates. So we have the current year here and next year here. And what I'm looking at are the average. We'll take earnings estimates here. There's the average. That is nearly doubling their earnings from this year to next year. That is literally 118.64 would be a true double. They're at 109 for next year. That's the average estimate. Look at the high estimate, 153. Low estimate, those are sell-side analysts. They'll be wrong. But what I do is, the first step that I do is I say, okay, so I'm going to take 109, just round it off, 109, and divide it by 59. This number is upside down. Hold on 1 second. I just need my calculator to work correctly. Nine. Thank you. Divided by 59 minus 1. So what's happening here is I need the PE ratios too. I do. It's 180. It's an 84% difference. That's what I was trying to calculate, what the actual difference here is. So this is 84% growth year over year. So let's hold on to that for 1 second. The next thing I'm going to look at is the I want the PE, but I don't think they don't give me the forward, so I have to calculate it. So current price today, 986, so up a little bit more from my chart. So 986 divided by 109. So yeah, 9.05 forward price to earnings ratio for Micron. So what I will normally do is take that forward price to earnings ratio, and because it's usually a conservative number, it's usually a lower number. And then if I had 2028 earnings, right, the next year over here, I multiply it by that PE ratio. And that's what gives me up to a 2 full fiscal year, right? Calendar is different, but fiscal year here and fiscal year from that one, 2027 to the next, as a way to say, where should the price be? And when I look at, even if I take the current PE ratio and apply it, which is not big, I think it's 12. This says TTM 46, but let's go back and calc the actual, which is 59 divided by 96, 5, so 6. So the current price, current year earnings are trading at 6 times forward earnings. This is 6x. This is 9x. That's cheap. And so even if I take this 109 and multiplied it by 6, I'm going to get a range somewhere between $600 and $900, which is where the stock is priced right now. But if I went out another year, I would be able to see what the next earnings estimates are, and then I could add on that next price layer. So what this is telling me is Micron's not done. It is still growing. I actually keep track of everything that they do in a little index. So I'll show you the way that I'm doing it here. 1 second. I just wanted to show you the free and simple way to take a look at what's happening with Micron. And okay, so their fiscal year out is actually expected to be lower than. And in part, that's the cyclical nature. Again, this is Wall Street honestly being lazy. So this is what I track. This is at my AI2 index. I'm looking out, this is current year 5892, which is a little bit below what Yahoo has, but that's okay. I have 102. And then this is the outlier year. Earnings expected to potentially decline. But even so, I can see, look at the PE ratios. It's still low. 11 times forward price to earnings. And so what I'm looking at right now is a price target somewhere between 1,100 and 1,300. There are higher price targets, but I tend to be conservative. But this is the mechanism that I'm using to pick my stocks first and foremost. And I got to stop the pen. And then putting them in a portfolio so that I can then track and trade them. So let's finish up here. One of the other things that I do frequently is one, my own members hear me say it. I get mad when Wall Street comes out with says stupid stuff about AI that isn't correct. So in March, after I had been here in March, at the end of the month, as the whole Iran war and oil and gas, inflation, blah, blah, blah was happening, I'm looking at the prices on a number of the stocks that I held, and I said simply one thing: these are too low. There's no justification given the fundamentals behind these companies for why they're priced this way. And so I backed up and bought up stock in Lumentum. I added shares to Lumentum. I added shares to Silicon Motion, Ciena, Amprius. And then even at the end of April, I added 6 names in one day. And then in May, I took all of those gains off the table. So I was able to use these names to create a core position and then trade around it. And here's an example. In April, Wall Street Journal came out with an article essentially saying OpenAI is bankrupt. It's hyperbole on my part, but that OpenAI is ChatGPT is never going to meet its commitments in the market. So the whole AI complex sold off in one day. And I looked at the headline, and it's number one, there are a vast number of companies that we hold in our portfolio that have no exposure to OpenAI. So they wouldn't be affected by anything that happens at OpenAI. AMD was the only company that did have exposure, but these are the 6 stocks that I've added. I added on MaxLinear, AMD, Lumentum, Coherent, Ciena, Marvell, and then I banked As soon as I banked gains, I took them off the table. But underneath all of this, I maintained core positions in Sienna, in Coherent, in Lumentum, in AMD, and Max Linear. So I still have a base positioning here in each of those stocks. But when I see an opportunity to add to them, that's all I'm doing. I might add 3, 5, 10, 20 shares. And then when I have a reasonable gain, take that off because the underlying position that I hold is still growing. And that allows me to keep adding to the growth in my positions. So here are 3 of my triples, 1, 2, 3, over a 100% gain on AMD, a nearly 300% gain on Micron, a 300% gain on Max Linear. And Max Linear was a great story, multiplicative gamma squeeze ahead of and after their last earnings report. The stock moved up 75% in one day. Why? Because options dealers had no options above the 40 strike on the day that the stock reported earnings, beat earnings, guided higher. So we were the beneficiary of being in the right stock at the right time as the stock moved from $35 to over $70 in one single day. And we owned it. We've been in it since early February, so we've held on and continue to hold on. But like I said, it's not buy and hold forever. So I'm looking at a price target. If I can get, continue to get a move, I'm going to continue to profit on that stock. So the core that I hold right now, 10 to 15 names. I keep it simple. I don't want to be managing a portfolio all day, every day. Around that core, I will trade additional shares or additional 1 or 2 stocks, and usually for short-term or momentum gains. But I let that core keep working. If it's working, don't break it. And that is what I've done with the portfolio that you saw that was up 6.5% so far today. And in really desperate times, one of the reasons that I can hold through steep corrections, even if it doesn't hit 10% or go into bear market, one of the reasons that I can hold is because, one, I've paid less for next year's earnings than Wall Street. I've bought stocks that have higher earnings growth rate, and my PEG ratio on these stocks suggests that they're just at the front edges of their potential growth. So that's why I kept holding on, even as the stocks reversed a little bit in May, a little bit here in June. A scary down week doesn't worry me because you're not going to get a PEG ratio. My actual PEG ratio based on my cost basis on Micron is 0.03. So it's even lower than this number here. But what this tells me is I have deep value, that these companies are going to continue to grow. I have a company that's cheap based on its growth rate. I have a company that might be fairly priced, but it's not yet overvalued. And if any metric changes, it will positively impact this price to growth ratio. But most importantly, the biggest last reason is right here. In both current fiscal year and the next fiscal year, every stock I hold, almost every stock, only one stock doesn't qualify, but every other stock that I hold has forward estimates, that's earnings estimates from analysts, being raised, not lowered, at a 10-to-1 ratio. So for this year alone, it's 200 earnings estimates up and only 20 down. That is a significant tell that analysts are expecting more earnings growth from the companies that I'm holding. That tells me I need to continue to hold, number one, but it also tells me I own the right stocks. And that gives me further validation in continuing to hold even through difficult periods. And I'll be blunt and honest with you. In the last 10 days in the market, our unrealized gains dropped by nearly 50%. But they've stabilized and they're starting to build back up again. I went through the same process in March. We had most of the stocks were in my portfolio in March, and our portfolio in March went like this, literally like this, from 0 to plus 12%, down to minus 4%, back to 12%, down to minus 2%. And then April happened, May happened, and now overall I'm sitting at 90% because I bought the right stocks and because there's a fundamental understanding of what's happening in artificial intelligence that's being missed by most of the people in Wall Street and in the media. So typical investors aren't getting the best information in that respect. As I said, with my dad, he's been following the same trades, making the same trades. He gets the trades at the same time that my subscribers do. He doesn't get them in advance. So he's making his own decisions. His portfolio is up over 50% for the year. And just last month, he added another 100,000 on top because he's seen the impact and the effect. And we're doing more with that. So you can cherry pick and still do exceptionally well because the fundamentals are leading the price action because Wall Street hasn't caught up yet. So if we stay ahead, that is how we stay ahead. So for those of you who are investors and or traders, you're looking for stocks where's the opportunity and how can someone help me find that opportunity quickly? Give you the access to our AI2 Insiders 90-day pass, a way to work with us and look over what I'm doing, my shoulder as I'm doing it. Every move I make, every stock I like, once a week we meet every Monday at 4 p.m. You see my live watch list, the portfolio decisions that I'm making, the money management decisions that I'm making, everything in very easy to follow and simple instructions. So how do I find these stocks? How do I do the math? The math is done for you, actually. So I made it a little easier through the fundamental analysis part. But this is for investors who want to take even a slice of their portfolio. Right? Remember, I started with 35,000 at the beginning of the year. My dad started with 50,000. Both portfolios are up. You don't have to be all in, even if you have a very small portfolio. Buy one or two stocks. The hardest lesson to pass on is this. It's not the number of shares you own. It's the amount of capital you put up against the stock and how fast or how rapidly that capital appreciates. That is our core focus is the return on capital, not the number of shares that we own. Like I said, a stock like Lumentum, I've owned 3 shares. I've held on to 3 shares since the early part of May. I sold 4. I kept 3. Those 3 are still producing a return over 40%. So why sell them when I have another $300 per share? If I get another $300 per share increase, that's another, $900 in capital gains for me. So that's why don't be afraid of just buying 1 or 2 or 5 shares. I think everybody is so trained to like the 100 share thing that this is money management inside of a portfolio that is focused on the appreciation of capital. I can have a stock that's 28% in the red and I'm not going to freak out about it because the rest of the portfolio will buy me time for that stock to recover. True story, because it's happening right now. I have one stock that's down 25, 26%. It'll recover. When I was here in March, during the CTU Expo, more than half of my positions were in the red. More than half were in the red with losses that were paper losses, but losses that were between -2% and -23%. And all of those stocks came back to be profitable. And that's, again, Wall Street, when they're hunting for risk, they're hunting for the stocks that I own. Or I own the stocks that they're hunting for. Take your pick. You can say it either way. But here's what I'm doing inside of the AI2 Insiders. Real-time buy and sell alerts. Simple, easy to follow. I tell you how many shares I'm buying. You can model it based on what I'm doing. I give you the full AI2 portfolio so you know every position that's in there, how many shares are held, when the stock was added. Each Monday, when I hold our weekly live briefing at 4 p.m., I also leave time at the very end for new members to walk through which positions could you consider adding if you're not in this portfolio yet, so that you have a way to enter stocks, even if the portfolio has stocks that have been in it for 4, 5, 6, 7 months. There are still entry points. Are you going to get my price of 227 on Micron? Nope, probably not. But is Micron still a stock that you can enter? Potentially, yes, it is. But I'll help you find a better price than paying top dollar. Each week, at the end of each week, I provide a report, an analysis of everything that's happened within the portfolio, what's affecting any of our stocks, earnings analysis, which I do relentlessly because it informs my forward price projections, my fundamental analysis. You get full access to my AI2 index. So for do-it-yourselfers, if you're looking for other stocks that you can trade, remember you can trade stock, buy the stock, or you can hunt for opportunities in these stocks as well. The full index right now is 366 stocks. And I include the fundamentals, the valuation, the forward price projections, everything so that you can easily locate stocks that you may want to keep track of. And I also run a weekly technical watch list with entry, exit, and stop recommendations, suggestions, call them. But that's for people who want to take trades and do them on their own. I don't track them. I'm not trading them. I'm 100% focused on my portfolio, but I know people always love to have new names and new ideas. And so I take and apply some basic technical analysis to our stocks on a weekly basis and update that watch list every week for my members. For those of you attending here, a 90-day, call it a test drive if you like, $297. That gives you enough time to be able to get into several of the stocks, or as I add new positions, be able to take advantage of new stocks that I'm adding to our portfolio, whether it's short or long term, and be able to build up a little bit of momentum over a 3-month period. If I thought about a month, but a month doesn't make sense. 3 months at least gives you a chance to be in and have the ability to generate gains from what we're doing. I see that they have put the link into our full page for you there. So give me just a second and let me pull back to a couple of questions. Tonight, shut down power plants. Canadians. Okay, great. Looks like we're in pretty good shape. So, and I've got 60 seconds to spare, Fausto. So thanks for having me along. Happy to be back in your next one, and need to return the favor and have you come talk to our people on some day trading principles.
Well, thanks a lot, John. And you know what? Everybody learned something. Like I said, I learned a lot from you, even this whole AI stuff. As you were talking, markets were doing great. So I went long a couple of stocks that you were mentioning. So thanks for the advice. And guys, take him up on his offer. It's not a lot of money. It's the cheapest money you can ever spend. And you know what? Like that's how we learn. A little here, a little there. And thanks for giving such a great deal. So John, thanks a lot. And yeah, I'll reach out to you and see. Love to talk to your audience and teach them how to day trade, because you know what happens over the course of the day, which trickles into these swing trades.
Absolutely. Thanks, everybody. I hope everyone has a great week and enjoy your weekend.
You too. So before we go, everybody, I would just like to finish off. Let me just take over the screen really quick before everyone logs out. I got a couple of promotions I just want to go through with everybody and tell you what's going on in the market. Just give me a second right here, everybody. Let me just bring this up and share what's going on. So we happen to get a little bit of a rally in the market. A lot of the stocks that we've been watching, no matter what you bought in the market, everything went up. Okay, everything just went up. So kind of went long a couple of the brand name stocks like NVIDIA. I went long. I bought some more coin, the MSTR. I try to stay. Basically, the goal is what you try to do is, you try to buy things that got really, really, really beat up, and they make a comeback. And the reason why I like the NVIDIA trade, just to let you know, is that NVIDIA had a lot of support levels around 200. And you could see right here, when it hit around that 200, the thing ran about $5. So that one did really, really well right there. So a lot of good action in the market. A couple other things I do want to make a couple of announcements. If you have not done already, hold on one second. Let me just bring this up right quick. CTU.co. Just going to go to Cybertrade University website. So everything's been recorded. You'll be able to listen to all the speakers. And if you're from Canada, I wanted you to have one last shot. This ends at the end of the month. If you want to get in the $1 million traders competition, and if you do sign up with us, you will receive 1 month free Cyber Group subscription, which is a $200 value. We'll teach you how to trade. You'll get some of the workshops with it, listen, our traders have won other competitions in the past. So if you want to be competitive and you want to win that $1 million, we teamed up with Mumu and Nasdaq on this competition. Please click on that link I just posted. And also here at Cybertrade University, if you would like to join our trading floor, and hopefully you had a chance to read all our Google reviews and everything, but sign up for our $9 trial right here, where you get to have our training classes, our workshops, everything for $9. And you're going to get everything that we teach at Cybertrade University, access to our floor, access to our classes, everything. Whenever you're ready to get started for $9, you know what I'm saying? You can start on Monday, you can start tomorrow, but you got to learn before you can earn. All right. So guys, thanks for listening. Thanks for being here, and hope to see everybody in the Cyber Group room, and enjoy those recordings. Enjoy your weekend. Thanks for listening. And don't forget, $1 Million Traders competition. Make sure you register for that too. Have a great day, everybody.